DOJ or other authorities
could face bigger challenges next.
It was going to keep winning World Cup. This is a three as the economic picture. Covering the intersections of Hollywood, Silicon Valley.
South Korean President Yoon Suk-yeol is facing intense pressure to step down, with public anger mounting after he managed to avoid impeachment over the weekend. Of course, we'll be looking forward to the market opens here in South Korea to see how the Korean won and the Kospi react. But Bloomberg's Sang-Mi Cha joins me now for more on this. And let's really recap a little bit of what happened over the weekend, because I was with Yoon against the impeachment, with protesters against President Yoon at the National Assembly, 100,000 or so. And I know that you were with Yoon supporters in Gwanghwamun, and there was a lot of confusion. Walk us through exactly what happened and what happens next, I guess.
Yeah, so like going back to Saturday, which already feels like forever ago for now. Yeah, I remember he first made his appearance on television, and in his 2-minute apology, he said he will accept any legal and political responsibility, and then started the waiting game until 5 p.m. when the impeachment vote was, right? But that's exactly the time when all these protesters were rallying in Yeouido Island and in Gwanghwamun. I was in Gwanghwamun with most of the folks in their 70s or 80s, and these are people who actually are like for the President Yoon, and they are against the impeachment because they just don't believe that another impeachment is something to relive, because they've already experienced that once.
Given that we saw that in 2016 with Park Geun-hye, right? And what happened afterwards was just chaotic. But even now, having President Yoon escaped impeachment narrowly because the ruling party blocked it, it's unclear what happens next.
It's for the People Power Party, the ruling party, and the Democratic Party, which is the main opposition. So we remember what happened was the impeachment motion. In order to pass that, we needed that 2/3 majority of the 300 member. And what we lacked was that 8 defection from the ruling party. And so now the DP, the Democratic Party, has to convince some of these ruling party members to actually come and vote for that impeachment once again. And so we'll have to take a look at what happens this week. Nothing is actually for certain. Right now, the Prime Minister will be running the state affairs according to the ruling party leader, but it is still unclear.
Yeah, which the opposition has called essentially a coup if that were to continue happening from now on. But what this means is just, I guess, more uncertainty politically. And for the market, what should we be expecting in about half an hour or so from now?
Yeah, Korea's equities benchmark Kospi is already one of the worst performing gauges in the world. It's lost about 9% this year. And since the short-lived martial law, we've seen the gauge drop 3%, close to 3%. The Korean won also plunged on Tuesday, and then it regained ground a little bit, but then it's dropped again on Friday when there was rumors that there will be another martial law. So traders are kind of reassessing this position now. Is this going to be prolonged stalemate? If so, it's political instability is just not good for any of the markets. So, and a lot of the traders are saying that this will be different in different sectors. So, for example, the exporting companies will rebound. It's not all that bad news, though. Kospi, some of the traders say, will actually rebound late December when investors try to segregate market news from politics.
Bloomberg's Sang-Mi Cha, great job out there, and thank you so much for that update. And of course, we'll bring you the market open in about 35 minutes from now. More ahead on the Asia Trade. This is Bloomberg.
why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells. We can edit the genome. We can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Take a look at what we're watching when it comes to havens, as well as, of course, key oil prices as we continue to watch the uncertainty across the Middle East. We had Saudi Arabia cutting those oil prices, but of course the Assad regime toppled in Syria, really sending shockwaves through its neighbors as well. New York crude holding up pretty well there, just above $67 a barrel. We're seeing gold futures a bit flat at the moment. We could see a little bit more when it comes to the impact on from China, but of course US jobs data referring a Fed rate cut there for December, and the dollar seeing a little bit of strength. This is Bloomberg.
Ways on the heartbeat of the tech
spread across global markets.
Real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
The fact that the unemployment rate went up means that the Fed will be comfortable cutting by 25 basis points, means that the market will increase the probability of this happening.
This is kind of number that will support the Fed cutting rates in December. I think that, looking for, 2 or 3 more cuts in the coming year, I think is completely reasonable.
We have had growth that continues to surprise on the upside. It looks like the momentum in the back half of this year, setting us up for next year, has been quite strong.
We're going to pivot to this, pause, skip debate and what kind of message that means. But the big debate is over the degree to which cuts have to take place in 2025.
I guess they're reacting to the US jobs report. We do have some breaking news as we continue to monitor geopolitical developments in the Middle East. The AFP reporting that the UN Security Council is set to hold an emergency meeting on Monday on Syria as we continue to sort of mull what has been a dramatic couple of days of developments for Syria, with President Bashar al-Assad toppled after rebel troops captured Damascus after what has been a tremendous amount of progress being made by those groups over the past few days, really putting it to an end to a regime which came to power in the year 2000. So we continue to watch that because a lot of concerns about the potential power vacuum, the messiness of any kind of transition, and of course the US and other allies calling for a peaceful transition as we continue to work out what the next steps are for Syria. In the meantime, we're also seeing markets reacting to Fed expectations, with these spurred expectations that more easing will come before the end of the year. The US employers situation, they're picking up hiring, adding 227,000 jobs in November, an uptick in unemployment, and a higher than expected wage growth as well. So this is kind of the latest snapshot of the labor market, and it could nudge the Fed towards lowering rates later this month. Investors are also waiting for a key inflation print before policymakers meet next week. So markets on that are really, at the moment, betting on a roughly 90% chance of a rate cut. Joining us now is Tian Wang, who's the Chief Asia Pacific Economist at Vanguard Group. So the expectations are we get something before the end of the year, but going into next year, of course, the outlook with the sort of fiscal, trade, immigration side looks a whole lot less certain.
Yeah. I think this is where we do expect the Fed to cut 25 basis points in December. I think the labor market report was showing that the U.S. economy and labor market is slowing but not breaking. So borrowing from a significant upside surprise in the CPI report next week, we do think that Fed will cut. But I think after December going into next year, I think the Fed will start to recalibrate its reaction function, right? Now they need to respond to its due mandate, and they will probably take a more cautious reaction function. They need to watch both the data on inflation, employment, as well as the development on the policy side to evaluate how much they need to and also how much they can ease down the road. I mean, for 2025, we actually expect the Fed to keep policy rate above or at 4%. So, this is actually less than what the market is expecting.
So you talk about this, perhaps surprising economic resilience not being purely driven by Fed policy. And in fact, it's in spite of Fed policy in a lot of ways, right? But do you expect to see disruptions to those supply side forces through things like tariffs, tax reforms, immigration reforms? And does that meaningfully change the picture?
Yeah, I think this is where we say, a lot of the economic resilience in the U.S. economy over the past several years is due to the good luck on the supply side, right? Productivity growth and also strong labor force growth. Now, I would just say this is where we do see the potential, negative drag coming from the policy risk side, right? So both the trade tariff and also the immigration policy, they actually come as a negative supply shock. So they pretty much will become a drag on the growth and also actually boost up inflation further. And that actually will make, central bank's job even more challenging. Overall, we are actually expecting, the U.S. economy growth to grow about 2% in 2025. Without those negative policy shocks, the U.S. economy could actually be stronger even.
And yet other parts of the world seem to be weakening significantly, especially now with the governments in France and Germany toppled over budget concerns. We just had the collapse of the Syrian government as well, political chaos here in South Korea. Given how externally vulnerable and dependent all of these Asian economies are, what are your expectations for 2025?
I think, when you look at our 2025 outlook, we are expecting the global economy in aggregate to be largely stable, with inflation within touching distance of the central bank target, and central bank should continue to ease. But I think behind that, we're actually going to see heightened uncertainty, as we just mentioned, and also that will result in heightened divergence across, regions, right? So as you just mentioned, Europe is actually the weak link of the global economy. We are expecting only about 0.5% growth next year. Asian is actually, and also China is at the center of the storm, right? Given their, high exposure to, global trade, as well as integration into the global supply chain, right? So I think this is where we will watch closely about the changes in the trade policy, down the road closely. Of course, I would say not all economies are created equal. Even in Asia, I would say economies that is highly exposed to trade, like Korea and Taiwan, Vietnam, Thailand, they will be much more vulnerable, but economies that's more reliant on domestic demand actually will continue to see, decent growth, like India or Indonesia or Philippines.
Given what you're saying, how difficult could 2025 be for South Korea, especially when we have no clarity on who will take over the government? We have seen such political chaos here in South Korea many times in the past. Given that as reference, what are your expectations for the next year?
I think overall, if you look at the Korean economy, right, we already have seen that the domestic demand is weakening, and then there's rising, external headwinds. Inflation is also coming down, faster. So I think that will enable the Bank of Korea to cut interest rate to support the growth. Now, when we are talking about the political instability, right, remember back in 2016-17, when there's impeachment of the President Park, there's also, a negative impact on consumer sentiment, consumption, right? So obviously, political instability, especially if it's prolonged, it will actually have a negative impact on sentiment and confidence, and that is pretty negative to domestic demand. So this is where we would just have to watch how long this continued political uncertainty will persist, and what's the impact on, the economy and also fiscal policy.
Tian Wang, who's the Chief Asia Pacific Economist at Vanguard Group there. Always great to have you with us. And watching and seeing is really kind of the mandate at the moment for these markets, right? And you take a look at what we're watching when it comes to some of these haven assets in light of extraordinary developments across the Middle East and Syria over the weekend. We're seeing New York crude holding pretty steady, $67.30 is where we're at. We did see really oil holding that weekly loss. We had the Saudis price cut, signaling even further these expectations of a weaker outlook. So a second week of declines after the reduction of crude prices by Saudi Arabia, more than expected. But we continue to watch for any market fallout following the toppling of the Syrian regime. We're also seeing gold futures a little bit higher then, but pretty much steady after we had the US jobs number last week, reaffirming expectations of a rate cut from the Fed later on this month. And gold futures, they're pretty much US dollar at the moment, seeing a little bit of weakness, but mostly steady against trading pairs, Sherry.
Yeah, and Heidi, we're about 20 minutes away from the opens of the South Korean markets, and the top financial watchdog expecting the country's corporate governance and shareholder return initiatives to continue despite the political turmoil. Governor Lee Bo-kyun spoke to us exclusively before Saturday's failed impeachment vote against President Yoon.
Regardless of the political situation, this economic team, Financial Authority, Minister of Economy and Finance will be here for a while. I'll be here for a while. My term
ends in June.
June, right? And in the meantime, we'll just value program. The essence of value program is that the For example, the price of financial sector stocks have fallen a bit last couple of days. They're afraid that if the banks and insurance companies still can have the kind of discretion to make dividend or buyback purchase of their own stocks. So we like I said, even the opposition party is quite strong about this pro-investment program, and myself, including myself, the economic team will be here at least a year or so, and the ruling party leaders, they're also quite focused on this capital market initiatives. That's why they wanted to launch this revision to Capital Markets Act. So everybody's just supporting this program, regardless of their political orientation. So it's just how it is done and the speed of the whole value program. So that's the little difference that might happen.
And you need that credibility from foreign investors at a time when you have political unrest and potentially more instability in the markets. Do you think there's a role for the National Pension Fund here to play? Because you have talked about wanting them to be more active when it comes to market reforms.
MPS has been playing a very significant role in Korean domestic capital market, and but I don't think the government can persuade MPS to have more stock in any certain individual, company or any industry. Things doesn't work that way, but they have this gradual process of changing their portfolio, to my understanding, and one of the ingredients of the whole program is that the proliferation of the domestic capital market is essential to MPS's agenda. That MPS is designed to protect the pensions of Korean national people, because the international portfolio is very important, and that's why MPS is going abroad these days. But still, the one market, because all the dividend will be made in Korean won, no matter what. So the one market, one capital market, is very important to flourish.
Should they be more active then in times of turmoil?
They will, but not in a very short time. But that's why we didn't talk to each other. But to my understanding, they increased their portfolio these days, bit by bit. I think that has something to do with that.
Korean Financial Supervisory Service Governor Lee Bo-kyung speaking to us exclusively in Seoul and reassuring us that authorities are looking at the markets very carefully. Even just as we speak, we're seeing the latest headlines coming from authorities that South Korea will closely monitor financial markets and the economy 24 hours a day. They'll be announcing this month ways to improve FX supply and demand, and that they will take market stabilization steps according to plans, something that authorities have continued to tell us while we've been here talking to the finance minister, talking, of course, to the FSS as well. We'll have plenty more on the Asia trade. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Well, ANZ Group says former HSBC banker Nuno Matos will become CEO in July next year, and he's taking over the reins from Shane Elliott, who's retiring after 9 years in the role. Finance editor Adam Hay joins us now for more. So we were just saying earlier, clearly a retirement was sort of in the works, but perhaps the timing was a little bit earlier or surprising to the market.
Yeah, I think in a sense it maybe came a little bit sooner than some were expecting, Heidi, but clearly succession planning has been going on for a long time now, and even Elliott himself has spoken about that, and you know how that's kind of been impacting the search that the board has been taking for some time now. And again, this is another example of some solid talent being hoovered up from the HSBC ranks that, of course, is that bank is getting shaken up quite significantly. So what we see here is that Elliott will stay until the middle of next year. So there will be many months of a transition period. But what we know already is that you know, Matos will be already looking to kind of move on from a lot of what's plagued the back end of Shane Elliott's career. You know, this investigation that continues to be ongoing from the securities regulator in Australia over the bond trading, potential allegations of market manipulation there. You've got that going on. You've also had these investigations into cultural conduct within its markets business. You know, you've had all that going on at the same time that you've had a really great performance in the institutional bank. You know, the bank continuing to expand into areas like China and India, and continuing to sell off stakes in legacy banks that it's owned in Asia that haven't performed well, so it can redirect capital into more fruitful areas. So it's too early to tell what he will do in regards to those strategies, but clearly that retail banking side and that institutional banking side will be key to what happens from here. So there will be a long transition, but it will be, you know, I think the early signs are that there'll be a continuation of those strategies, and also, of course, the embedding of the having bought Suncorp banks, but the banking unit of Suncorp, you know, that integration of that massive M&A deal, which is almost like a kind of the big flagship deal that Elliott got done, that'll also, of course, be passed over to the new CEO.
Yeah, you mentioned retail, you mentioned the integration of Suncorp, the banking arm. Are there sort of broader challenges for the big Aussie banks going into next year?
Well, of course, the one big broad challenge, Heidi, that all the banks are facing is where do rates go, and to the extent that that affects their net interest margins. If we do start to see you know, rates coming down next year, like how aggressive the changes become, and whether we see more competition back into the mortgage area, or whether, you know, it's business banking that becomes more competitive. So a lot of what happens at ANZ will, of course, be attached to what happens in the economy. But at the moment, as we've been hearing from the RBA, there's no kind of imminent move on the horizon. So there is a scenario where interest rates actually don't move that much at all in the entirety of 2025 in Australia. And against that backdrop of fairly benign kind of macro outlook, that does allow him a bit more freedom around the edges to make some changes if he wants to at the bank.
And we do have breaking news out of Japan at the moment as well. We are getting third quarter final numbers, and it's growth of 0.3%, which is quarter on quarter the same as previous estimates. But you annualize it, and the quarter on quarter number is a jump of 1.2%, which is revised upwards from that 1% level that was expected. And this, of course, very important for the Bank of Japan, given that a big revision will would have meant that there were more signs of a stable economy, really leading to that potential hike even as early as next week. We're getting the current account balance number at this point, also surplus of 2.4 trillion yen, which is higher than expectations for the month of October. Our economy and government reporter Erika Yokoyama joins us now from Tokyo. Erika, just your reaction first to these GDP numbers, because they can be backwards looking, but right now the implication is what happens to the BOJ given this revision upwards.
Yeah, I'm just seeing the GDP figure then that was slightly revised up on I was actually expecting that like business spending would be revised up because these revised data are basically reflecting the corporation survey that was released earlier this month. Then that was suggesting that on business boosted their spending more than expected. But yeah, I'm just seeing the overall GDP figures was revised up, but it's just a minor. So I think the implication for the BOJ is on probably neutral, and in that sense I guess the trader have to keep playing the guessing game over the timing of when the BOJ is actually doing the next rate hike.
Yeah, so if it's sort of neutral on the balance of things, what would traders be looking at for signals in 2 weeks' time?
Yeah, so given that there are mixed signs and report, so I guess traders have to keep closely follow incoming data news. Then one of them should be on BOJ's Tankan survey, which will come out on Friday, which will give us an idea on how Japanese companies are performing most recently and how they are projecting their business climate, labor shortage situations, and inflation in the short and long term. And other thing will be FOMC, of course. That will come out announced just before the BOJ will make their own decision. So BOJ board members probably wants to see how the U.S. counterpart's decision will affect the currency situation.
So much scrutiny ahead of that BOJ decision next week. Our Bloomberg Tokyo economy and government reporter Erika Yokoyama there. More ahead on the Asia trade. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
This, Sherry, as we kick off the week after what has been an extraordinary couple of weeks in geopolitics, right? Of course, we had all the developments in France, the ongoing chaos in South Korean politics where you are, but also over the weekend, just that swift end to the Assad regime. It came on very quickly, and of course, so much of it has to do with sort of these pockets of opportunity being opened up by Russia, Iran being distracted by what's going on with other conflicts, but we're watching to see what comes next for the country.
Same here in South Korea. We will see what happens, especially with Prime Minister Han Duck-soo now in charge of the government. But a lot of people here are still waiting for President Yoon's impeachment or resignation. So we'll be watching protests throughout the week. And of course, the market opens at the top of the hour. This is Bloomberg.
Any of us in the room could have a stroke or develop MS or develop ALS, a condition that stops your body from working. We're all at risk of that. And neurology, I'm a neurologist. Traditionally, it's been the field in medicine where there hasn't been many treatment options. And so neurotechnology is having this moment now in medicine where it's becoming kind of the final frontier of medicine and a lot of excitement, but the challenge with cracking the skull and delivering technologies that way is that the infrastructure is not set up for scale for applications of that technology. Cardiology has shown over decades that you can now deliver millions of stents or pacemakers a year. So we're translating what's known from cardiac into neuro. And I think we're entering a period where the treatment opportunities for neuro delivered through a catheter into the brain are going to become vast.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Asia trade, we're counting down to Asia's major market opens, especially after the toppling of the government in Syria. We will be watching the Israel-Syria border closely, Heidi. As we're watching also the South Korean government, we still have no clarity on what happens next after President Yoon Suk-yeol survived the impeachment vote over the weekend. We're now hearing from the ruling party that the prime minister should be taking over managing the country. But what that really means in practice is a key question.
Just such an extraordinary, geopolitically restive end to 2024, right? And potentially more volatility to come. Of course, we're watching the fall of the Assad regime in Syria, as you say, but also watching to see the potential for a leadership vacuum to be left there, any sort of infighting with the groups that have taken over. Really, what comes next after this hard-fought victory for opposition groups and civilians?
Leadership vacuum here in South Korea as well as we await that South Korea market open. We saw, of course, the close sessions of losses for South Korea. Already the Korean won the worst performer this year across Asia. We have been watching the Kospi also at a 3-week low. In fact, when it comes to the small cap Kosdaq index, also already at the lowest level since 2022. As we speak, just moments ago, we heard also from the Financial Services Commission here in South Korea asking financial companies to closely monitor liquidity. We had already spoken to the Financial Supervisory Service Governor Lee Bo-kyun as well, really pledging that they will be watching the markets and implementing any measures necessary. And you can see the open right now, we're down more than 2% for the Kosdaq. We're down more than 1.5% for the Kospi, while the Korean won continues to be under pressure, down 0.3% against the US dollar. We will be watching if we touch again that 2022 low of 1444 for the Korean won. We're at around that 1430 at the moment. We do have jobs data later in the week. So what this crisis means for the BOK is already in question. We had seen, of course, that surprise rate cut recently by the Bank of Korea, Heidi. But of course, we also had data out of Japan.
Yeah, a lot to contend with, and sort of net that GDP number, the data out of Japan, perhaps not going to move the needle for the BOJ as we head into that decision later into next week. But traders will kind of be scrutinizing for any further signalings going to that key central rate decision. A lot of event risk, even as we see consecutive after consecutive highs when it comes to US equities, right? That hasn't really passed through when it comes to this part of the world. We are seeing a little bit more of a muted picture there. Take a look at what we're watching when it comes to trading in Australian stocks. We had a couple of sizable movers really on either end of the alphabet, right? ANZ is a big mover. We had the announcement of Shane Elliott's retirement by middle of next year. They will have the ex-HSBC Nuno Matos, they're taking over with a whole lot of challenges for ANZ and for banks more broadly, given the uncertainty over the rate environment. Also watching Woolworths saying that there is an impact on the bottom line, but some of those labour disputes may now be resolved, given there were really, sort of almost pandemic era scenes of stock not being available on Woolworths shelves as a result of this ongoing labour action. We are watching the Aussie dollar. We're seeing a little bit of upside there, 63.95, a bit of a recovery for the broadly for the US dollar after some weakness going into those payrolls numbers. But watching treasuries very keenly too, Sherry, given these Fed expectations for the end of the year.
Yeah, and that will really not necessarily help when it comes to Asian currencies, right? The Korean won right now taking a hit against the US dollar as losses accelerate on the Kospi as well, now down more than 1.7%. Let's bring in Bloomberg Sang-Mi Cha for the latest on what's happening here in South Korea, whether it's the market opens or the political turmoil, of course, with President Yoon Suk-yeol still facing intense pressure to step down. And it's really, Sang-Mi, that uncertainty, right? Will he step down? Will they try to impeach him again? That's really moving the markets, but authorities have been out in force trying to reassure markets and investors that everything will be fine.
Yeah, just this morning, Choi Sang-mok, the finance minister, and the BOK governor met up, and then they said they're going to be watching the FX, the economic, and the stock market 24 hours a day. And this is a preemptive measure that they're trying to impose here, 24 hours, so which means all the government workers will be like staying up, and then they will look at the market and really try to do everything they can to stabilize and calm investors' nerves. And we're seeing the Kospi dropping and starting quite low. And we've seen that from Tuesday last week. We've seen a lot of that intraday swings, and it's fallen about 3% since the martial law last week. But now it's extending that losses. And we're watching very closely when it comes to Kospi, the bear market. It was about 4% since the Friday's close. So we will be looking at whether it really falls below that 20%. It's already the worst, one of the worst benchmark gauges in Asia, right?
I think 23.13 is that level for potentially entering bear market. And for the Korean won, also we touched that 2022 low of around 14.44 is another marker for investors. But really not surprising, all the uncertainty. To be fair, we haven't seen the markets plunge as much as expected, and a little bit more stabilization happening, especially after martial law was lifted. But it's the uncertainty, right? Because we really don't know what's happening on the political side of things. So tell us the latest, because what we heard was that President Yoon was suspended and Prime Minister Han Duck-soo would take over, what that looks like.
Yeah, so in Saturday's 2-minute apology from the president, he did say that he will entrust his future to his party. And so now the ball is in the ruling party's court. And what the ruling party leader said was that he will have Han Duck-soo, our prime minister, actually run the state affairs, including the diplomacy, while we are in this vacuum period. But of course, the Democratic Party, the main opposition party, immediately rejected that plan, the plan to ensure that orderly exit from the president, because the ruling party does not really want that impeachment, because that could potentially hurt the party. So now nothing is really clear. There are a lot of leadership meetings and a lot of sporadic briefings that we're seeing all the time. So everything is very fluctuating right now.
Everything seems to be a race against time, given also that the opposition leader faces potential conviction if his conviction ruling is upheld by the court, given that, of course, he was convicted of election-related allegations. But Bloomberg Sang-mi, great to have you with us with the latest, and let's just delve into the market dynamics, given that our next guest says Korea's democratic processes at least remain in place, and now is perhaps the time to buy select undervalued companies. Lorraine Tan is Director of Asia Equity Research at Morningstar. Lorraine, good to have you with us. So is this just a short-lived political event, and will the broader markets in Korea recover, or is the picture more challenging, especially globally as well, going into 2025?
Yeah, hi, good morning. I think firstly on Korea, we still do expect this to be a short-lived event. Obviously, leadership change is ongoing. It's a key uncertainty. And we, obviously wouldn't be surprised that there is market volatility for the time being. But we're still, our base case is still for the processes to hold, the democratic processes to hold in an ongoing changeover, and as a result, we think if there's a pullback, there's an opportunity to pick up Korean companies. But obviously, we prefer exporters that maybe have a slight advantage when it comes to the won weakness.
What are the risks going into 2025, not only for South Korea, but for other parts of the world and other countries here in Asia and other currencies, given, of course, the political chaos, and not only here in South Korea, but also we have more tensions in the Middle East, the collapse of the government in Syria, and of course, an incoming Trump administration threatening tariffs?
Yeah, so lots going on for Asian markets. I would say, first and foremost, there's still a lot of uncertainty as to what Trump presidency is going to hold for the next 4 years. I think, obviously, the key brunt of that is going to be how that impacts China. But we actually see China as one of the more undervalued markets globally. And we do still, we're looking at our 2025 outlook is for about a 11 to 12% upside for China equities on the whole. We think the consumer sectors are much more undervalued, 20 to over 20% undervalued to our fair value estimates. So that's where we see the most opportunity. But it's got to be driven by an improvement in consumer confidence. And at this point in time, we do expect things to be bottoming out, consumer sentiment-wise, but we still need to see more coming out in terms of fiscal policy. So we're hoping to see more details come through over the next 6 months. As to the geopolitics, what's going on in Syria, what's going on in the Middle East with Ukraine, that still has to basically uncover itself. So we do think that there's reasons to be a little bit more cautious. But we think that on the fundamental basis, we're still, when you're looking at China consumer stocks, where it's very much focused on the domestic front, that's where we're looking at basically good quality companies that can recover as consumption improves.
Where are you seeing those in terms of specific names that might be trading at, value appropriate or undervalued levels right now?
Yeah, so we're talking about China. We particularly like the wide moat rated companies that we have. These are, again, market leaders. There are companies like Tencent, Yum China, for example. We also see opportunities among some of the baijiu makers. Those are high quality names in a very concentrated marketplace, particularly for premium baijiu. So we think these are opportunities to investors who want to hold out through the mid to long term for China equities. In terms of elsewhere, going back to Korea, if there's a pullback, we like SK Hynix best. In Japan, we see that as some opportunities, particularly if there's recovery in China as well, as an alternative to the geopolitics. Sony is one company we like. We like the factory automation space, harmonic drive systems, Fanuc, for example. And then in Singapore, we also have ST Engineering as one of our preferred picks, given the growth outlook that they have, with the MRO still in demand and anticipation for the defense side to still see relatively decent growth in the next few quarters.
You also see potentially there are names in Japan that might be a good alternative if we see the consumption recovery in China?
Yes, that's right. So first, the factory automation space, if reinvestment or capex factory activity starts to improve in China, the factory automation names in Japan are beneficiary. Fanuc, Yaskawa, harmonic drive, for example. Luxury goods globally would obviously benefit. We saw that big bounce initially when there was the PBOC cuts in September. So these include Shiseido, to a larger extent, probably a little bit more than Kosei, and Pacao and Unicharm as well.
Lorraine, always great to have you with us. Lorraine Tan, Director of Asia Equity Research at Morningstar. Still ahead, we get an update on the rapid developments underway in Syria as the US launches airstrikes and Bashar al-Assad flees to Russia. Details next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
President Biden there on the end of the Assad regime in Syria. Let's get the latest on that. The toppling of the Bashar al-Assad government after rapid advances by Islamist rebel groups. Bloomberg's Michael Heath has been following these events for us. And since last week, we've seen developments really happen very, very quickly. This has been building for some time. But is it correct to say that the sort of distractions or the geopolitical space was allowed for this to happen?
Yeah, I mean, I think that these rebel groups, these rebel groups, and Turkey has provided some support to them, but I really think they saw their opening there with the Israeli attacks on Hezbollah in Lebanon, and the killing of much of its leadership and the degrading of its missiles and its fighters, etc. And obviously the direct confrontation between Iran and Israel. It really put Iran and it put its proxy forces that have provided a lot of the boots on the ground to support Assad's regime in Syria. It put them on the back foot. And then in Russia, obviously, you've got they're heavily bogged down in Ukraine. And, Russia is not the Soviet Union. It's not a superpower. It can't run two wars at once like that. But I think there is also a degree of perhaps a bit of disappointment in Assad from both of them, from Iran and from Russia, in terms of what they got back for all that they put in there. And so when he was sort of left alone, what you often see with these dictatorships when they fall is that the troops or the soldiers, the loyalists at the end, realise that they're fighting for nothing, and so there's no point in dying for it's on its last legs, and so they just sort of dissolve, and that's what we saw here. That's what happened so fast.
Interesting you say that, because our previous guest said, Russia doesn't like losers. So the question mark over what happens, even as he's been given asylum, right? What happens now? Is there the risk of a leadership vacuum? How orderly can the transition be? There's a lot of hope now, but also a lot of risk.
Yeah, I mean, look, Assad, that regime was a really, really terrible one. I mean, some of the, barrel bombs on their own people and chemical weapons and this sort of thing. I mean, they did some horrific things to the population during that war. So there is great hope, but great uncertainty. I mean, you've got these various factions in the country, and power is a very, very, enticing thing. So we sort of have to just wait and see and hope. But there have been reports that some of Assad's regime had remained to sort of try and organise an orderly transition of power. Turkey, if it is fairly influential here, may be able to sort of smooth the path to negotiations. I mean, it is all uncertain, but there is hope that these group HTS that's come in and taken over may prove to be more moderate. But we've seen in cases like Iraq and elsewhere that when a dictatorship falls in the Middle East, it doesn't tend to be replaced by stability. So there's hope, but there's a lot of worry, and I think President Biden embodied that in what he said.
Yeah, exactly. So who's actually this rebel leader who toppled Bashar al-Assad al-Jolani? What do we really know about him?
Well, look, not a great deal about the group in general there, Sherry. I mean, they were an affiliate of Al-Qaeda. They've broken away. They've been on the border with Turkey. They have connections with Turkey. And this is sort of one of the interesting things about whether, if they're able to consolidate power, whether they might end up as a Turkish client state. And that would be a really interesting development, because you've sort of had Iran that's been able to project its strength across the region, and the idea that it might be replaced by Turkey, which is President Erdogan is very ambitious, and there's sort of often been this talk of a neo-Ottoman regime, the old Ottoman Empire that was before Turkey and controlled, Arab states. So look, there's not a lot of detail about them, but what's coming out so far about they're looking for an orderly transition and that they're going to accept all communities. This is a very important one. I mean, there's quite a large Christian community in Syria. Obviously, there's Kurds there. There's a lot. It's quite a diverse place. So the idea that they would be encompassing for those groups, that they're not going to try and crack down on them specifically, that's all positive. But we really just have to wait and see how it unfolds, because when a new government comes in, it's always saying the right things because it's got to consolidate power. It's what they do that then really is when the rubber hits the road.
Bloomberg's Michael Heath there following the latest developments around Syria. And these are some of the other global stories that we're following. Saudi Arabia is cutting oil prices for Asian buyers by more than expected. A price list seen by Bloomberg shows the Saudi Aramco will sell its main Arab light crude to Asia at a premium of 90 cents a barrel in January, 10 cents cheaper than expected by traders. Oil prices have been under pressure with a lower risk premium and OPEC Plus delaying an output revival. U.S. President-elect Donald Trump says he has no plans to replace Fed Chair Jerome Powell once he returns to the White House. Last month, Powell said he would refuse to quit office early if Trump tried to oust him. Trump has previously told Bloomberg that as president, he should have a say in monetary policy and setting interest rates. We have more ahead on the Asia trade. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
The fact that the unemployment rate went up means that the Fed will be comfortable cutting by 25 basis points, means that the market will increase the probability of this happening.
This is a kind of number that will support the Fed cutting rates in December. I think that, looking for, 2 or 3 more cuts in the coming year, I think is completely reasonable.
We have had growth that's been that continues to surprise on the upside. Looks like the momentum in the back half of this year, setting us up for next year, has been quite strong.
We're going to pivot to this, pause, skip debate and what kind of message that means. But the big debate is over the degree to which cuts have to take place in 2025.
Some of our guests reacting to the U.S. jobs report. U.S. employers picked up hiring, adding 227,000 jobs in November, with an uptick in the unemployment rate and higher than expected wage growth. The latest snapshot of the labor market may nudge the Fed towards lowering interest rates later this month, but investors are also waiting for a key inflation print before policymakers meet next week. Markets are betting on roughly a 90% chance of a rate cut. Acting U.S. Labor Secretary Julie Su has downplayed the slight rise in the unemployment rate for November. She told us the figure is still historically low and indicates a stable economy.
This month, we saw the numbers rebound again, and we often look at averages. So the 3-month average, even including that month of relatively low growth because of aberrational factors, is still 173,000. So the picture of this economy, as we've said over and over again, is one of a historic recovery of consistent job growth. And as you all remarked just before this, the unemployment rate remains really low. It not just as an absolute number, but in the face of really record high levels of labor force participation, and those are all signs of an economy that is, not just recovered, but has been consistently strong and stable and continuing to grow.
Yeah, good context there. Of course, we're talking about a slight rise in the unemployment rate, but historically still very low levels. But talk to us about the revisions. This is a puzzle that we were just trying to solve. You had a very small revision to last month's number, just 36,000 jobs revised there for October's number. That came in at just 12,000. The narrative there was, of course, that was going to be noisy when you think about all the different factors, weather, strikes, et cetera. But a small revision, how are you thinking about that?
I mean, I always say this, revisions are really part of the jobs numbers. We report new data when we get it because it's important to be accurate, and it's also important to be timely. So we put out numbers when we have them, we revise them each month. It's also notable that not only were the last 2 months small, they were also upward revisions. So I always say the revisions can go up or down. It depends on what data we get. And that's also why we look at averages. You look at the story of this economy from 2022 when it was hot and recovering and everyone said it was going to crash. It did not. It reached a more steady state in 2023, and we've definitely seen that continue in 2024. And I think the takeaway is, this has been an amazingly fast recovery. It's also been really broad-based because we've always said that when you prioritize workers, when you prioritize vulnerable populations, the economy is stronger. It's not just good for those individuals, but also we will be, handing off the strongest economy in history. And those were all not inevitable outcomes.
And while you could appreciate the historically low unemployment rate, the fact that it has been ticking higher, and if you round, you're getting closer and closer to 4.3%, how concerned are you about where the labor market is weakening and how fast it might weaken from there?
Yeah, I mean, it's still, 4.1 to 4.3% since the summer. That is still, as we just said earlier, historically low. It was not anticipated to get that low as quickly as it did. I think, what this also tells you is that economic policies matter. Leadership matters.
Acting U.S. Labor Secretary Julie Su speaking with Bloomberg's Katie Greifeld and Shonali Basak. And this, we see some big moves in the Tokyo session as well. Take a look at how Rakuten is trading at the moment, because it's jumping after the company announced that they will give shareholders a 1-year free subscription to their Rakuten mobile service. The plan includes voice and 30 gigabytes of data per month. Of course, this is a company that is trying to gain investor confidence right now as it's trying to shore up its capital on upcoming bonds. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rates while
This is a three as the economic picture.
Covering the intersections of Hollywood. Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Take a look at what we're watching when it comes to European stock futures just opening for trading. And of course, after last week's drama when it comes to the political situation in France, we're seeing that continuation when it comes to the weakness in French stocks in particular. That relief rally going into the end of last week after months of underperformance could be short-lived. The ongoing political crisis, Australian public finances situation, not just for France, but of course, this is becoming sort of a broader theme of European weakness in general. Stocks 50 futures looking a little bit soft there at the moment. German DAX futures pretty much flat at the moment. This, of course, as we continue to also watch the geopolitical implications, right, as whether this sort of sustained rally after the US labor market data can be kept, given we continue to monitor the situation in the Middle East, the toppling of the Assad regime in the government in Syria, and what sort of comes next with shockwaves being sent across the region. Oil certainly into the end of last week holding that weekly loss, where Saudi Arabia with its price cuts continuing to signal that broader narrative of a weaker outlook on the demand side. New York crude holding pretty steady at the moment. We're also seeing a little bit of downside for gold, despite a broader rally for gold prices. China's central bank adding bullion to its reserves in November after a pause on purchases for about 6 months then. So we continue to watch that impact ongoing when it comes to haven demand for gold, Sherry.
And we are seeing now losses accelerating in the South Korean session, Heidi, because the Kosdaq is now at the lowest level since 2020, and we're down more than 3.5%. The Kospi also losing more than 2%. Already, the Kospi is very close to that bear market territory. So 23.13 is the level that you should be watching. But we've seen retail investors leading the sell-off following the martial law decree. Foreign outflows have been accelerating since August already. We have heard from financial authorities trying to calm the markets, but the Korean won at the moment losing ground as well against the US dollar. In fact, the Bloomberg intelligence report also saying that Chinese visitors to South Korea may fall as much as 19% through the first quarter of next year on fears of social unrest. Let's get more on the business outlook with James Kim, Chairman and CEO of AmCham Korea. James, great to have you with us. Not the most opportune time right now, given what's happening here in the political environment. It must have caught you by surprise. What did you do after the martial law was declared and lifted?
First and foremost, Sherry, thank you for having me. Obviously, it's a very serious time. When it happened on Tuesday evening, I don't think anybody was surprised. That said, we had a lot of meetings with our different member companies, different key stakeholders, and we just wanted to gather some facts. But the timing was interesting in that the Deputy Prime Minister and the MOT Minister asked for a meeting with us on a Friday afternoon. It was interesting that it's one of the first times that we have seen both of these senior officials ask for a meeting. They wanted our frank assessment. They wanted to answer some questions we had. At the same time, tell us about what they're doing. And the key for us was that we had the chamber heads from Europe, Japan, and also China. And I think in unison, all of us felt as if no company was saying no more Korea. They're still making a long-term commitment to Korea. It's just to watch and see.
How reassured were you by what they told you?
I was very impressed with Deputy Prime Minister Che and the MOT Minister, because we spoke about what business people should be focused on anyway, which is a separation of politics and economics. And as business people, we're already used to doing that. The very fact that Deputy Prime Minister Che has some real good experience in handling adversity, handling these kind of crises, was very reassuring. Last week, the markets obviously stabilized a little bit. The currency also stabilized. So it just shows you that the Korean ecosystem is pretty rock solid.
The MOT Minister is the Minister of Trade and Industry.
Yes.
That area could potentially take even more of a hit if we see tariffs, potential threats coming from another Trump 2.0 administration, something that has been concerning a lot of businesses here. What are your views?
You know, Sherry, I have experienced President Trump 1.0. I met with him twice during his presidency. I think President Trump is very, very positive on the business environment. I think he reveres the Korean companies investing in America. And that's one of the reasons why even at AmCham, we changed our mission to not just help U.S. companies operating in Korea, but to also help Korean companies invest in America. Look at the numbers, Sherry. $140 billion is what Korean companies have invested in the United States since 2021. And 80% of that investment is going to the red states, states like Tennessee, Georgia, Alabama, Indiana, Texas. So I think that someone like President Trump really liked that.
And as we speak right now, we're taking live pictures of the main opposition party leader, Lee Jae-myung, speaking in the National Assembly. Of course, we have heard directly from Lee Jae-myung here on Bloomberg TV, and he vowed to impeach the president no matter what, that this was a matter of time. But time, of course, is an issue, isn't it? Because that could be just more potential volatility and uncertainty. As we lack clarity here when it comes to who leads the government, what are AmCham businesses doing when liaising with those stakeholders?
Well, if you take a look at how resilient Korea is, first of all, U.S. and Korea have enjoyed 71 years of experience together during the good times, the bad times, but Korea has proved to be very resilient. Take a look at COVID-19. The companies who transformed their business model during COVID-19 have been very successful. Companies like Korean Airlines, they changed their model to go from just the passenger side to cargo. And as a result, they were one of the most profitable airlines during COVID-19. Look at the digital transformation companies have taken. Companies like McDonald's, their drive-through, their delivery platform have changed the game during COVID-19. So companies who are focused on their business, regardless of what happens, I think they're going to be the winner. I know you mentioned about the tariffs under President Trump. I want to talk about the trade deficit. Right now, under President Trump 1.0, the trade deficit between U.S. and Korea was around $20 billion. Now it's 50, right? So it could be a concern. However, for American companies that want to help reduce the trade deficit, it's an opportunity for them to sell more into Korea. Companies like semiconductors, right? Autos, auto parts, and anyone who does business with Hyundai and Kias of the world will be very, very positive.
Does the domestic demand picture concern you at all? Because many of your businesses, of course, also operate within South Korea. They do their businesses here. But as we continue to see the political unrest in South Korea and the uncertainty, we are expecting a hit to the Korean economy as well. Will that be an issue and concern in 2025? And how deep could that affect your businesses?
I think that we're always looking at things in the long term. If you focus on the short term, I think that's a wrong approach. But on the long term, I think that Korea remains a very healthy opportunity for not just U.S. companies, for other foreign companies to invest here as well. It's a great place.
When it comes to the Korean won and the volatility, how does that affect your companies?
Well, obviously, it makes it a little bit more difficult because it makes it more expensive to bring in goods from other countries such as the U.S. But as I said before, I believe in the longer-term stability, and that's where we ought to focus on it.
Even when we have North Korea, there's always a Korea discount, and of course, they're strengthening ties now with Russia.
Absolutely. We do have a lot of geopolitical issues that all of us should be concerned about. But I believe that from the political side, we have really smart people handling the political affairs. And as business people, we should focus on things that we can control.
Kim, really great to have you here with us in Seoul, Chairman and CEO of AmCham Korea. And you heard it. He seems very encouraged and positive so far when it comes to the volatility that we've seen so far. And we've heard from top financial watchdogs as well. They expect the country's corporate governance and shareholder return initiatives to continue despite the political turmoil. We heard from FSS Governor Lee Bo-kyun speaking to us exclusively before Saturday's failed impeachment vote against President Yoon.
Regardless of the political situation, this economic team, financial authority, Minister of Economy and Finance, will be here for a while. I'll be here for a while. My term is
ends in June.
June, right? And in the meantime, we'll just value program. The essence of value program is that for example, the price of financial sector stocks have fallen a bit last couple of days. They're afraid that the banks and insurance companies still can have the kind of discretion to make dividend or buy back a purchase of their own stocks. So we like I said, even the opposition party is quite strong about this pro-investment program, and myself, including myself, the economic team will be here at least a year or so, and the ruling party leaders, they're also quite focused on this capital market initiatives. That's why they wanted to launch this revision to Capital Markets Act. So everybody's just supporting this program, regardless of their political orientation. So it's just how it is done and the speed of the whole value program. So that's the little difference that might happen.
And you need that credibility from foreign investors at a time when you have political unrest and potentially more instability in the markets. Do you think there's a role for the National Pension Fund here to play? Because you have talked about wanting them to be more active when it comes to market reforms.
MPS has been playing a very significant role in Korean domestic capital market, and but I don't think the government can persuade MPS to have more stock in any certain individual, company or any industry. Things doesn't work that way, but they have this gradual process of changing their portfolio, to my understanding, and one of the ingredients of the whole program is that the proliferation of the domestic capital market is essential to MPS's agenda. That MPS is designed to protect the pensions of the Korean national people, because the international portfolio is very important, and that's why MPS is going abroad these days. But still, the one market, because all the dividend will be made in Korean won, no matter what. So the one market, one capital market, is very important to flourish.
Should they be more active then in times of turmoil?
They will, but not in a very short time. But that's why we didn't talk to each other. But to my understanding, they increased their portfolio these days, bit by bit. I think that has something to do with that.
Korean Financial Supervisory Service Governor Lee Bo-kyun speaking to us exclusively in South Korea. And this, as we continue to watch the latest developments in South Korea, we had heard from Lee Jae-myung, the main opposition Democratic Party. He's speaking right now to the public at a time when he's calling the plans right now to have the prime minister sort of take power in South Korea and have the president suspended. He's called that a coup. So we will continue to watch the developments around the key question of whether that would be a constitutional process. Bloomberg has also learned that South Korean companies are reconsidering a $54 billion investment blitz to build EV battery plants in the U.S. over concerns Donald Trump could undo tax credits. Global business reporter Hee-Jin Kim joins us for more on this. Hee-Jin, so we had seen these concerns, of course, about tariffs coming potentially from the Trump administration, but just the fact that even investing in the U.S. might be risky is another concern, right? What are you hearing?
Yeah. What I hear from Korean companies is that they're really worried about Trump's coming because he's basically said he's going to slash all the budget for the green energy industry. But like you said, as the Korean companies invest in more than $54 billion to build a supply chain in the U.S. for electric vehicle makers like Tesla, GM, Ford, Stellantis. But now all the incentives and subsidies will be gone if Trump takes the office. So they're now considering of like suspending the ongoing construction, or even, I don't know, in worst case scenario, probably canceling some of the plans, or probably just delaying the ongoing construction of those plans. Because as you know, it's so expensive to run a factory in the US because of all the labor costs and inflation. And we also have some labor groups in the US like the UAW.
I mean, how deeply would that hurt these EV companies that have already been under a lot of pressure, especially, I guess, now that you have more political uncertainty here domestically as well?
Yeah, sure. Because it's not a matter that they can negotiate individually with the U.S. Department of Energy, right? They definitely need some support from the Korean government. But unfortunately, as you mentioned, there is political turmoil at the Yoon Suk-yeol administration. So they have actually no one to negotiate for them.
Like Hee-Jin Kim, thank you so much for that update. Great story as we continue to watch the developments here politically in South Korea. We are continuing to hear from the main opposition leader, Lee Jae-myung. Of course, we had seen the Democratic Party really oppose that idea of having Prime Minister Han Duck-soo take charge of the country and have President Yoon suspended. They still wanted to impeach the president and go through that whole process when it goes to the Constitutional Court, and then you hold elections. There are questions right now about how constitutional it would be if you only have the prime minister taking over. So you're right now watching Democratic Party members speaking in Seoul. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is a historic day for the Middle East. The collapse of the Assad regime, the tyranny in Damascus, offers great opportunity, but also is fraught with significant dangers. This collapse is a direct result of our forceful action against Hezbollah and Iran, Assad's main supporters. It set off a chain reaction of all those who want to free themselves from this tyranny and its oppression.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities and to create a safe haven. We will not let that happen.
Take a look at what we're watching across the commodity space, and obviously energy prices is among them. We did see a second week of losses when it comes to oil. The move from Saudi Arabia really just highlighting the weakness when it comes to the demand outlook that's expected going into next year. But of course, a lot of this is really coming down to potential volatility across the Middle East, given that now we've seen that fall of the Assad regime and potentially a more restive mood across some of those markets as well. We're seeing copper, though, seeing a little bit of upside. That key meeting when it comes to China's economic outlook is coming up too. We're also counting down to the market opens in mainland China and Hong Kong. Investors looking to that CPI print for November, PPI print due in the next hour. That key economic powwow happening in Beijing later this week as well. MLive strategist Mark Cranfield joins us now for more. And obviously, so much of this is built on expectations of whether more fiscal stimulus will be announced. We know that they've had a tendency to disappoint before.
Yeah, it's a very big week for China investors. As you can see, the equity traders were getting quite excited towards the end of last week. They were pushing up Chinese stocks quite well, although there were suspicions there was a helping hand in the background from some of the state-related funds. But anyway, it was a very good close to the week for China stocks. So that starts off this week with a bit of momentum. And of course, American equities had a good finish to the week as well. So the mood should be pretty decent, but their expectations will be very high. They won't be thinking too much about the inflation data. That hasn't been a major concern for Chinese investors for some time. And the PBOC is well ahead of that with easing policy in various respects anyway. But they will like to hear some highlights from the economic meeting this week, which suggests that the fiscal policy will continue to be very supportive for the economy. They'll be looking for headlines that tell them that the fiscal deficit has more room to widen. And if that's confirmed, that will probably give Chinese stocks a good run into year end. There's certainly a very big risk if that they don't say too much this week. We go into a bit of a vacuum period because the next major meeting for Chinese leaders isn't really until about March next year. So certainly a risk that if they disappoint people, that could really help to dull people's view towards the market for quite a while. So certainly a lot resting on what comes out of this week. Nobody's expecting specific numbers, but they will like to hear positive sound bites in terms of, yes, stimulus is going to continue to go. Fiscal expansion is still very much on the way. And we see next year getting the economy up to that 5% growth level that they've been finding it pretty hard to meet so far this year.
As you say, it's a big week. We've got rate decisions sort of all over the place. We're looking ahead to the BOJ next week. We've got China. We're also looking kind of for that final puzzle piece for a rate move from the Fed, right? Do you think we could see a surprise on inflation from the US?
Really, it's all about what the Fed does in terms of setting up next year and beyond. People will be very surprised if they don't lower interest rates in December. It's almost fully priced in by rates traders already. But obviously, although they won't speak about it specifically, the Fed is probably got some concerns that when the new administration comes in the United States next year, it could have some inflationary consequences for the US economy. So they'll need to manage their expectations from that point of view. So it will either be in the statement or in Jerome Powell's press conference to give a kind of a warning that inflation may not be fully beaten yet.
MLive strategist Mark Cranfield there. I have a big week. We have more ahead on the Asia trade. This is Bloomberg.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We're seeing accelerating losses on the small caps Kosdaq index here in South Korea. We have heard from Goldman Sachs, so they're keeping their 2025 Korea GDP growth forecast at 1.8%. We're also hearing that the finance chief and the parliament speaker will be discussing the 2025 budget. So we're seeing authorities still trying to keep calm and continue to support the economy. This is we're seeing the Nikkei now hold steady, and of course the ASX 200 down 0.4% as we head towards the RBA meeting on Tuesday. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And possibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
In case you missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared. And China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
We're half an hour away from the opens in Hong Kong, Shenzhen and Shanghai. You're watching the China Show. I'm Annabelle Drulers with Stephen Engel.
Our top stories this morning: the U.S. strikes Islamic State targets in central Syria as Bashar al-Assad flees to Russia after rebels topple his regime. Israeli ground forces reportedly crossing into Syrian territory for the first time since 1973.
Asian stocks trading cautiously to start the week as investors await fresh stimulus signs from China and weigh South Korea's political turmoil.
And Korean stocks and the won slide as the crisis deepens there, with pressure intensifying on President Yoon to step down.
Taking a look to the market action this morning as we kick off another trading week. Really, you're just seeing perhaps that level of nervousness coming through because you've got Asian equities that are very much flat to start the week. No movement coming across in US futures as well. There is a lot of event risk, and we're really grappling with that this morning. Of course, what's happening in the Middle East, Bashar al-Assad out of power, and also ending what has been a brutal family regime that has been in place for at least half a century. Where we're sort of focusing our attention on that this morning comes down to the moves that we're seeing in Brent crude prices. Again, just coming online, we're not really seeing any sort of direction from that just yet. It does appear that at least investors, traders are taking what's happening in the Middle East in their stride for now, even though there is that perhaps a power vacuum that's being created and certainly has question marks, not just for Russia, for Iran, those major backers, but also for the likes of Turkey and more in the region, Israel, of course. So we're tracking all the details in just a moment. But what else we're tracking is what's happening in Korea this morning. Let's change on, because here that sentiment is really shifting to the downside. We're watching the Kospi here, for instance. 2313 is the line to watch. That will be a 20% decline from its recent peak. The Kosdaq, for instance, already down 30% over the course of this year. So this is a market that really is not taking it to the political instability very well. We saw Yoon surviving that impeachment vote. The opposition party is just giving a presser, so we'll update with any headlines that drop from that. But the Korean won, again, we're under pressure so far in the session. It last traded, or at its weakest point was at 1444 when this instability really kicked off. Of course, to track as well is the events from Friday. The US, we saw payrolls edging up, but the employment or unemployment rate has kicked a bit higher in the US. Adding to that is what we had in the UMich survey, the University of Michigan survey. Sentiment for consumers, it rose. You saw it rising back to levels we haven't seen since April of this year. But again, inflation expectations, those also ticked higher. So yes, that base case is that the Fed will cut its rates this month. In December, that 25 basis point cut does seem priced in by traders at this point. But there is that question mark over the longer term with those inflation expectations ticking higher. What is the bearing of tariffs from Trump in all of this? And if you change on now, very big week ahead for China as well. We've got policy makers that are meeting for their work conference. We've got CPI from China, PPI figures as well that are due just this hour. So that question of what are the fiscal and the monetary policy measures that Beijing is likely to take, Steve, in the face of what is going to be that big tariff risk coming from the US as well.
A busy Monday morning, obviously, Annabelle. To our top story, obviously, is the Syrian President Bashar al-Assad has fled to Russia after his government collapsed following a rapid advance by Islamic rebels. The U.S., meanwhile, has launched airstrikes on central Syria, hitting what it says were dozens of Islamic State targets.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
Well, for more, let's bring in Bloomberg News desk editor Jill Deesis. So obviously lots happened over this weekend. Put it into perspective. Where are we with the power vacuum, if you will? Because Syria is so, in that region, so politically central as well as geographically central.
Yes, that's right, Steve. I mean, look, the U.S. and its Western allies certainly are no friends of Assad, and at this point have really said that they're not going to intervene with what's happening in Syria right now. Incoming President-elect Donald Trump has actually said something similar. But what this does create in this region that already obviously is dealing with quite a bit of uncertainty over the conflict involving, Israel and all of the groups that it's fighting, is that you're just introducing this new power vacuum here. So, I mean, look, Syrian rebel groups have been fighting, obviously, for decades at this point against the Assad regime, obviously now very suddenly successful here. But it does create a lot of concerns over what the incoming group may ultimately do. So traditionally, Syrian rebel groups, they've been a mishmash of different ideologies, but ultimately kind of dominated by some of those more, sort of extremist groups. I mean, HTS, the lead group involved here, I mean, that's a group that's been designated by the U.S. and some of its allies as a terrorist organization. Now, HTS has, in the aftermath of the situation here, tried to present itself as a bit more reasonable, but it's really still uncertain over what the rank and file ultimately believe and what that ultimately manifests in terms of maybe a new government or anything like that within Syria.
What would it mean for Israel in particular, do you think? Because the leader of HTS, that's someone who goes by the name of Al-Jilani, that's his nom de guerre, but Mohammed Al-Jilani, his family has roots in the Golan Heights region, which we've been hearing this morning is where Israel has entered into and past that demilitarized zone. What do you think it means for this conflict in particular?
Yeah, I mean, I think that at this point, I mean, it's still, again, like sort of this idea of risk and uncertainty. As you mentioned, Israel entering the Golan Heights, sort of like moving into Syria for, I think the New York Times is reporting the first time since 1973. So obviously there's some events here that have an incredible amount of historic significance. I do think one thing that's really interesting to look at as we kind of watch this conflict unfold is the fact that Iran really hasn't stepped up to sort of back Assad and sort of, back Syria. And I mean, but part of that may just be because obviously, Hezbollah, Hamas have been, incredibly crippled by this war that, the conflict that's happening in Israel right now. And so I think that when you take into consideration some of these broader concerns over the Middle East, how there's, all of these uncertainties and risks playing out with Israel, that kind of filters into what I think we're seeing in Syria.
There's so many power brokers involved in this issue right now, because you have Russia as well, where Assad has sought and received asylum, essentially. But, Russia has military bases in Syria. Obviously, they've been a benefactor to Syria. Then you have Tehran as well, where they have the land bridge to Lebanon and Hezbollah. So where does that leave Tehran and Russia?
Well, at this point, I mean, obviously these are two nations that haven't really backed Assad in all of this, but also because they're just dealing with a lot of their own conflicts, right? I mean, arguably, Russia will want to protect the bases that it does have in Syria, but it's still fighting the war in Ukraine. So when you look at the totality of everything that's happened here, I mean, we've seen time and again over the last, couple of decades, Russia in particular come in and back Assad during previous conflicts, but this time around, I mean, just really no scope, it seems, to sort of back him up. In this instance, it just again leads to a lot of political instability. You've got different nations that need to come in and protect their own interests, but at the same time, that obviously didn't prevent his regime from being toppled here.
All right, Jill, really great insights. Thanks. That was Jill Deesis there, our Bloomberg News desk editor. And we're going to be digging deeper into the implications of the fast-moving events in Ukraine and rather in the Middle East, in Syria this hour. We'll be hearing from academics, but also taking a look at what's happening in closer to Europe, because we're discussing there the implications around why Russia perhaps has also not been able to give that level of support to Syria. Over the weekend, of course, you're seeing that picture there of US President-elect Donald Trump, French President Emmanuel Macron, meeting in Paris on Saturday with Ukraine's Zelensky. So Macron had sought the meeting to initiate a discussion on ending the war in Ukraine, but officials that are close to Macron and Zelensky say that the meeting was positive, but they didn't actually give any details. Steve.
Yeah, so much happening this Monday morning. It's not all Syria, obviously. It is also the markets. We're looking ahead of that Central Economic Work Conference that starts midweek in China. And the markets, the CSI 300 and also the HSCI here in Hong Kong, they we're up more than 1% each on Friday, as we found that the Central Economic Work Conference in Beijing is going to be held Wednesday and Thursday. Of course, all eyes on whether we're going to get any kind of fiscal number of stimulus. Generally, that Central Economic Work Conference is centered on broader priorities for the economy, but will we get any kind of specifics in the readout once that closes after Thursday? Of course, Van Ke will be looking at that. We had contracted sales of 20.13 billion yuan, again, waiting for any kind of stimulus signals from the Central Economic Work Conference. The CGB rally obviously has been in tandem and lockstep with the stocks rally that we saw last week. Again, on tenterhooks, again, the market ahead of any kind of policy direction coming. And then inflation data. Look, PPI deflation, 25 consecutive months in deflation for factory gate prices. Again, we'll have to see if the prices have any kind of traction, if you will. CPI inflation in China has been in low single digits for 9 consecutive months. Hasn't gotten any kind of traction, even after that September stimulus that we got. Annabelle?
Yeah, well, I think to your point, Steve, around sort of how much traders and investors are waiting for details from the work conference this week. We've already had some clues coming through from Chinese state media because they're sort of just giving us hints on the potential direction of policy, again, ahead of that key meeting coming ahead. So a look at what we're seeing. The latest in a series of articles on the economy is coming from Xinhua. So we've seen those major market, improved policies on land use, for instance, tax, other financial measures. But it does say that the market has bottomed out after recent policy moves, even after the data showed residential sales fell again in November. And meanwhile, a previous part of the series suggests the central government has room to increase its borrowing and fiscal deficit next year. Xinhua says the government's leverage ratio is far below the global average, and that allows it to boost debt. We're going to have more on the Chinese economy coming up as well, because Goldman Sachs joining us, Steve, to discuss the November inflation figures you're mentioning there. Key takeaways from their conversations, because they have been on the road, major cities, Beijing, Shanghai, Shenzhen, Guangzhou, over the past few weeks.
Yeah, Hui Shan will be watching that one. We'll also be talking markets with Murray Asset Global Investments amid the political upheaval in South Korea. How does that story get pushed down the agenda? It's still very, very much live in Seoul. All right, we're counting down to the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
And welcome back to the China Show. We're getting live pictures here from the South Korean Democratic Party. Of course, the political crisis is ongoing in Seoul at this time. We're also getting a headline coming across from Seoul that South Korea police are not ruling out the possibility of questioning President Yoon or for treason. That is, of course, something the opposition party, an allegation they've leveled at the president, as he called last week for that martial law, which the opposition has said was illegal and treasonous. For more, of course, let's bring in our reporter in Seoul, Sang-mi Cha, joins us for more. Sang-mi, get us up to date here. Tell us what's happened over the weekend and what's next.
Yeah, let's go back to Saturday. In the morning, we saw a 2-minute apology from President Yoon Suk-yeol, who came out and said he will take all the responsibility and legal responsibilities for what he has done on Tuesday night by declaring the martial law and very quickly rescinding it. And then there was that waiting game until 5 p.m. when the lawmakers went to vote for that impeachment. What happened was that it never really went through because usually you need 2/3 majority of the 300-member parliamentarians, but then the ruling PPP, the People Power Party, has 108 lawmakers, and all they needed was that 8 defections from that party, and they were not able to get that people. And so motion did not go through, and we're in somewhat of a vacuum state right now. So immediately after, on Sunday, Han Dong-hoon, who is the ruling party leader, came out and said, from now on, the Prime Minister Han Duck-soo, will take care and manage the state affairs. But of course, the main opposition party said they rejected this plan, and they said this is unconstitutional. So we are still waiting on what's going to happen next. What the opposition is saying is they're going to keep on submitting these impeachment votes, and we will see whether this is going to be on constant loop.
And Sang-mi, just as we're talking now, we actually are getting local media reporting on the ex-defense minister, and we are understanding that the prosecution plans to summon him again. So as really just points to how much this is a developing story. But the market reaction, investors had sort of seemed to take it in their stride and had listened to what regulators were saying about that stability. But this morning, it seems like the losses are accelerating.
Yeah, so we've been seeing both Kospi and Kosdaq deepen that sell-off. And of course, finance minister came out early in the morning in a briefing, after his meeting, and said they are going to do everything possible to boost the market and to prevent this market meltdown. And we've seen Kospi pairing a little bit, but we see a lot of these sell-off led by retails and also from a lot of these value-up proxies. Value-up was the reform that President Yoon was pushing for. So namely, these are the financials. A lot of the banking stocks are doing pretty badly today. And looking at Kosdaq, the small cap index is down as much as 3.8%. That's the lowest since May 2020. And the won is also declining. It's 0.4% down against the dollar. So all of this is kind of factoring in all this political instability, which is not good for any markets. A lot of the traders have been telling me that they're reassessing how prolonged this stalemate can go. And that would be pretty bad idea for the Kospi, which is already one of the worst performers in Asia.
All right, Bloomberg Sang-mi Cha in Seoul, keeping us up to date on the latest from that political issues in South Korea. Let's bring in our guest. Joo-hee Han is the CIO at Murray Asset Global Investments. Joo-hee, thanks for joining us. Obviously, you cover a wide swath across Asia, ex-Japan, but we have to start in South Korea. You are overweight India, Taiwan, Indonesia, equal weight China, underweight, continue to be underweight Korea. How do you assess what Sang-mi just outlined here, how the markets are reacting and selling off South Korea?
This event is such a disappointing event for investors who have been expecting for the market re-rating through value up program. And then this one, the Korea discount, so-called Korea discount, is kind of being justified by this, like a leadership crisis. So especially when we see few sectors where we expect kind of limited growth potential of the earnings estimates for next year. So it was mostly because of the people who are bullish for Korea is basically because of the re-rating potential and the kind of efforts by the government and then exchange and then the conglomerates, to change the corporate governance and all the financial structures and to boost, the values of the shareholders. But I think now this, leadership crisis is kind of, putting more pressure on the execution and the progress of that effort.
And we have seen that sell-off really following the Yoon's calling of martial law or that decree. But when do you think we reach a point where equities actually do appear attractive just on a valuation basis?
We still have to see the development of this event. But if you recall, like 7 to 8 years ago, when the President Park faced the impeachment, at least it took the 1 quarter after it happened. So, and then now, over the weekend, they failed. The opposition party, they failed. So I think it's gonna, this pressure, market pressure, is going to be lingering for an extended period of time. I would say it's at least like a few quarters from now.
A few quarters. So then
that's what I'm thinking.
So then investors and advisors such as yourself have to think about where do you rotate out of Korea to?
If they have overweight, and then if they are rather short-term kind of investor, so it really depends on the time horizon. I'm not saying that I'm overly pessimistic on the outlook of the capability of the companies or the governments and people to overcome this crisis, but at least in the near term, instability of this government leadership is going to have a negative impact on the market.
Part of the perception of why Korea has sort of lagged behind is also because it's falling behind in the AI race, or that feeling that it's not as strong as Taiwan, for instance. Do you see that perception changing anytime soon? I mean, we're waiting, for instance, for Samsung's HBM chips to be certified by NVIDIA. And what's your outlook on that part of the market?
Yeah, so that's a very good and timely question because people in the past, usually they combine Korea and Taiwan together as a beneficiary of the AI development in Asia. But now just, it's been only like few months and then especially last few weeks, we saw the big drop of the prices in kind of like a more mature in the commodity, the memory chips. So now we have to kind of separate. So Taiwan and Korea as the beneficiary of AI development, because we see lots of Taiwanese the companies are playing the pivotal the roles in many different areas of the supply chains of AI development, while in Korean companies they are actually playing a very important role in memory side only. So if the memory side we see the more pressures on the prices going forward, even though the very advanced area will continue to do good, but the overall the sentiment is not very good for the overall memory sector. Then I think it's also another discount factor for the Korean market.
And you are overweight Taiwan, equal weight on China. What are you waiting for from China? Obviously, the whole market's waiting for any kind of number from the Central Economic Work Conference.
Right. So from this work conference, we do not expect to hear very detailed numbers or execution plans, but at least I hope and I expect them to talk about how important the boosting domestic consumption is. Of course, the investment side, just like we saw in 2008 or 2009, when they deployed a very large scale stimulus plan back then, it was much easier for them to deploy that much money because at the time they didn't really experience the overcapacity issues. But now they have to be much more selective, when they deploy the money in investment side, to avoid the further deflationary pressures from that overcapacity issues. So at the same time, this tariff issue driven by the Trump, so this basically they have to rely on the domestic demand consumption. to support a certain level of economic growth. So I think I expect to hear how important that is going forward. And then I think maybe next year, after the Trump comes in January, and then maybe in March, during 2 sessions, maybe they could kind of release more detailed plans for that. Yeah.
All right, Juhi, thanks very much for joining us this morning. That was Juhi Ahn, their CIO at Murray Asset Global Investments. And of course, we're just about 5 minutes away from the start of trade in Hong Kong, mainland China, and that big focus on what are we going to get out of the work conference this week. We've got those CPI, PPI numbers just a few minutes away as well. But to note some of the movers, and we're keeping a very close watch on what's happening with some of the contract drug manufacturers, because we are seeing them gaining this morning. They have been left out of a key U.S. defense bill. This is the Biosecure Act. The act would have sought to blacklist at least 5 Chinese-linked biotech firms, but that actually hasn't gone away. There's that absence of these names in that, and so we are seeing that relief coming through. What else we're tracking are some gold-linked names this morning, because the PBOC, which actually has been one of the major gold buyers, has been entering back into the market again, and so we are just keeping a watch on some of those gold miners in the session this morning, given that the PBOC has resumed buying gold this morning. What else we're tracking, of course, in the pre-market, as we said, it's that focus. What are we going to get out of the work conference this week?
That's what we're all waiting for, right? And I think Juhi mentioned it as well. We're trying to see whether we're going to get something now, or do we have to wait to Liang Hui, the 2 sessions, the National People's Congress and the CPPCC in early March. That's just going to, dare I say, upset the markets a little bit further if we have to wait until March to get some sort of number ahead of course, Donald Trump coming back into the White House on January 20th, on how much consumption-driven stimulus can we get to offset the threat of tariffs?
Well, I think sometimes it's that relative attractiveness, which markets just look relatively more attractive. And when you don't have that clarity coming... Exactly. The lesser of 2 evils, I guess. But anyway, yuan reference rate also to note, because we've seen it coming in at 7.1870, so another stronger than expected fix. And also just keeping a watch on some of the analyst actions this morning. A couple there to note from Goldman. We saw them cutting the Melco International to neutral, Samsonite as well. The price target at 28 there, and SAIC Motor reinstated to buy at Founder Securities. So that's it. As we said, CPI, PPI, those numbers are dropping in just a few minutes from now. So we're going to have those details ahead. You're watching The China Show, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kelly news, insight, and analysis live 2 times a day, every trading day. Balance of power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy, with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood.
And welcome back. You're watching the China Show. We have some breaking news coming across the Bloomberg terminal, citing Yonhap news agency that South Korea police are considering placing President Yoon under a travel ban. Of course, there was an earlier headline as well that they are not necessarily ruling out action against the former president. Now we're seeing that they are considering placing him under that travel ban. Of course, after last week, he had that 6.5-minute speech midweek where he declared martial law. He quickly rescinded that, but again has plunged South Korea into political chaos right now. He did survive essentially a non-impeachment vote on Saturday, but again, opposition parties are trying to reignite a impeachment vote as they're saying his actions last week were treasonous and illegal. So that is the latest on South Korea at this moment. We're also checking, of course, ahead of the market open. Right about now, of course, the CSI 300 was up on Friday, opening up just about 0.1% down, and the other sub-indices also trading sort of flat ahead of Wednesday, Bell, the beginning of the Central Economic Work Conference.
Well, Steve, I've got some good news.
What's that?
The PPI and the CPI figures have come in better than what economists had been expecting. So PPI, it's still in deflationary territory, but it's down 2.5%. The survey had been for negative 2.8. That's also better than the month prior of the negative 2.9. So again, that headline reading on PPI, contraction of 2.5%. CPI, again, actually, no, that is worse than expected.
It is worse. So that's a
2%
10th consecutive month of CPI inflation in low single digits and 26 consecutive months, more than 2 years of factory gate deflation at producer prices. Yes, 2.5 down is better than before, but still, it's a trend.
All right, well, let's get more on the trend and bring in Hui Shan now, Chief China Economist at Goldman Sachs. So you just heard us talking through some of the figures there. What's your initial reaction to the numbers?
I think regardless of whether it's in line with the consensus expectation or somewhat off, the whole picture is that inflation has been way too low in China for too long. And this is because prices are a good signal of how demand versus supply, how the balance of the two. And this is continue to telling us that we have too little demand versus too much supply. And therefore, it's a no-brainer that we need to strengthen the demand side of the equation and having the policymakers do more.
Yeah, how are we going to strengthen that consumer demand without a stimulus targeted at the consumer? Are there other ways? Because there is that lag effect as well from factory gate to prices on the shelves. So that's still quite some time if we're having this many months consecutive of deflation.
Right. I think, it's never going to be overnight. And even if the policymakers introduce strengthening policies on the demand side, it would take a while for PPI inflation to turn positive again. And we were just talking about this when we were putting out our outlook. We're expecting PPI to turn positive toward latter part of next year. And that at the time was below consensus. And when we were marketing onshore, investors were even more pessimistic about the prospect of a PPI turning positive. So this is getting to the difficulties of turning things around. On the one hand, it takes time. On the other hand, you also have investors being very pessimistic, and that's going to take even longer time.
Well, that's it. It's that perception and how much that plays into it versus the actual realities sometimes as well. And go into more details of what you learned, because as you said, your team was on the ground for about 2 weeks there visiting Shanghai, Shenzhen, Guangzhou and Beijing. And what did you sort of learn, and why do you think people were more pessimistic in saying that we actually couldn't see PPI turning positive until 2026?
I think a few things. When we were in China, say October, even early November, onshore investors were notably more optimistic because they think the top leadership has changed mind, and if you wait, there will be more stimulus coming this way. But this time around, late November, when we were visiting them, we sensed they're getting a little bit of uneasy because they haven't really seen very strong signals on the fiscal front, on the stimulus front. So they're still, compared to offshore investors, still more hopeful. But at the same time, we can visibly see that they're getting a bit uncertain and nervous about, is the 2025, the whole economic planning going to be as constructive and bullish as they were hoping for.
What are you looking for? What do you think the Central Economic Work Conference? Well, they're going to be very short on details. I've covered a number of these things. They give a very bland statement, but they also kind of set out economic policy guidance, if you will, going forward ahead of Liang Hui, the two sessions in March. But what do you think, given this continual persistent deflation, the threat of Trump tariffs, all this, what do you think they need to do and send a signal?
Yeah, I think this is a big feature of how policy making is in China. As you guys have followed China for a long time, even if they put out a set of statements because there's no numeric targets or fiscal deficit, all these numbers a lot of analysts want to see and digest. I worry that even if they sound supportive of dovish, and people are still going to hold this wait and see. I need to see the numbers. I can't just when you say we need to stabilize the properties market, how? When? Do you have specific fiscal numbers to back it up?
Promise fatigue.
Yeah, a little bit of that over the past year or two. So I do think that they are going to sound dovish. They are going to emphasize things that are top of mind for investors, whether it's a property sector, whether it's a consumption. But at the same time, part of me wonder, after these important meetings, highly anticipated, whether we're going to in a situation, let's wait for the two sessions.
What do you make then of the recent PMI data? Because that did show some improvement in the manufacturing sector. Do you think that's still that story of maybe exporters and front loading of orders ahead of tariffs? Or do you think that we are seeing, at least in some parts of the economy, an improvement?
I think the front-loading exporters speeding up exports, that is the one important part of it, because it's consistent with equity analysts and shipping companies are telling us. I think the consumer goods trade-in program that has been doing very well also supported manufacturing activity. But I think the underlying concern is that manufacturing has been very good, but manufacturing sector doesn't hire as many people as non-manufacturing services sector. And when you look at the employment and labor market, that's something we're concerned about.
Where does the latest stimulus really need to be targeted at? Because some would say the housing market basically depletes the confidence of the consumer because so much of household wealth is tied to property. So do you need to do much more on property, or do you need, I mean, Xi Jinping is not a welfare advocate. He's not going to give handouts of cash or vouchers or anything like that. Trade-in programs are his preference. But do we need to stimulate the actual consumer spending or housing or exporters as well, manufacturing?
I think at this point, given how strong Chinese manufacturing capability, how competitive Chinese goods are, I think the focus should be on services, on consumption, on labor market, on household income. I think that it is difficult, but helping the low-income households does go a long way, because low-income households have higher propensity to consume. I'm thinking even beyond autos and home appliances, thinking about other ways of helping families and households are the key.
Tariffs, we sort of just touched on a little bit earlier, but what's your expectations around that? Because I do notice that your assumption is that the average is going to be 20% tariffs. But again, going back to what you said about the roadshow with clients, they're also more pessimistic on that front as well.
Right. That's the key debate in the market. What will Trump do to Chinese goods going in U.S.? Our assumption is a 20% effective tariff rate. For some manufacturing goods like machineries, equipment, we do assume there will be 60% additional tariffs, meaning from 25% to 85%. But we also examined the 2018-19 experience. Trump didn't put a high tariff on consumer goods. So we put much lower rate of tariff going forward for consumer goods. If you blend it together, it's 20%. Percentage points that we are assuming in our baseline. Just to compare 2018-19, after all the tariffs, the effective tariff rate is only 10%. So adding another 20 is doubling what we saw in 2018-19. But that apparently is lower than a lot of onshore investors are expecting. They're thinking 30, 40 is more likely.
Okay. Hui Shan, also, let's talk about the capacity for China to retaliate. How many more, arrows are in the quiver for them to retaliate. And do you expect that? And what kind of dampening effect does that have on global trade, obviously, if we are entering into a protracted trade war?
Yeah, that's one of the most asked questions these days. I think some of the instruments Chinese policymakers used in the past, including currency depreciation, including retaliatory tariffs, are likely to be used again. We are expecting CNY to depreciate somewhat. But I also want to emphasize there could be other levers that Chinese policymakers could pull, including geopolitical factors and also supply chain. China is dominant in a lot of sectors, and thinking about rare minerals and rare earth and minerals restrictions, we are seeing signs of that happening.
Okay, Hui Shan, Chief China Economist at Goldman Sachs. Thanks so much for your time and your insights. Okay, coming up, we're taking a deep dive into how businesses are preparing for the impact of Trump's potential tariffs. Andrew Tam, CFO at Shoemaker Stella International, joins us later, together with CLSA research analyst Chris Gao. Keep it right here. You're watching The China Show, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings stick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities and to create a safe haven. We will not let that happen.
That was President Biden there following the ousting of Syrian President Bashar al-Assad. And let's bring in Middle East expert James Dorsey. He's adjunct senior fellow at the S. Rajaratnam School of International Studies. And thanks very much for joining us this morning, Jack. And I want to get, or James rather, and I want to get your view on essentially the events over the weekend. There's a lot of different threads to us to follow, but I see in your notes that you're calling this a tectonic shift in the Middle East.
Good morning. Indeed, I think this is a tectonic shift. It's a tectonic shift, in particularly given the fact that this punches a huge hole into the forward defense strategy of Iran. And what that means is that Iran will have to rethink its defense strategy and, in fact, probably rethink some of its policies. And that means a paradigm shift in the Middle East. Syria is no longer there as a major anchor of what the Iranians have called the axis of resistance, this alignment of non-state, armed militant non-state actors like Hezbollah in Lebanon. And one of Iran's major deterrence assets, the fact that it had Syria and the Lebanese militia Hezbollah on Israel's border, has now all but vanished.
Well, James, on the supply chains, if you want to call it that, Tehran also had this sort of land bridge through Syria to the Hezbollah in Lebanon. How significant is this if this is choked off?
it has been choked off for all practical matters, and it's very significant. One, it essentially breaks up the defense strategy of Iran, but also it significantly weakens an already weakened Hezbollah. What Iran potentially will retain in Lebanon is not so much an armed militia that is on the border of Israel, but a political force. And that, of course, changes Iran's options and leverage that it has.
And so, to the point of Israel then, because we've been tracking this morning how Israeli forces have seized a buffer zone in the Golan Heights following the conflict in Israel and Gaza then.
I don't know that this necessarily influences the conflict in Gaza. Keep in mind that the relationship between Iran and these various militia groups, particularly, for example, Hezbollah and Hamas, are very different relationships, and they're not Simon Says relationships. Hamas may or may not be aligned with Iran, but in terms of the war in Gaza, Iran doesn't have access. It can't supply. It can at best give political support. So I don't think that this in and of itself is substantially going to change things. In addition to which, Hamas has supported the overthrow of Assad in recent days.
Well, James, how do you read the different factions within Syria now that they've overthrown Assad? Obviously, he's fled the country. Are we going to get into tribal warfare, if you will, to put it into sort of crude terms? And do we know where their allegiances are going to be?
I think that's the big question. There are signs to be hopeful. With other words, we've seen Hayat Tahrir al-Sham, the lead rebel organization, and its leader, Abu Muhammad al-Jalani, be quite moderate in the way they've approached this. We haven't seen major looting. We haven't seen major acts of revenge. We haven't seen attacks on minorities. On the contrary, you've seen the rebels acquiescing in the departure of Bashar al-Assad from the country. And you've seen a reaching out in Damascus to the remnants of the Bashar al-Assad regime. That all of good positive signs. Now, having said that, you have an array of rebel groups, all of which are going to want a share in the pie. And how that is worked out and whether or not that leads to violence, we will have to wait and see.
What about Turkey's role in this? Do they emerge here as sort of a kingmaker?
I think it's wait and see. Turkey has clearly had relations with Hayat Tahrir al-Sham. It has relations with other militias. Turkey's while Turkey may very well want a relatively moderate, or in any case, not a non-jihadist Islamist-run government in Damascus, its primary concern, first and foremost, are the Kurds in the north. And there the question is what a new government, presumably in which Hayat Tahrir al-Sham plays a major role, what its attitude is going to be. It will want to restore Syrian sovereignty over all of Syrian territory, which includes the north where the Turks have a buffer zone. It's talked about inclusivity for all in Syria, and there's been some mention of decentralization, which could mean that the Kurds would get some degree of, or could get some degree of autonomy in northern Turkey, something the Turks would be fundamentally opposed to.
And Turkey obviously playing a key role in essentially as they share that northern border and the refugee crisis that has transpired over the past decade. But I kind of want to shift to the other major player in this region and the influence it has had on Damascus, and that is Russia. Obviously, Vladimir Putin is preoccupied with Ukraine. I'm not speaking on behalf of the Kremlin, but they kind of said, it's up to you now, Assad, essentially allowing him asylum, but not necessarily backing him in his time of need. What does this mean for Russia going forward, which has military bases in Syria?
Well, first of all, just as a matter of principle, I think that's true for Iran as well as it's true for Russia. It's very hard to defend a regime that has no apparatus to defend itself. In other words, if the military was falling apart, the Russians and the Iranians didn't have a lot of options. What is interesting going forward is that Russia has two military bases, a naval base and an air base on the Mediterranean coast. Losing those bases would mean that it loses its foremost military footholds in the Middle East and on the Eastern Mediterranean. And that is significant. Now, we haven't heard the rebels at this point yet speak about the future of those Russian bases. It's not inconceivable, I don't think we know, whether or not there was some deal that was cut in terms of the departure of Assad fleeing to Moscow and the future of these Russian air bases. What is certainly true is the Russians do not seem to be all that security concerned about it. In the days prior to the fall of Damascus, they advised their citizens to leave Syria on commercial flights rather than provide evacuation flights. And they've also said that there's no panic at the military facilities.
What about the role for the US to play here, if at all? We've already got a Trump post on social media indicating further just the isolationist policy that we might see in foreign policy. But do we see Washington's focus on counterterrorism, containing the Islamic State, shifting at all?
Well, I think what's good, there's been an emphasis already on the United States of warning that the vacuum in Syria, to the degree that there is a vacuum, should not be filled by the Islamic State. And I think the real question is going to be what U.S. policy is going to be towards whatever government emerges. On the one hand, you have a U.S. designated group, a group designated by the United States as a terrorist group in the lead in Damascus. But on the other side, this is a group that is trying to shed claiming that it has shed its jihadist antecedents, and also has framed its policies going forward as policies that would involve counterterrorism, which is in a sense trying to reach out to the U.S. concern with regard to groups like the Islamic State. So I think we're going to have to wait and see. The United States has great influence in Syria, not only because it has troops there, but it has troops in the area which produces or has Syria's oil wealth. And this is going to be a government that's going to have to focus on the rehabilitation and reconstruction of an economy in a country that was ravaged by more than a decade of war.
James, great having you and getting your insights in what is obviously going to be a prevailing story for us around the world for quite some time. James Dorsey of the Rajaratnam School of International Studies in Thailand. Plenty more ahead. This is the China Show, and of course, this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Taking a look at some of the movers actually that are gaining this morning against what is sort of a very flat session overall. But we do see Chinese biotech stocks that are rallying this morning because essentially it's what they've been left out of, not what they've been included in, but it's the US Biosecure Act. And this is a key US defense bill. These names haven't been included. So you're seeing that relief that's coming through in these names. Broadly, as we take a look at what's happening in Chinese equities this morning, again, as we said, flat, Hang Seng a little bit under pressure, but we had the CPI coming in a little bit of a gain, but still under that 0.5% mark.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Any of us in the room could have a stroke or develop MS or develop ALS, a condition that stops your body from working. We're all at risk of that. And neurology, I'm a neurologist. We've traditionally, it's been the field in medicine where there hasn't been many treatment options. And so neurotechnology is having this moment now in medicine where it's becoming kind of the final frontier of medicine and a lot of excitement, but the challenge with cracking the skull and delivering technologies that way is that the infrastructure is not set up for scale for applications of that technology. Cardiology has shown over decades that you can now deliver millions of stents or pacemakers a year. But so we're translating what's known from cardiac into neuro. And I think we're entering a period where the treatment opportunities for neuro delivered through a catheter into the brain are going to become vast.
weighs on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back to the China Show, taking a look at how the Hong Kong benchmark is faring 30 minutes into today's trading, and we're seeing some pressure coming through. Actually, it's a little bit outpacing the losses we see for the CSI 300, which is flat this morning, but it is just as traders digest really the events over the weekend. Yes, we've had the inflation figures coming through, but notable today as well is that property is leading the drop, and we have had those lines crossing from Xinhua, just another sort of piece ahead of the Central Work Conference this week, or Economic Work Conference, and they are looking at improvements.
Well, this is about the most vague headline you can get, but that's to be expected. Sometimes specifics are lacking out of Chinese statements. Xinhua saying China's regulators seek improvements to property market. Well, that's not moving markets right now.
No, but what could be perhaps moving in some corners is what's coming through on the inflation front, because if we take a look at long-dated bonds, for instance, we're seeing yields falling on the stronger PPI that came through. So this is actually better than what economists had been expecting for the reading. It's still in deflationary territory or contraction territory, but a drop of 2.5%. The estimate had been for 2.8% in negative territory. So a bit of an improvement from the month prior. Still, though, those question marks, because we track that 10-year yield under the 2% mark. And what does that signal to us about the health of China's economy, really? And this expectation around tariffs that come into play next year with President Trump, or elect Trump, back in the White House.
That's why we keep on going, meeting the meeting, waiting for some sort of guidance coming from regulators or policymakers after that big bang stimulus we got at the end of September. We haven't had that ever since. The markets have been kind of languishing ever since. So we're waiting midweek this week for that Central Economic Work Conference, if there's any meaningful headlines coming from that, or do we have to wait until the two sessions in March, the annual session of Parliament?
It's sort of wait and see on the China front. We've also got a host of central bank decisions this week. It's also a lack of uncertainty coming through in Korea's market as well, given we've got this instability around President Yoon. Yes, he's still in power, but really for how long? The events in the Middle East over the weekend not really doing much to dent Brent crude prices so far. You are just seeing them just a little bit higher, but certainly another one of our top stories this morning. So that's Asian equities here, but also going to our MLife strategist, Mark Cranfield, now in Singapore this morning. So Mark, we're going to get to the Middle East and to Korea in just a moment, but let's start off with the inflation figures and what stood out to you in those numbers from China.
It means that they really can't afford to relax in terms of the Chinese authorities. They've obviously got a huge job to keep on trying to get the economy back on track here. And to have deflation in the PPI for such a long period, a couple of years now, CPI even dipped lower, which is another very negative signal for them. They're really struggling to get any fire in the Chinese economy. So investors will be looking for some pretty sparking headlines this week out of the Works Conference. They really will need to have reassurance that they're not going to stop all those measures that were announced back in September. There was a lot of good talk there. PBOC had done positive things as well. But investors will need a lot more convincing that they're going to keep their foot down here on the accelerator and keep going right through into next year. Because otherwise, they're really going to lose momentum very quickly. They're going to lose the confidence of traders. And you can see it's pretty hard. The Chinese equity market goes up one day, down the next day. It's not really getting the traction that the authorities would like to see. So a lot of work for them to do. The economic numbers are not really supporting their case at the moment. So they're going to have to talk about fiscal deficit. They're going to have to convince everybody that they are willing to spend a lot more, that the deficit get wider, and then there will be hopes that they can easily achieve the 5% growth target for next year. Right now, it's not looking that good. They need to work harder on this, and they will be expected to give out some pretty positive sound bites this week when they meet and deliver their views to the world later in the week.
Mark, hold on one second. We're just getting more headlines coming from Yonhap News Agency out of Seoul. South Korea police say they could arrest President Yoon if conditions are met to do so. So obviously the Korea discount's getting deeper and deeper, price cuts slashed at the storefronts in Seoul as this crisis continues on. So what are you going to be watching for if this continues? If Yoon holds on, if there's not another impeachment vote, if police arrest President Yoon, what are we watching for from a market's perspective?
You can see there's a couple of things here that shows how investors really are very disappointed in the situation in Korea. If you look at the Kosdaq, it very rarely trades on relative terms below the Kospi, and yet that's happening. It's been many years since the Kosdaq was trading at a discount. All Korean stocks are trading relatively cheap compared to their regional peers, but the Kosdaq is really underperforming. And that's a pretty worrying signal because that's a lot of retail-based investors are tied up in that one. So that's not a really good sign. Even the Korean bond market is really failing to get excited. You would expect there would be a big haven bid for Korean local bonds, considering the Bank of Korea recently surprised with a rate cut, and they'll probably need to do another one pretty soon as well. So again, it just shows that there's very little confidence in Korean assets across the board, the currency, the equities, and the bonds, all underperforming at the same time. That's a pretty worrying signal. So we probably need to see a turn in each of those. Probably the currency first. That's probably the first place where people would start to show that they're a bit more confident on what's happening, then the equity market and eventually the bond market. But when you've got all securities aspects going in the same direction, that's a very worrying signal. The Korean authorities may even need to persuade the Bank of Korea to do an early rate cut, get ahead of their January meeting. Because right now, all Korean assets need some really big help from the government and the authorities.
Yeah, and we're actually just seeing the Korean won pretty close now to where it fell to when this unrest started at 14.44. But in the Middle East as well, because of course it's been a really stunning speed of events there over the weekend. Bashar al-Assad has fled to Moscow. As we know, there's a power vacuum now that's being created. But in terms of the market reaction, what are you tracking out of this, if anything, really?
We saw a small flip higher for gold. That's probably a sign that people putting a little bit more into a haven. It wasn't very much, but it did rise a little bit. We've not really seen much of a reaction in the oil prices. That would be the main signal where you would expect to see people, if they're nervous, you would expect to see that expressed in a higher oil price. Hasn't really happened so far. Even US Treasuries haven't captured much of a bid. So the thinking seems to be at the moment, it's a bit of a side issue. It's not central to what's going on in the world. We do have Federal Reserve meeting coming up pretty soon. That's by far the biggest swing factor for global markets. So they're much more concerned about whether the Federal Reserve will go ahead with an interest rate cut. We've got a CPI report this week. That's the last piece of important economic data the Fed will see before that. So really, it's much more about global central bank policy, and Syria, for the time being, is a bit of a sideshow.
All right, Bloomberg MLive strategist Mark Cranfield in Singapore. Thanks for joining us. For more on the Syria issues, Bashar al-Assad has fled to Russia after his government collapsed following a rapid advance by Islamist rebels. The U.S., meanwhile, has launched airstrikes as well on central Syria, hitting what it says were dozens of Islamic State targets.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
All right, let's bring in Bloomberg News desk editor Jill Deesis with us. So Mark Cranfield called it a bit of a market sideshow, but obviously geopolitically, this is a critical region and a critical developing story over the weekend. There's a power struggle potentially going on within the country, and also a struggle of influence of various parties, whether it's Iran or Russia.
Yes, that's right. I mean, as President Joe Biden just said there, I mean, we've certainly entered just an increasing period of risk and uncertainty within the Middle East here. At this point, I mean, the big concern with Syria right now is exactly what happens now that we've had this very sudden fall of the Assad regime. So the lead rebel group involved here, that's HTS, I mean, it's a little bit uncertain as to where they're ultimately going to go and what they ultimately do in terms of any kind of leadership. The leader of that group has said that he wants to work with the remaining remaining prime minister within Syria to kind of see where things go. But I mean, look, there's a lot of concerns, at least coming from the U.S. and its Western allies over what exactly happens here. I mean, Syrian rebel groups have historically, tended to be, much more sort of fundamentalist, extremist. So there's some concerns about what that ultimately looks like in the event that some of these groups take leadership. Now, certainly HTS has said, they're trying to project themselves as a bit more of a moderating force within the region. But again, it's just really not clear where that ultimately goes. I mean, whether we're going to see something as we did in Libya many years ago after, the death of Muammar Gaddafi, and whether it means that we're carving up Syria into different spheres of influence here.
You read my mind, because I was thinking the exact same thing, the Arab Spring and the destabilizing effect that had with basically removing somebody who'd been in power for so long. There was stability in the tyranny.
Yeah, I mean, that's exactly it, Steve. I mean, when you're looking at this with this type of situation, I mean, certainly, the U.S. is no friend of Assad. And I mean, you just heard Biden talk there about the fall of this regime. Obviously, the U.S. isn't really intervening here. But at the same time, yes, I mean, when you bring in all of these different forces that are sort of jockeying for power, whether that be the rebels, whether that be, Turkey, perhaps. I mean, again, you've got these outside forces, Russia and Iran, which have historically been allies of Assad, obviously didn't intervene here, but still do have interests within the region and within Syria. That's sort of what's leading to all of this sort of projection of risk that we still have to kind of figure out and manage through, the coming months, certainly.
So who becomes the most important power broker then in this situation? Because Russia's already indicated that they don't really have the capacity, neither does it seem Iran does. There's Israel that's already entered territory. There's Turkey that's provided support to HTS. Who are the most important players to watch?
I mean, certainly, Belle, I think that those ones are still important players, even if they're not directly, even if, say Russia, for example, isn't directly intervening. I mean, it's still important to note that they have bases within Syria. So we'll have to see what happens there. Russia certainly has a motivation to protect its interests within Syria, although obviously they're occupied with the war in Ukraine. And I mean, you can say similar of Iran in sort of, working with, the militia groups that are fighting Israel right now. So there's a lot of people here that are still, and obviously Turkey, sort of continues to be involved here. So, I mean, there's a lot of groups that do have interests here, but this, the toppling of this regime is certainly coming at a time when you've got a lot of groups that are have sort of their own interests or their own conflicts that they have to manage. And so that's, again, just adding to some of this instability.
There's U.S. military presence in the south as well.
Exactly.
Yeah, I think about 900 troops that have been stationed there. All right, Bloomberg News Desk editor Jill Deesa. Certainly the speed of the developments has taken a lot of people by surprise, but still ahead on the China show. We're actually going to be shifting focus a little bit to Trump tariffs, of course, really the bread and butter of this program, but taking a deep dive into how businesses are preparing for the impact of those levies on Chinese businesses in particular. Stellar International CFO Andrew Tam will be joining us, as well as CLSA research analyst Chris Gao. Plenty more ahead. This is Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
And welcome back. You're watching The China Show. We have more headlines crossing out of Seoul, where, of course, there is a political crisis still unfolding into week two, following, of course, President Yoon's surprise declaration of martial law last week and the political implications since then. South Korea police are saying they could arrest President Yoon if certain conditions are met. That, according to the Yonhap news agency, they are considering, according to the Yonhap, placing President Yoon under a travel ban. And also the South Korean police again are saying, or according to Yonhap, they're not ruling out questioning Yoon over treason. And that is something the opposition parties have levied against President Yoon following that declaration of martial law that they claim was treasonous and illegal. Just to catch you up, Prime Minister Han Duck-soo will manage the nation's affairs going forward as the ruling party prepares for an orderly exit plan, and the opposition is possibly trying to line up another impeachment vote. Obviously, that one was scuttled on Saturday when essentially the ruling party abstained from that vote. All right, let's bring in Troy Stangoron, Hyundai Motor Korea Foundation Center Director at the Wilson Center, which is chartered by the U.S. Congress to advise on global affairs. So thanks for joining us, Troy. Where do we go next in South Korea? Is it almost a foregone conclusion that President Yoon will need to be either forced out or step down?
I think that's the case. We're at a point to where his party, the People Power Party, is trying to find a way to maneuver him into resignation. They would like to try and avoid another impeachment, because this would be the second impeachment of a conservative president in 8 years. But I think where we are right now, you're seeing there's questionable constitutional issues going on in terms of trying to remove his duties from him when he hasn't been removed from office. But this is essentially the message that the PPP is sending, is that the Prime Minister, Han Duck-soo, will take and be running the government while the president will be taking and moving towards resignation. And so I think it's either resignation or impeachment at this point.
But in the meantime, that sort of creative solution around who will be managing which affairs is certainly attracting criticism from the opposition party, at least. And it does seem like a lot of people Koreans in the streets as well, who are saying that it destroys the order of the Constitution. What's your take on that?
There doesn't seem to be an avenue for taking the president's powers away within the Constitution unless he is impeached. And so this is a real question, I think, and it's a constitutional challenge, because we're at a point to where people are trying to take and essentially design a process on the fly, and rather than taking and following the process the Constitution has put in place. And so to an extent, this would have been much better if the PPP had not boycotted the impeachment vote on Saturday and this had already been resolved. We have another impeachment vote set for Wednesday. And from a constitutional perspective, that would probably be the best course should the president not resign before then.
Troy, you've had some time to think about this. I mean, is this going to have a lasting impact on South Korea and the so-called Korea discount and just the confidence outsiders have in the nation? Or is it more procedural, whether, the police arrest him, investigate treasonous behavior, he's ousted or he's impeached and they have a vote and they move on? Or is this going to have a deeper-seated ramifications?
I think we're going to see short-term implications. Markets do not like uncertainty, and we have political uncertainty right now. We also have a political vacuum at the moment. But if we look back to the Park Geun-hye impeachment 8 years ago, There wasn't much impact on the economy in the medium to long term. I think once we have certainty return here, be it either through an impeachment or resignation, then we know the process going forward. If it's an impeachment, the Constitutional Court will have to verify the impeachment, and then you'll move into a 60-day election period. If the president resigns, we'll move into a 60-day election. So I think once we have that certainty, the economy will start to normalize.
Democracy is still a relatively young concept in Korea. Do you see these events as a signal or symbol that democratic processes are working? Or do you think that it's a concept that has not fully taken hold yet in some parts of government?
I think democracy is something that we're always working on. This is a situation to where it's clear that President Yoon misinterpreted his powers and reached very far beyond them. That being said, the fact that the National Assembly, including, I should point out, with members from his party, quickly voted to rescind the martial law authority, and the president did eventually, within about 3 hours, follow through, shows that democracy is strong and holding. But it's something that I think Koreans are going to have to think about in terms of how did we get to this point? What types of guardrails might we need to put in place to prevent this from happening in the future?
What's your biggest takeaway as far as the geopolitical implications if, for example, he is ousted or there is another vote and the opposition comes in? We know the opposition leader Lee has talked about wanting closer economic ties to China, possibly even, I wouldn't say a sunshine movement, but at least some sort of warmer relations, if you can call it that, with North Korea. But that also puts into question the trilateral arrangement between the U.S., Japan, and Korea that President Yoon has fostered. How do you see the broader implications?
So the immediate implication is that regardless of what happens here going forward, there's going to be a political vacuum, and that is going to make it difficult, whether it's through the impeachment process or resignation, for South Korea to really do anything on the international stage, likely for the next 60 days to potentially up to a few months. And so in that period, that means they're not going to be able to engage the Trump administration. They're not going to be able to take and engage North Korea. And they're not going to be able to take and engage with China. I think that is the immediate ramification of all of this, is that you're going to have this vacuum, which will prevent the government from engaging its partners. In terms of policy after that, in any short election, there is a very strong possibility that Lee Jae-myung would win. It's not a certainty, but he would have a much stronger case, given that he just barely lost the last election. If we look at this in terms of policy, the Yoon administration was already trying to take and repair some of its economic ties with China. So I think you might see subtle shifts further in that direction, but I don't really see much change in the course of direction. In terms of North Korea, I think one of the real difficulties here is that Pyongyang and Moscow have a very tight relationship, one that I think is tighter than many people want to acknowledge. And there really isn't scope, I think, in the absence of the end of the Ukraine war, for South Korea really to do much on the North Korea side of things. And then on the trilateral, I think a lot of this will depend on who the next president is, how committed they are to better relations with Japan, and also, to be honest, how committed President Trump will be to take and improving the trilateral as well. And depending on how that plays out, will really, I think, determine what the fate of the trilateral is going forward.
So whilst there is that political vacuum that's in place, do you think that Pyongyang is likely to take advantage of that in any way, and especially given its very close relationship with Moscow?
I think we could see North Korea try to take and deepen divisions within South Korea, perhaps taking and trying to play within domestic politics. But in terms of any type of kinetic provocation, I think that's unlikely. Right now, we have over 10,000 of North Korea's best troops. They're in Russia fighting against Ukrainians. Much of North Korea's artillery, ballistic missiles, has been shipped to Russia for the war. So I think it would be very precarious for North Korea to try anything militarily right now. But would they try to take and engage in terms of trying to deepen political divisions in South Korea? I could see them trying to take that step.
Troy, thanks so much for those insights. That was Troy Stagneron there, director at Wilson Center's Hyundai Motor Korea Foundation Center in Washington. And we'll have a lot more ahead. This is Bloomberg.
Because I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
You're watching the China Show, and you're also seeing Chinese equities there just flipping into positive territory for the most part. So we had those CPI figures coming in earlier. CPI did worse than what economists had been expecting, so a gain of 0.2%, certainly very anemic there. But PPI did better than what economists had been expecting, still in contractionary territory, down 2.5%, but better than the survey had estimated at 2.8% negative. So that's the market reaction there. As we said, benchmarks now turning mostly positive. Some of the movers that we're tracking today, well, NetEase is one of the ones that we've been focusing on because it's very much that story around that gaming renaissance that we see in China. Actually, Chinese games, it can be an antidote to weaker economic growth, can actually be the time at which gamers do see better numbers. But we are seeing NetEase there gaining because analysts are saying its Marvel Rivals game has made a strong debut, and so that bodes well for future monetization. Gold miners to track as well because we've seen the PBOC back into the gold markets, adding bullion to its reserves in November. So it had been a 6-month pause. They've ended that and buying 160,000 fine troy ounces of gold last month. So clearly there's that diversification plan. You're seeing those gold miners that are moving to the upside, Steve.
Good safe haven with a lot of geopolitical risk going around the world, as well as, all those gamers, when the economy's going bad, stay at home and shoot people.
On your computer.
On your computer,
yeah.
Right.
Let's make that clear.
Call of Duty.
But that is some of the things that we're tracking this morning. As we said, CPI figures have really been the headline for us this morning. Inflation's still not doing great, but that gold story also part of the efforts from the PBOC there, boosting gold prices. And you've had the likes of Goldman Sachs, for instance, saying it could reach $3,000 an ounce in the course of 2025. But that's it as we track Japanese equities going into their lunch break just ahead. This is Bloomberg.
Your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 11:29 a.m. in Tokyo, and Japanese markets traders, they're just about to go into their lunch break this morning. We are seeing the Nikkei 225 a little bit in the green today, as is the Topix up 0.4%. The story really in Japan has been around the economy this morning, because we had that GDP reading coming through, growth of an annualized pace at 1.2% in the 3 months through September, so better than what economists had been saying. And it certainly supports that view that the BOJ may need to hike rates when it meets next week.
Yeah, that would be interesting, obviously. Chinese Premier Li Qiang, meanwhile, we're moving to China, has taken a swipe at measures to restrict trade as Beijing braces for potential tariffs from a second Donald Trump administration. Without naming the U.S. directly, as they rarely do in these kinds of speeches, he spoke at a gathering of international organizations an hour ago about the risks to globalization.
If we look at the obstacles holding back economic globalization, some countries are easily resorting to high tariffs and erecting barriers. And we're seeing more and more trade restrictive measures.
Chinese Premier Li Qiang there. Now to our China Decoded segment, and we're taking a deep dive into the potential impact of Trump's threatened tariffs on China. Companies including battery maker CATL and EV industry leader BYD are already adjusting plans to move production to places leaving them less exposed to those levies. U.S. companies such as appliance giant Whirlpool and shoemaker Steve Madden are also warning the new taxes would raise the cost of their goods. Trump has now admitted he can't promise Americans that prices won't rise.
I can't guarantee anything. I can't guarantee tomorrow. But I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China. We took in hundreds of billions of dollars, and we had no inflation. I'm a big believer in tariffs. I think tariffs are the most beautiful word. I think they're beautiful. It's going to make us rich.
Earlier, we also spoke to Hui Shan, chief China economist at Goldman Sachs. She talked about the impact of potential U.S. tariffs on China's economy.
Our assumption is a 20% effective tariff rate. For some manufacturing goods like machineries, equipment, we do assume there will be 60% additional tariffs, meaning from 25% to 85%. But we also examined the 2018-19 experience. Trump didn't put a high tariff on consumer goods. So we put much lower rate of tariff going forward for consumer goods. If you blend it together, it's 20%. Percentage points that we are assuming in our baseline. Just to compare 2018-19, after all the tariffs, the effective tariff rate is only 10%. So adding another 20 is doubling what we saw in 2018-19.
Let's bring in our guest to discuss this. Andrew Tam is CFO at Hong Kong-listed shoe and leather goods maker Stella International, and also with us is CLSA research analyst Chris Gao. We can start off with you this morning, Andrew. A business that's working with very well-known names like Balmain, Moncler, Jimmy Choo, Nike, Under Armour. How are you thinking about this tariff impact?
Yeah, so President-elect Trump was a president in the last administration. So almost 5 years ago, there was a tariff increase then. And actually, most of our customers have actually already adapted and thought for a plan B. What would happen if tariffs further increase? So it's 5 years now. If there's tariffs again at a higher rate, people are pretty well planned. So when we look at a China production, most of our production actually now is all originate for Europe. Okay. The other aspect is actually China for China. So a lot of the brands still look at China as a consumer market. That's still a growing market. So what they have done is transform their production for a speed to market, faster changing demand Chinese market. So that's number one. But two is also a lot of the manufacturers themselves have migrated overseas. We expanded to Vietnam, Bangladesh, Indonesia, also Philippines. Half of production is in Vietnam today, and we've been there for almost 3 decades. And I think this trend of moving some of the production from China to a newer area will continue, I think, over the next few years.
But how much of a margin squeeze is there going to be for the manufacturers, and how inflationary is it going to be on the end price in the United States?
That's a good question, Stephen. So when you think about across manufacturing, I don't imagine any manufacturing earning more than a 20% net margin basis. Okay, so if you have a tariff, anything more than 20%, most manufacturers won't be able to support it. So typically the tariff is passed through at the end of the day through the supply chain to the end consumer. Because between the X factory cost from the manufacturer to the end retail price, there's almost like 75% margin. Okay, typically 3 or 4x the price. So there's a lot more margin to pass through to absorb on the consumer side of the equation.
It's not just, of course, tariffs that could apply to Chinese-made goods. It's tariffs that are on other countries as well. And the US has made it clear that it wants to close those loopholes. How much are you actually weighing or factoring in tariffs? What's the percentage point that you're working with for your goods?
So, typically I would say tariff. Customers will work with them to basically source in other areas to make sure that we can diversify the production. But really, most of the tariff is really passed on to the customer, which then will ultimately pass on to the consumer. But when you have a scenario where there's tariff around everywhere into China, goods into US, it just creates this weird dichotomy where goods are cheaper outside the US, and you get a lot of travel purchases for Americans traveling overseas, or logistics will be a big business where things can get around that kind of tariff system.
Let's bring in Chris. You've just been listening to this. What's your first take, essentially, on the impact, not only of the threat of tariffs that we are hearing right now, and that's how the market's responding, and supply chains are adjusting perhaps already, but what's going to be the impact of the increased tariffs?
Okay, thank you, Stephen. So before I answer this question, I would like to take a step back.
Sure.
Regarding this tariff impact. We would like to see how the situation is different versus what it was in the year of 2018, 6 years ago, right? So the first difference is this time the tariff is under a global context, right? So it's not just between China and US. It is on the all goods imported to US, and also there will be some additional tariff between China and US. That's the first thing. And the second difference is, along with the 6 years development from 2018 to right now, actually China has been seeing lower reliance on the US imports among all the China exports, right? Apparel can be a very good example. And the third thing is, actually all of the companies, OEMs, no matter if it's a China company or a global company, has becoming more resilient, more adaptive over the past 5 to 6 years. So of course, in 2018, we have trade tensions between US and China. And don't forget, we also have pandemic impact, which caused disruptions in supply chain, in logistics, etc. And the survivals requires companies to become more adaptive, to diversify the production base, to make themselves more flexible in terms of everything, right? So definitely, going back to the direct impact, of course, if there will be additional tariff globally, there will be a rising cost base of all the brand customers, right? And under this circumstances, the brand need to make a very critical balance between market share, between price stabilization, and actually the profitability, right? So going to the next step is we will need to see if the brand could really just adopt a very straightforward and the easiest way, like the price hike, or they will think of other ways to better mitigate the risk while protect the profitability, while protect the ecosystem of the value chain.
You talked about the global tariffs, and Andrew talked about diversifying places where you manufacture, whether it's Vietnam and elsewhere. But part of the proposals, I guess, is to close the loopholes of third nations, of Chinese products going to or being made or shipped, re-exported through other areas. How does that impact then a company like Andrew's, which is diversifying its manufacturing base? You are a Taiwan company, but based in Hong Kong, is that correct?
We're listed in Hong Kong, but most of our operations in over Southeast Asia.
Yeah. So from the current, tariff framework on the table, we can see that basically a 20% global tariff planned for all goods imported to the U.S. While for China, it will be a 60% as a preliminary plan during campaigns of the Donald Trump president elected, right? So we'll see that for China's tariff, it will still be higher than that of global. So actually, diversification of the production base is also very necessary right now. And also in terms of the cost structure, we definitely see the structural trend that diversifying the production base to more cost-efficient locations with actually more labor advantage is also better for the OEMs as well as brand customers in the long run. So this is still a very necessary step. And in terms of the ways to actually better address the balance between price stabilization as well as profitability. Of course, brand will think of other ways to do. Firstly, is to optimize the cost structure, brands can actually optimize the product mix, developing more high margin businesses so the structure can be better. And secondly, of course, enhance the global sourcing capability. All right. And actually, all of these could go first before brands finally decided to maybe pass on some costs to consumers. And this could be a more sustainable way. And all in all, we think that although this could be a challenge globally for the tariff impact, we also think this is a real opportunity to screen out outperformers.
So how are you thinking about this, Andrew, then? Because all of these sort of measures to try and counter the tariffs, they kind of sound expensive. And so they're going to be something that impacts your bottom line. Chris just mentioned about trying to find those higher margin products. Does that mean you lean more into the luxury brands that you work with as opposed to some of the cheaper products?
Actually, for most of our customers on the luxury side, they're mainly European customers. So most of the product do ship to Europe, which is kind of outside this U.S.-China, say, tariff. But more importantly, again, our production, we just want to shift it from a place where, if there's a high Chinese-U.S. tariff, to a production base where there is no tariff to the U.S. or a much lower tariff. And that will help our customer kind of solve that problem as well. And we're always looking for new places to expand to as well. I think there's always geopolitical risk, tariff, friction. What you really want to do as a manufacturer is diversify your production base as much as possible, so it gives your customer a way to load balance on these kind of issues.
I have a question about the Europe story then, because we kind of see right now there's that pressure coming down to car companies in China to diversify their production bases to Europe. Would you also look at Europe as being a basis for production there?
We have actually, in fact, we think from the footwear, handbag, accessory perspective, Italian makers are the best. Okay, there's no doubt in terms of quality, and we've always actually looked at places to expand our manufacturing in that area as well. So we'll continue to look. I think if the opportunity exists, we'll definitely do something there.
Let's bring up that full screen graphic in using television jargon there to see the different customers that you have. As a preface to my next question, essentially, from my understanding, especially for Americans, when they've set up the OEM factory networks here, they really do put a lot of pressure on the manufacturers to squeeze their margin and basically shave costs. So there is not an inflationary side to it. But what are you hearing from your customers, as you see on the screen here, as far as their ability to raise prices?
For our customers, we are great partners for a customer. We're in long-term business with them, very strategic. So what we always do is work with them on how to get around product design to lower costs if there's necessary to potentially increase cost from the tariff position. So I think design, product development, re-engineering is a big part. Okay. But second is really, again, helping them, giving them production for goods that are shipped to US in basis the low tariff. If they're goods that are shipped to Europe, because all these brands are global brands anyways, we'll manufacture them in China instead. So we'll help them get around that issue, actually.
Chris, how inflationary is this going to be? Any final thoughts you have?
Okay, so if you look at the US CPI data, starting from 2017 to now, actually, if you can find out that during the year of 2018, 2019, actually the upward trend of CPI is not very significant in reality, right? So that actually provides a little bit of proof to our thoughts that if you decided to pass on the entire tariff pressure to the customers, maybe that will not be the 100% portion. Maybe you cannot finally necessarily avoid adding price, but brand operators would definitely try other ways to optimize cost structure first, right? So this way also includes actually expanding product mix, actually includes saving from other areas of the the cost base like logistics, warehouse. These are all the capabilities that brand customer has been developing. And also for OEM, apart from that, making their entire cost structure more efficient by diversifying product base, and every manufacturer are also developing automation capability, which could also help boost productivity. Yeah.
All right, Chris, great insights. That was CLSA research analyst Chris Gao alongside Andrew Tam as well. Thanks very much for your time this morning from Stellar International, the CFO there. We're going to have plenty more ahead. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Bringing you the latest on developments in Korea. We're hearing from local media there that prosecutors are searching the martial law special headquarters. This is after President Yoon survived the impeachment vote over the weekend, but certainly that pressure is building for him to step down or be forced out. And we've also heard from the country's top financial watchdog, who expects a corporate governance and shareholder return initiative to return. This is, of course, talking about the Value Up program, very much in question of how that proceeds from here. Governor Lee Bok-yoon spoke with us exclusively, and that was before the failed impeachment vote against President Yoon on Saturday over this weekend.
Regardless of the political situation, this economic team, Financial Authority, Minister of Economy and Finance will be here for a while. I'll be here for a while. My term
ends in June.
June, right? And in the meantime, we'll just value program. The essence of value program is that for example, the price of financial sector stocks have fallen a bit last couple of days. They're afraid that the banks and the insurance companies still can have the kind of discretion to make dividend or make buyback purchase of their own stocks. So we like I said, even the opposition party is quite strong about this pro-investment program. And myself, including myself, the economic team will be here at least a year or so. And the ruling party leaders, they're also quite focused on this capital market initiatives. That's why they wanted to launch this revision to Capital Markets Act So everybody's just supporting this program, regardless of their political orientation. So it's just how it is done and the speed of the whole value program. So that's the little difference that might happen.
And you need that credibility from foreign investors at a time when you have political unrest and potentially more instability in the markets. Do you think there's a role for the National Pension Fund here to play? Because you have talked about wanting them to be more active when it comes to market reforms.
MPS has been playing a very significant role in Korean domestic capital market, and but I don't think the government can persuade MPS to have more in any certain individual, company or any industry. Things doesn't work that way, but they have this gradual process of changing their portfolio, to my understanding, and what's the ingredient of the whole program is that the proliferation of the domestic capital market is essential to MPS's agenda. That MPS is designed to protect the pensions of the Korean national people, because the international portfolio is very important, and that's why MPS is going abroad these days. But still, the one market, because all the dividend will be made in Korean won, no matter what. So the one market, one capital market, is very important to flourish.
Should they be more active then in times of turmoil?
They will, but not in a very short time. But that's why we didn't talk to each other. But to my understanding, they increased their portfolio these days, bit by bit. I think that has something to do with that.
And that was Korean Financial Supervisory Service Governor Lee Bok-yoon speaking exclusively in Seoul to our own Sherry An. I just want to check the Korean assets this Monday morning. As you can expect, it is down. The Kospi is down 2%. The KOSDAQ down 4%. The Korean won as well has sunk nearly 1%, down 0.9% as this political drama. There's no end in sight right now. I don't want to get over dramatic, but again, there's no resolution yet after that impeachment effort by the opposition failed on Saturday. But there is mounting pressure for President Yoon to possibly step aside. All right, plenty more ahead. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep winning World Cup. This is a three.
As the economic picture
covering the intersections of Hollywood.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
And welcome back. You're watching the China Show here on Bloomberg. Here are some corporate stories we are host as its next CEO, succeeding Shane Elliott, who is retiring after 9 years in the role. The former HSBC banker will take up the job next July and will also join the ANZ board as an executive director. Matos joins after scandals this year over alleged trading misbehavior and bond market manipulation led to senior executives taking compensation cuts. Well, U.S. Federal Appeals Court has upheld a law banning TikTok from next month unless its Chinese parent ByteDance sells the video sharing app. TikTok indicated in a statement on X that it will appeal to the Supreme Court and expects the justices will oppose the ban on free speech grounds. A ban would kick in a day before President-elect Donald Trump takes office.
Taking a look at the market action this morning, starting here with safe havens, and actually these aren't reacting too much. You're seeing the yen fairly flat, not much move coming through, and gold just fractionally higher, though we did see the PBOC starting gold purchases again, so could also be weighing on prices or feeding into prices. But it is certainly the major geopolitical story over the weekend because we saw Bashar al-Assad fleeing to Moscow, the end of what's been more than a century, or half a century rather, of family rule there. Certainly that power vacuum that's being created in Syria as well, and the question of who are those people on the edges of that are going to really take a leading role in the next government.
You know, at the top of the hour, Mark Cranfield of MLive essentially said as a market event that what's happening in Syria is a non-event. You're getting much more reaction still what's happening in Korea.
Yes, that's right. I mean, the South Korean President Yoon facing intense pressure to step down. There's a lot of public anger. The opposition has rejected this sort of plan in the interim that's being proposed by the leader of the PPP. So that is also having an impact. Also tracking what's happening in Chinese equities. We've seen those moving higher. PPI coming in still in negative territory, but better than feared. More ahead. This is Bloomberg.
Iya bang, di rumah bang saya bang. Surat yang mana bang? Dari siapa? Tidak ada.
Where do you think the tech world is going? Is artificial intelligence going to eat up the rest of the tech world? And where do you think the future of technology is going in Silicon Valley and elsewhere over the next 5 or 10 years?
Well, I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea of what it is, but actually technology is changing different industries at different paces in so many different ways. And if you think about the things, what was technology like 20 years ago before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about all those things, and where is that going to go beyond this? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is a part of every industry, and it's actually going to increase productivity and actually make our lives better.
So you think technology is still going to be centered in the United States, largely around the Silicon Valley area, or is it going to change?
I think that what's amazing about what technology has done over the last 20 years also is that, now you can start an app anywhere in the world. You can live anywhere. You can have, AWS, and you can set up and not have to have a system administrator or a server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring technology together any place.
Saya usahakan pagi lah jam 9, jam 10.
In case you missed it on Bloomberg, The China Show,
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They're pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The open, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome to Insight. I'm Sherian in Seoul. The top stories this hour. The U.S. strikes Islamic State targets in central Syria, with Bashar al-Assad fleeing to Russia as rebels topple his regime. Israeli ground forces reportedly crossing into Syrian territory for the first time since 1973. Korean stocks and currency slide as pressure intensifies on President Yoon to step down, despite avoiding impeachment. Police reportedly saying he could face arrest under certain conditions. We'll bring you analysis on the investment and geopolitical implications of these fast-moving events with the Atlantic Council and control risks. Plus, we're keeping a close eye on markets as China's consumer inflation decelerates, while growth in Japan is revised higher ahead of next week's BOJ decision. Our top story today, Syrian President Bashar al-Assad's regime has been toppled after lightning rebel advance, putting an end to more than half a century of his family's rule. Russian state media says Assad has fled to Moscow, where he's being granted asylum. Meanwhile, the New York Times says Israeli ground forces have crossed into Syria for the first time since 1973. For more, let's bring in Bloomberg Horizon's Middle East and Africa anchor Jumana Borsechi. Jumana, so you're in the UAE right now. You're looking at how these developments might unfold and affect Middle East power dynamics. I mean, in a way, this happened very fast, right? I said lightning round, but also in another way, he managed to cling on to power for years, even after a revolution and an uprising against him more than a decade ago. How are Middle Eastern powers looking at this now?
Yeah, well, you name it. I think many people in the region can't even think of a region without the Assad dynasty. Both the father, Hafez al-Assad, and his son, Bashar al-Assad, have been at the helm of the Syrian regime since the 1970s. So it's been more than 50 years. And I think the speed of the decline of the regime in the last 10 days really took people by surprise. Even people within Syria didn't expect it to happen this quickly. And so now the question is, what happens next? And of course, the rebel groups have been led by one particular group called Hayat Tahrir al-Sham, HTS as they're known for short. They have affiliations, and their origins were with Al-Qaeda. There is still actually labeled group, even though in recent years they've been trying to sort of shed that image and promote more of a moderate image. So lots of questions about what is going to happen next. And given the fact that even the rebel landscape is so fragmented, it's not even clear who is going to be leading and where governance is going to come from once the transition of power actually does take place. So for many countries around the region, specifically we talk about the GCC, and obviously in the UAE today, the mantra over the past 12 months, and especially since October 7, has been de-escalation, stabilization. Yesterday, we heard from Dr. Anwar Gargash. He was speaking at a forum in the region, warning about the potential ensuing chaos and instability that could come should there not be a peaceful transition of power. He warns about the potential uprising of some of these extremist groups similar language coming out of Saudi Arabia. So yes, people were surprised at how rapid the decline of the Assad regime took place, but at the same time, lots of questions and fear about what is to come.
And we know that for years, the U.S. has been providing covert support for Syrian rebels. That stopped around the time that we had the Trump administration. What are the immediate regional security risks as the Trump administration is coming back into the White House?
Well, there are so many regional security risks given how many different countries had their hand and were playing a part in Syria and the continuity of the Assad regime. And the fact that it actually was able to fall so rapidly is also a reflection not just of the weakness of the Assad regime, but also its allies. They were being propped up by Iran, by Iranian proxies, by Hezbollah fighters during the civil uprising, and of course by Russia as well. Russia has both a naval base and an air base on the coast of Syria. So the fact that these allies were not able to come to Assad's rescue this time around is probably also a reflection of the threats that they're under, and the fact that the Iranian regime has been on the back foot, Hezbollah severely debilitated given the war that is going on with Israel that has currently stayed a ceasefire, but managed to really debilitate a lot of their military arsenal and their equipment. And similarly, you can say the same about Russia being embroiled in a war in Ukraine. So the fact that the Assad regime was able to decline so quickly, or the rebels were able to take advantage so quickly, is a reflection of broader dynamics. In addition to that, the U.S., and we heard this from President Biden yesterday, says that they do plan on maintaining those 900 troops in the country, mainly because they're worried about the resurgence of ISIS threats. These are extremist groups that, of course, the U.S. and the whole world were fighting against a decade back, and there is a fear that maybe these extremist players could come in to fill the vacuum once more. So there's no inclination from the U.S.'s side that they're looking to remove those troops. And then finally, you think about Israel watching everything that's going on. Overnight, the reports that they are sending troops to the buffer zone around the Golan Heights, again, on concerns there that that vacuum could once again be filled by some of these militias and armed forces. So it definitely is a period of transition, lots of questions, and probably more questions than answers at this point.
Yeah, we'll try to get some of those questions with our next guest. Bloomberg Horizon's Middle East and Africa anchor, Jumana Borsechi, as we're now trying to bring in Kirsten Fontaine-Rose, non-resident senior fellow at the Atlantic Council. She was senior director for the Gulf at the U.S. National Security Council in Donald Trump's first administration. Great to have you with us. What are you expecting the Trump administration to do once it gets established in the White House, and how things play out in Syria and the rest of the Middle East?
Well, Sherry, that really depends on where this conflict sits by the time Donald Trump is inaugurated. That's over a month away. Who knows what could have played out on the ground by then? But Donald Trump has made it clear in a tweet that he believes the U.S. should not get involved in this, that it should stay out and watch this play out. That means this could go either way, because we have seen the panic that has ensued in Europe as a result of that statement, and in countries like Egypt and Jordan, which have a lot at stake because this conflict is so close to their border, and they've been quite involved in the past 5 or 6 years in political talks with Syrian opposition. But then we've also seen countries in the Gulf respond to the Donald Trump statement by saying, well, this looks like we have to take matters into our own hands. And that could be in the form of either supporting rebels on the ground or of bolstering Assad out of the fear that an extremist takeover of Syria would endanger their own security. So where this stands in mid-January will tell us quite a bit about how the administration will approach this. But Trump has so far made it clear he doesn't want to touch it.
The leaders of the rebel Mohammed al-Jolani has so far tried to sort of portray himself as a moderating force. What do you expect from him?
I think that the statements about them being a moderate force and about respecting minorities should not be interpreted as a sign of moderation in the group's ideology yet. It really only reflects a partial and incomplete adherence to some Quranic verses and some historical covenants that the Prophet Muhammad and Islam made with non-Muslim communities. He also directed Muslims and their temporal leaders to protect adherents of other faiths who have peaceful relationships with their Muslim neighbors. So HTS is not showing signs of being even as moderate as the fundamentals that define fundamentalist Islam yet. Jolani is expected to act as a pragmatist, which frankly on the geopolitical stage is often even more helpful. If he truly does want to keep his power constrained inside Syria and is willing to, for instance, sign border peace agreements with Israel and constrain the growth of organizations like ISIS or Al-Qaeda from using Syria as a safe haven, if he is willing to prevent Iran from supplying weapons to Hezbollah through Syrian territory, then it might be that even if he's not moderate, he can be a partner. But we have some warning signs. Remember that the Taliban made similar campaign trail promises to protect women's rights and minorities in order to smooth their way into power, and then they flagrantly betrayed them. And we are seeing now that even though they made promises to keep Al-Qaeda out of Afghanistan, they are for certain back. And we also should note how political negotiations in Yemen came to a halt when the Houthis gained public support for their actions in the Red Sea, purportedly on behalf of Gazans. But when they gained popular support from the ground, they became less willing to compromise politically. We should also recall that protesters hoping to bring down the Lebanese government were dancing in Beirut streets in 2019 while Hezbollah was quietly continuing to plan. So the net result was zero change in Lebanon at that time. So this optimism we're seeing on the street is no substitute for planning. And right now, it looks like HTS is the only group that is planning. But they are not alone. You know, they are a conglomerate of armed factions that have come together for the purpose of unseating Hafiz al-Assad. But that doesn't mean they will necessarily agree on a way forward for Syria. So to the extent that Jolani can hold that group of factions together, will tell us a lot about what weight he can bring to the political process.
And what can we tell about the state of Russia right now at a time when we really didn't see a heavy involvement in supporting Bashar al-Assad? I mean, they seem to be willing to house him at this point, but the fact that they didn't really support him in keeping the government in Syria in place, is that telling you something more broadly about Russia's power and where they're focusing their energies on right now?
Obviously, yes, they have quite a bit to keep them busy in Ukraine. And frankly, any excuse to pull fighters and equipment home from Syria is probably seen as a welcome excuse. And then again, remember that they may also have decided this was not a fight worth losing those troops and that equipment over. Because from what we're hearing from reports on the ground, the Syrian army themselves simply abandoned their posts and took to the hills when they were challenged by HTS and its affiliates incoming. So the Russians may also have said, look, we're not going to die on this sword if they're not going to die on their own sword, and said, pull back, we're going to bring it to our own fight.
What are the key regions that you'll be watching when it comes to 2025? Where could the next potential flare points be for the next year?
I'm watching how Iran reacts to the disintegration of their proxy network across the region, because I think that will tell us a lot. If they choose to double down on their proxy militia strategy as a pillar of their foreign policy, I think we could see flare-ups in places like North Africa if they offer renewed support to groups like the Polisario there, or if they try to breed new groups, even as far as Latin America, to do their bidding, since they prefer others to fight their wars for them. So I'll be watching Iran's foreign policy to indicate where we might see flare-ups that would be coming out of the Middle East but affecting broadly the world.
Kirsten Fontaine-Rose, it was really good to have you with us, non-resident senior fellow at Atlantic Council, with her views on what's happening around Syria. Of course, that government collapsing. Coming up, South Korean President Yoon Suk-yeol, also his government, perhaps on the verge of collapse, facing intense pressure to step down after avoiding impeachment. Analysis from Control Risks' Andrew Gillum next. This is Bloomberg.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings stick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories of the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
Real-time data aspect is going to be
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
South Korean stocks and currency continue to weaken as traders brace for sustained volatility amid a deepening political crisis. President Yoon Suk-yeol managed to avoid impeachment over the weekend, but by just a handful of votes. Pressure for him to step down only intensifying as public anger mounts. Yoon's allies are trying to find a way for him to step aside quietly without an impeachment vote. The opposition, meanwhile, rejected a ruling party proposal to let the prime minister manage the country's affairs, including the security alliance with the U.S. South Korea also needs to agree on a budget by the end of the month. And political paralysis will hurt an economy already suffering from slowing growth and bracing for more trouble, perhaps, from Donald Trump's tariff plans. Our next guest believes the political stalemate in South Korea is not going to save President Yoon for long. Let's bring in Andrew Gillum, head of analysis for Greater China and North Asia at Control Risks. Andrew, great to have you with us. I mean, I'm here in Seoul, and day by day, minute by minute, I'm still trying to figure out what happens next. In such an environment, how do you even try to start gauging the risks in this market?
Well, it's very difficult right now. We're out of the worst moment of this, which was last week when we were actually in martial law for 6 hours, and it really looked like that might stick for a time. So we're past that, and it's slightly less alarming than it was at this point. But with the failure of the impeachment motion at the weekend, it's dragging out the uncertainty about what comes next. I think Yoon is done politically. But we're in kind of unprecedented territory here, where he's still the president, and he's done this deal with his party, where in theory they are now more in control. But that's a very shaky basis for governance. So I think we're going to get another impeachment attempt unless he resigns pretty soon. So I think his kind of stay of execution, if you like, is temporary.
It's a very difficult situation for the ruling party and its leader, Han Dong-hoon, right? I mean, given what happened in 2016 and when they impeached Park Geun-hye, it took such a long time for the party to recover. What are his moves at this point that could potentially salvage the next election?
Yeah, to be honest, it's very difficult to see a way back for the PPP at the next election, or even if they, regroup in some form like Park Geun-hye's party did after her impeachment. And I think probably those PPP lawmakers now are playing a bit of a risky game with trying to cling on a little bit and maybe have a more stable move towards elections, because whether he resigns or whether he's impeached, it's still that then starts a 60-day process to elections. It would take longer in the case of impeachment because it requires a constitutional court ruling, which would add another few weeks or months of uncertainty. But either way, I think that what Yoon is accused of doing and has done is more severe than what Park Geun-hye was found to have done. So it's really difficult to see any way back for him. And I think, those legislators end up, on the wrong side of history potentially if they let this drag out much longer and as frustration mounts on the streets.
And also a very dangerous gamble for the main opposition leader, Lee Jae-myung, to have this drag on, right? I mean, he's right now appealing a court decision that convicted him of election law violation that could bar him from political life altogether. It feels to me like this is a power struggle between Lee Jae-myung and Han Dong-hoon. Where can we get a sense of clarity for the next few weeks and months? And will it have any meaningful impact for economic fundamentals in this country?
Well, as you say, the timelines are really important because of Lee Jae-myung's case. And I think all the players here are trying to figure out the timeline and what works best to their advantage. So that makes, the next election, at some point, presumably in 2025, very uncertain about who will go into that. Even as the candidate, Lee Jae-myung would be favorite quite strongly if he is the candidate when that comes. In the meantime, I think because that initial martial law shock has passed and we're not going to get another martial law declaration, almost certainly not, despite another period of speculation about that late last week. I think with that shock past, markets are slightly less worried than they were. This looks to them probably more within the scope of relatively familiar political turmoil in South Korea, where, most presidents in the last couple of decades have ended up lame ducks fairly early in their term, and parliamentary gridlock is far from unheard of. So I think that the sense of panic and massive fundamental uncertainty has gone. But the longer this drags out, the worse it's going to be. And as you mentioned, we've got the budget deadline coming up. So there's a lot of issues that are slowing down and adding to this sense of uncertainty domestically and externally. So again, the longer this drags on, the worse it looks for South Korea.
Yeah, I mean, it's a narrative and story that we've seen several times in South Korean politics, right? I mean, if President Yoon is in fact impeached, he would become the third one to be impeached here in South Korea. What happens to him now?
Well, it looks very bad for him. The police, the most recent reports suggest police may be issuing orders to prevent him from leaving the country. There are investigations into him, discussion of charges such as treason or insurrection, which are about as serious as it gets for a president. None of that is confirmed. They're very difficult things to make stick. But as I said, it's very difficult to see any way back from him. Several presidents have ended up serving prison terms after they've left office, and most of those have involved something like corruption and nothing as serious as this, which, again, whilst protest and parliamentary turmoil are nothing new in South Korea, declaring martial law it's 45 years since we've been in anything like that territory. So I think it looks very bad for him, however this immediate bargaining plays out.
Yoon had a strong relationship with the United States. It had warmed up relationships with China. This trilateral cooperation was supposed to push back not only against North Korea, but also against China. If we do have an opposition leader coming in and taking over the presidency, what would foreign relations for South Korea look like?
Well, the assumption is that the next administration will be from the progressive, the more left-leaning side of the political spectrum, and that usually means slightly more skepticism from Seoul towards the United States and slightly more friendliness towards China, more dovish policies towards North Korea. So those are the broad assumptions, but obviously that all ties in as well to the expectation of more difficult relations with the incoming Trump administration. The first Trump administration pushed South Korea to renegotiate their bilateral free trade agreement, pushed very hard for a lot more money from South Korea in defense spending and on cost sharing with the US military presence here. So we'd expect all of that to some extent to be revived, and it would get more difficult for any South Korean president to navigate that. So again, it's not kind of a shocking development in terms of a shift. The previous Trump administration dealt with the Moon Jae-in administration, which was from the same side of the political spectrum as Lee Jae-myung and his Democratic Party. So some of this would be predictable, but there's so many moving parts now that the sources of uncertainty and potential volatility just continue to mount.
It was interesting when I spoke to Lee Jae-myung last week. He seemed encouraged by a Trump administration that despite the narrative that he would be easier to work with when it comes to actual policy. Just quickly, Andrew, what can we expect in terms of Seoul's relationship with Beijing?
Well, I think in Beijing, they would welcome a return to a Democratic Party administration if that's what we get. They would see it as much less hawkish than a Yoon administration, and probably they would expect South Korea to become less proactive in terms of cooperation with Japan and the US, as well as Trump being less interested probably in trilateral cooperation. So broadly speaking, China would welcome it that between a Democratic Party president in Seoul and Trump in Washington, that China would broadly see that as positive for them in the region.
Andrew Gillum of Control Risks, good to have you with us. Coming up here, why HSBC expects the Korean won and the euro to underperform as traders continue to weigh geopolitical risks. Market insights from their Asia FX research head is next, as we also bring you the Japan reopen after the break. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade, weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back. You're watching Insight. Fresh inflation data from the world's two largest economies is in focus this week. China's consumer prices unexpectedly slowing last month, while U.S. CPI numbers out Wednesday are expected to tick slightly higher. Bloomberg's April Hong joins us now with more. In April, very different pictures for the two largest economies. But let's start with China, because the fresh data that we're getting out just shows more pressure on prices.
Absolutely. Weak demand as well. And those prices you speak of, whether you're looking at the consumer inflation, unexpected slowing, or factory gate deflation showing a 26-month of that, it just shows you how weak demand is in China, and perhaps also fueling that expectation or speculation that policymakers are going to be deploying fiscal firepower, especially with a key economic meeting that's set to be getting underway this week. And then you look at what Chinese state media have been saying, that there is room to raise the fiscal deficit, that there is room for improvement on the property market, particularly some policies related to land usage. So a lot of that speculation and expectation, that's what's fueling the climb in Chinese bonds today, as we see the yield on the 10-year at the lowest since 2005. But flip the board, because as you say, it's also about what we're seeing in the US. CPI that's due later in the week. Traders really want to see a confirmation of the disinflation trend in the country. And we already got some of it in a way in the form of the jobs numbers. I think overall you get the view that the labor market in the US is solid, yet that is not really that big of a source of inflation anymore, even though we saw the jobs, more of them being added to the US economy in November. The jobless rate did tick up. Overall, we have investors, traders, they seem to still be betting on a move by the Federal Reserve, 25 basis points for next week. I think about 85% of that is being priced in. So while it might not affect the December expectations, what you could see is potentially a hotter than expected CPI print, affecting the outlook for further easing down the road, and of course, the expectations of what this might mean for the US dollar, Sherry.
Yeah, especially when you have the ECB potential rate cut coming out this week. We have seen, of course, significant US dollar strength. On the other side of the trade, we have seen significant weakness in the Japanese yen. Perhaps not so much lately. We are at around the 150 level, headed towards that 149 level. Take a look at how Japanese markets are trading right now, because we are seeing some upside in stock markets at the reopen after the lunch break. The topics gaining 0.5%. And this, of course, as we saw the yen been gaining past that 150 level per US dollar. We are headed towards the BOJ policy decision next week. We already had the third quarter GDP final numbers being revised upwards to annualized 1.2% growth, which is something that the BOJ will think about when it comes to a potential rate hike. This, of course, as we are watching for other policy decisions, including the RBA this week. For more on markets, let's bring in Joey Chu, head of Asia FX Research at HSBC, who believes the Fed is still more likely to continue on the rate cut path for now. Joey, great to have you with us. What does that mean in terms of dollar strength and how other Asian currencies trade on the other side?
Yes, so I think we've been seeing dollar consolidation for couple of weeks now, and that is obviously on the back of the market's reassessment of the Fed's rate hike in December. So now that the rate hike is almost fully priced in, it's about 85% priced in by the futures market. I think it's fair to say that the outlook for the dollar going forward depends more on the forward guidance, and I think we've been hearing a lot from the Fed officials that while they are, quite keen on cutting rates in December, the rate cut path in the future will likely be more gradual. So we might see changes in the outlook in the dot plot, which will be to the dollar's advantage.
What are you expecting from inflation numbers this week?
Our economists are thinking about 0.3% month-on-month for the core, which is quite similar to market consensus, and I guess in some way largely digested by the market already when it comes to the rate cut expectations by the Fed.
Given that, of course, the strength of the dollar also largely depends on other currencies like the euro, and we are potentially headed towards an ECB rate cut, how will that factor in?
Yeah, absolutely. I think you are right that it's not just about the Fed, it's also about what other central banks are doing. And here we see ECB, SNB, and also Bank of Canada all cutting rates this week. Some of them are likely to persist with dovish forward guidance. So I think this will also play to the dollar's strength eventually.
What does that mean for the Chinese yuan? I mean, it's been pretty range bound in recent days, but we do have the economic work conference, of course, by policymakers in Beijing. So how are you factoring in potentially more economic boosting measures coming from the administration or not?
Yeah, the dollar RMB's range-bound price action is obviously related to the dollar's consolidation, but also because of FX policy. As we know, the fixing has gone nowhere above 720, and also, I guess, finally related to the fact that we have not had concrete details on tariffs from the US. As for the Chinese fiscal policy, I think there are still a lot of expectations that there will be more being done next year. The economic work conference this week might not be able to provide the concrete numbers, but I think so long as the rhetoric suggests that more is likely to come, I think investors might still be looking forward to that next year, especially during the 2 sessions in March.
How much do the yuan and euro play as a role as currency anchors for smaller peers? What have you seen in emerging market currencies so far that could suggest the direction for 2025?
Yeah, for sure, the RMB is very important to a lot of Asian economies, right? In the sense that the RMB China is a huge trade partner, and then the RMB, the weight of the RMB in all their trade-weighted baskets, in the currency baskets for Asia, is very large. Similarly. So I believe that the weaknesses in these 2 currencies that we expect next year will also have spillover effects on the rest of dollar Asia. So generally, we expect dollar Asia to rise next year.
What about dollar Korea? I mean, I know that it's a very difficult question given that we continue to see the political elements here in Seoul, but any expectations of where the Korean won goes into next year, given what the BOK has been doing so far in its easing cycle?
Our belief was always that the Korean won will be an underperformer because the Korean economy is exposed to all this external risk coming from the dollar, from tariffs, from the RMB. And then there have been a lot of equity outflows, and also residents are so keen on further investing abroad. So Korean won underperformance was always our base case. The recent developments could potentially, add to that view as well, because insofar as it means that, policy making decisions could be slowed down and more will be leaning on monetary policy to potentially deliver the kind of growth offset, then that could actually also further undermine the Korean won through the angle.
Yeah, what do you make of government officials' efforts to boost liquidity in the South Korean won? I mean, they've been having these efforts for quite a while, but they are continuing to come out saying that they want to boost after-hours liquidity in the won, following, of course, the incredible volatility that we've seen with the latest political developments. How soon do you expect that to happen?
I think we've already seen dollar Korea sort of subsiding from some of the extreme levels reached in the immediate aftermath of the political events. Obviously, it's still, on the upward pressure. The upward pressure is still there. I think we could see that for a while until, perhaps we get more clarity on the political developments.
Do you have any clarity when it comes to the Bank of Japan's policy path at this point? And what that would mean for the Japanese yen?
Yes, actually HSBC Economics Research has just revised the view on BOJ. So they now expect the BOJ to hike rates in the December meeting. So previously they were thinking January, but it brought it forward by 1 month. I think this is, already largely expected after the recent spate of commentary by BOJ governors, including Ueda himself, and also given the on-track economic data in Japan, right? And also given the dollar-yen decline. So I think a lot of this is already in the price. To a certain extent, we might actually have a situation whereby we have the buy the rumor, sell the fact type of price action after the BOJ, if a lot of this is already largely expected.
Oh, wow. So you expect potentially more weakness on the yen, even if they hike?
Yes, actually, our view is for dollar yen to climb in 2025. So we think that dollar yen cannot be immune to the broad dollar strength that we see across the board in 2025. Obviously, the increase in dollar yen could be more modest, for example, compared to some other dollar Asia pairs that are directly in the crosshair of tariff risk, but still some increase from current level is our base case.
What is sort of the level that you're looking at? Because at the same time, I think you have to compare it with relative strength and weaknesses in other economies around the world, and of course, the different currency pairs, right?
Yeah, definitely. Look, the Japanese economy is improving, but it's not at the point whereby the BOJ can actually completely neutralize the monetary policy. So our economists actually expect them to hike rates, but to a level that is still accommodative for the economy. So in terms of the interest rate differential with the US, it will shrink, but not completely disappear for sure, and it will still be at a level that actually might still make a lot of investors want to find out the yen, especially Japanese investors wanting to invest abroad still. So we actually still think of dollar yen rising, but we do not think that it will reach some of the high levels that we've already seen recent months.
Yeah, it's been interesting hearing from investors how interested they are in the Japanese market, but also in India. We are headed towards the Indian market opens. How are you seeing the rupee right now?
Yes, so the RBI's announcements about the CRR cut, as well as the FCNR measures, I think all this needs to be digested. Our view is that, currently the FCNR measures is a bit of a symbolic gesture for stability, but in actual effectiveness, it probably cannot measure up to what they did say in 2013, where they also utilized some FCNR measures, and that led to a lot of inflows, and that really stabilized the INR during that time. So this time around is not to that extent yet, but on the other hand, neither are the pressures facing the rupee, right? So FX reserves are so much larger than they are compared to 2013, and the current account deficit is so much smaller today than they were in 2013. So in some sense, it makes sense that the measures are not as aggressive because the pressures are not as large. So we expect dollar INR to roughly be stable for the time being.
Joey, as we head into 2025, what do you think is the #1 risk for currency markets?
I think in the immediate term, it is to do with dollar positioning, right? So if I look at, the positioning in, say, futures in the CFTC data, it suggests that the market is already long dollar. So even though that is our view, the dollar will further increase. But because a lot of people are already positioned for that, so we might come into a point in time whereby people take profit on their positions or, are spooked by some unexpected headline temporarily. And so we actually have an outsized decline in the dollar first. But in our point of view, we still believe the dollar's strength next year on the back of policy assumptions under the new administration and the strength of the US economy.
Joey Chu, good to have you with us, Head of Asia FX Research at HSBC. And coming up, the Indian unit of South Korea's LG Electronics is preparing to test the country's roaring IPO market. Details on their planned listing next. This is Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Take a look at how Indian markets are trading early in the session. We continue to watch, of course, the rupee after the RBI left the benchmark interest rate unchanged at 6.5%. We are not seeing a lot of movement in the stock exchange right now. Investors really turning their attention to the government's upcoming federal budget. But of course, one company that we'll be watching in India that's operating with its Indian unit, that's LG Electronics, which has filed for an IPO following hundreds of other foreign companies looking to tap the country's booming stock markets. For more, let's bring in Bloomberg Asia equities reporter Chiranjeevi Chakraborty in Mumbai. CJ, when I spoke to the LG Electronics CEO just recently, he said that this was on the table, that everything was being considered. But I wondered if they would go ahead, given that we have seen some other South Korean companies trading in India not doing that great. So what could be eventually the valuation that we could get for this unit, first of all?
Well, thanks for having me. Yes, of course. I mean, the spotlight on the Indian IPO market, keeps on getting stronger and stronger, and that's now LG Electronics joining Hyundai, Motor Corp in looking to list an Indian unit. And as for what Bloomberg has reported previously, the valuation could be in the range of about $12 to $13 billion for the Indian unit. That roughly puts it in the watermark, if you look at it from an INR point of view, in more than $1 trillion rupees. So that'll be a decent size IPO, decent market capitalization to start off the Indian unit. Remember, LG is a household name in India. From me to my parents, even my friends, everybody has one or the other household appliance that has been produced by LG or made by LG. So it is a well-known name in India, in Indian households, and therefore companies probably looking to capitalize on that brand name, that brand pull, and of course the very red hot IPO market that we have in India.
But that's the thing, right? I mean, we have seen other foreign companies also enter the market, but not perhaps that successfully when they listed, like Hyundai Motor India, for example. Are we expecting more companies to come in? What's the feeling right now around this very hot market?
Yeah, even though recently the secondary market has tapered off a little bit, we have seen quite a bit of outflows from the secondary market, but the outlook for the IPO market remains quite strong. Many of the the largest investment bankers here are expecting themselves to be very busy in 2025 as well, including some of these $1 billion plus IPOs. We already know, from reporting previously from Bloomberg reporters that LG is looking to raise more than $1 billion with its IPO, which will probably happen now next year. There is a national stock exchange which is also considering going public, and that has been their intention. Plus, we have the the Indian unit of the housing unit of HDFC Bank, which is also looking at a potential $1 billion IPO. So therefore, the IPO market outlook looks quite strong. But what has been interesting is some of these foreign companies now looking to take advantage of this market by listing their Indian subsidiaries. Bloomberg has previously reported that German auto components maker Mahle is considering an IPO for its Indian unit, as well as the Italian component maker Correro, which has already filed for an IPO with the Indian regulator. So clearly, the pipeline remains quite strong. This is on the back of in companies raising more than $15 billion this year from the IPO market, with more than 300 companies listing on the exchanges.
Bloomberg Asia equities reporter Chiranjeevi Chakraborty there joining us from Mumbai with the latest on that hot IPO market in India. But take a look at the markets in Korea, not so hot right now because we are seeing some big losses when it comes to the small caps call stack, losing more than 4% already at the lowest level since 2022. When it comes to the Korean won, we're also seeing some downside against the US dollar past that 1400 level. Of course, all of this as we continue to see the political instability in the country. That the country's top financial watchdog says The country's corporate governance and shareholder return initiative should continue despite this political turmoil. Governor Lee Bo-kyun of the FSS spoke to us exclusively before Saturday's failed impeachment vote against President Yoon.
Regardless of the political situation, this economic team, Financial Authority, Minister of Economy and Finance, will be here for a while. I'll be here for a while. My term
ends in June.
June, right? And in the meantime, we'll just value program. Essence of value program is that for example, the price of financial sector stocks have fallen a bit last couple of days. They're afraid that the banks and insurance companies still can have the kind of discretion to make dividend or make buyback purchase of their own stocks. So we like I said, even the opposition party is quite strong about this pro-investment program, and myself, including myself, the economic team will be here at least a year or so, and the ruling party leaders, they're also quite focused on this capital market initiatives. That's why they wanted to launch this revision to Capital Markets Act. So everybody's just supporting this program, regardless of their political orientation. So it's just how it is done and the speed of the whole value program. So that's the little difference that might happen.
And you need that credibility from foreign investors at a time when you have political unrest and potentially more instability in the markets. Do you think there's a role for the National Pension Fund here to play? Because you have talked about wanting them to be more active when it comes to market reforms.
MPS has been playing a very significant role in Korean domestic capital market, and but I don't think the government can persuade MPS to have more stock in any certain individual, company or any industry. Things doesn't work that way, but they have this gradual process of changing their portfolio, to my understanding, and one of the ingredients of the whole program is that the proliferation of the domestic capital market is essential to MPS's agenda. That MPS is designed to protect the pensions of Korean national people, because the international portfolio is very important, and that's why MPS is going abroad these days. But still, the one market, because all the dividend will be made in Korean won, no matter what. So the one market, one capital market, is very important to flourish.
Should they be more active then in times of turmoil?
They will, but not in a very short time. But that's why we didn't talk to each other. But to my understanding, they increased their portfolio these days, bit by bit. I think that has something to do with that.
That's it for Insight. But before we go, we leave you with some sights from the protests over the weekend in Seoul. I gotta say, I was there, and despite the anger towards politicians, it was encouraging to see many people hopeful and also some K-pop. This is Bloomberg.
thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grow up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody the same, wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something was special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing. Everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Syria's Bashar al-Assad flees to Moscow after a stunningly fast advance by opposition groups topples his regime. The end of 50 years of the Assad family's rule leaves a power vacuum, raising concerns of more turmoil and violence. Israeli ground forces reportedly crossed into Syrian territory for the first time since the 1973 October War. Prime Minister Benjamin Netanyahu says the collapse of the Assad regime offers, quote, great opportunity. And Korean stocks and the won slide as pressure intensifies on President Yoon to step down despite avoiding impeachment. Police reportedly saying he could face arrest under certain conditions. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Abu Dhabi today, and I'm here for Abu Dhabi Finance Week, which begins this morning. And later this hour, do not miss my interview with the UBS Group CEO, Sergio Ermotti. That is at 8:45 a.m. Dubai time. But for most of this show, we're going to be talking about these stunning developments that have happened in the Middle East over the course of this weekend. At the end of the Assad regime, after more than 50 years in power, what happens next? Who fills up the vacuum? What does it mean for the region? These are all questions that we're going to be attempting to answer throughout the course of this show. But as ever, let's just kick off taking a look at how markets are faring, because we saw yet another record high for the S&P. NFP numbers coming in line with expectations, while slightly higher. 227,000 was the headline print. But unemployment rate also increasing to 4.2%. So something in it for both the Hawks and the Doves. But what it does mean is that the markets are still centered on that interest rate cut coming through at the December meeting. So S&P futures another high. Today futures not doing that much. And NASDAQ also trading sideways, slightly to the downside, down about 6 basis points. Brent also in focus. We can slip. We have slipped a little bit to around $71.50. This after some downward pressure came through after that OPEC Plus decision last week to delay the putback of barrels to the market by another 3 months. And despite the geopolitical risk, again, still struggling to maintain some stability here. And then gold also in focus. Again, given the geopolitical developments over the weekend, we have seen some money going into the gold bullion, up 0.2%. Also reports that China last month resumed buying gold too. So something to bear in mind there. And for our terminal chart today, attention is going to focus this week on central bank meetings. We've got the ECB on Thursday, but also CPI data coming up in the US. And just on that point, it is interesting to know that we are seeing sticky inflation trend at this point. So whether we get an upside surprise here, again, will be a big factor for markets and something that investors are watching very closely, given that short-term inflation has been trending above 2% for both 3-month and 6-month annualized. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio, also monitoring political developments in South Korea. Avril, in addition to some of the data that's coming through from China this morning.
Absolutely. We are focused on South Korea and China today. South Korea, after the failed impeachment motion over the weekend, and that's raising these concerns of a prolonged political crisis in the country that's affecting assets across the board in South Korea. Look at the Kosdaq, the small cap gauge, that's really been underperforming versus the benchmark Kospi. And as some of our analysts have pointed out, this tells you that even retail investors are exiting stocks. It gives you a sense of the sentiment in the country. The Korean won, weakest level against the greenback in more than 2 years. Even Korea bonds are not really catching a safe haven bid, which tells you that investors are applying a discount to all things South Korea. Meantime, China, we also got data today that showed an unexpected slowing in inflation, telling you how stimulus efforts just haven't been enough, and Chinese stocks are under pressure today as well. Jumana.
Yep, and more pressure on the authorities to do with more on the stimulus side. Avril Hong in Singapore, thank you very much for the overview. Well, turning to the big story over here in the region, after more than a decade of civil wars, 600,000 deaths, and the world's worst refugee crisis since World War II, Syria's Bashar al-Assad has been toppled, ending more than 50 years of the Assad family rule. The Syrian president fled to Russia after a lightning rebel advance led by Hayat Tahrir al-Sham entered Damascus on Saturday evening and captured the key city of Homs around the same time. Russian state agency TASS says Assad and his family arrived in Moscow, where they were granted asylum. Stuart Livingston-Wallace is Bloomberg's executive editor for Middle East, North Africa, and Russia, and joins us now. Well, it's been a busy weekend for everybody. But Stuart, maybe just talk us through how quickly the demise of the Assad regime took place. It was only a week ago that we started to talk about these advances from rebels led by HTS, and now here we are. Almost a week, 10 days later, and are staring at the end of the Assad regime.
Yeah, I mean, it fundamentally comes down to when you start counting it from. I think you would find a constituency out there that said it took 5 decades to get rid of them. But, in terms of the more immediate past, it was less than 2 weeks. And I think it was what surprised everyone was the speed at which it happened on a number of fronts. So number one, that the opposition forces, and there are many, many of them, managed to unify and work together and move very rapidly. Secondly, at how weak the Assad regime proved to be when under a little bit of pressure. And then the third really important thing is how reluctant both Russia and Iran were to step in, because there was certainly an assumption amongst some analysts that Russia would absolutely intervene, and that just didn't happen.
What do we know about Hayat Tahrir al-Sham? They're known as HTS. The leader gave a speech yesterday. He also gave an interview with an American outlet last week. trying to shed off some of their perhaps original ties with Al-Qaeda. But what do we know about this group, Stuart?
Yeah, I mean, as you say, they've attempted to sort of reform themselves, present a more moderate face. And I mean, there certainly is evidence on the ground in the last several days that they are legitimately trying to do that. Whether that lasts is a different matter. But they have been putting out, rather strict instructions not to enter institutions, to protect the minorities, not to fire into the air. So again, they're certainly trying to project that more moderate face. But the reality is they remain designated as a terrorist group by just about everyone out there. And I think that is the big concern going forward, is not just this group, but some of the other groups in Syria. Can they reform their behavior to the extent that you can actually have a resumption of a civil government in Syria, and it becomes a credible unified territory going forward?
Yeah, and that is the big question. I'm going to put it to our next guest, Bloomberg's Stuart Livingstone-Wallace. Thank you very much. All right, for more analysis, let's bring in Natasha Hall, Senior Fellow at the CSIS Middle East Program. Good to have you with us, Natasha. Let me just start off by asking you, what do you think actually happens next? Who is going to fill the vacuum and the essential governing structure that the Assad regime has presided over for more than 50 years now? What happens next in Syria?
Well, first of all, thank you so much for having me, Joanna, at this very historic moment. We're looking at the end of 54 years of Assad rule. So it remains to be seen, I think, what will take its place. But that said, HTS, in coming into Aleppo, Syria's second largest city, and in Damascus, has said that institutions will remain in place, government employees will, for the most part, remain in their positions, and so everything will function as usual, but hopefully better this time. The HTS forces have also accepted the defections of Syrian security forces even, and allowed them to essentially stay in their positions or grant amnesty. Whether or not that continues in some of the Assad regime strongholds in Latakia and Tartus, we've seen some evidence of that. But again, we'll have to see in the days and weeks ahead. And certainly there's going to be tensions between different rebel factions, between the outside formal opposition, who has very little influence on the ground, and those that have remained in the country for over a decade throughout this war.
Yeah, I thought it was interesting yesterday that Jolani, we were just talking about him, the leader of HTS gave a speech at the Umayyad Mosque, and in it, he spoke about this new triumph. It marked a new chapter in the history of the region, a history fraught with dangers. And he specifically mentions Syria being a playground for Iranian ambitions. Now, many outlets are picking up on that line because it seems to suggest that he would like a break from the historic close ties that the Assad regime enjoyed with Iran. How should we read it?
Well, I think without a doubt, Jolani and all Syrians want a break from Iranian influence. I mean, listeners cannot forget that it was primarily the Iranian regime and its proxies like Hezbollah that really came in to help the regime besiege populations, bombard them, shell them. And so certainly I think most Syrians would like a break from Iranian influence in the country. Even, I think pro-Assad regime factions and supporters were not very happy about the growing Iranian influence in the country. So we'll see if Iran becomes a spoiler in the future, but I think as of now, there are few Syrians on the ground that really want to lend a hand to Iran at the moment.
What do you think is going to happen when Trump steps into office? Many people are watching out for comments that he put out over the weekend, sort of suggesting that they're watching what's happening, or the Trump administration is watching what's happening very closely, but kind of want to pursue a hands-off approach. Can the U.S. pursue a hands-off approach in Syria?
That is the truly big question, because in the Trump administration, or at least in the nominees that we've heard, we've seen everyone from Tulsi Gabbard, who has actually met with Bashar al-Assad, to Marco Rubio, who has a very hawkish stance on Iran and other issues in the region. That said, we did see this tweet from President-elect Trump himself, essentially saying that hands off Syria, this isn't our problem. But the fact remains that there are thousands of ISIS prisoners in northeast Syria, and those prisons are guarded by Kurdish-dominated forces in the northeast that are backed by the United States. So, I mean, ISIS is amongst the many spoilers in this, but certainly one of the more concerning ones. So we can't really tell what this administration is going to do, how radically it would sort of withdraw from Syria. But this is another really big concern, I think, for everyone in the region and Syrians themselves.
Yeah. And many people are talking about the fact that HTS have been releasing prisoners from jail. And of course, some of those prisoners are actually ISIS prisoners. Let me just ask you another question about Turkey and President Erdogan here. Again, lots of reports over the weekend suggesting he may have given tacit approval to the rebel forces to continue with their advance, if not explicit. Do you think he's going to use this turmoil in leadership now in Syria to extract concessions in that Kurdish region up in the northeast?
Yeah, I mean, Turkey is really the big winner in all of this. They didn't have much of a role to play in the actual offensive, but they certainly must have green-lighted something for HTS and the Syrian National Army, or the SNA. This is the hodgepodge of rebel groups that Turkey backs in northern Syria. And frankly, they are already taking advantage. We're seeing clashes between Kurdish forces and the SNA in northern Syria, and this is a really growing concern. I think that potentially Erdogan could use this to create a buffer zone completely across the Syrian border to mitigate what he sees as a Kurdish threat coming from Syria. And so I think this is another thing, in addition to the ISIS prisons that are in the vicinity, that are of real concern. And it's not clear that HTS or Jolani can really control these factions that are in these clashes in the north.
Yeah, most definitely. Well, Turkey, one of the winners out of this. And Natasha Hall, Senior Fellow at the CSIS Middle East Program. Thank you so much for staying up late and coming on our show today. Also ahead, hear why BlackRock Investment Institute is seeing investment opportunities in AI. More on their market strategy next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep winning World Cup. This is a story
as the economic picture.
covering the intersections of Hollywood.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. More than 120 countries. The moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
can't guarantee anything. I can't guarantee tomorrow, but I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China, we took in hundreds of billions of dollars and we had no inflation.
That was President-elect Donald Trump talking about his favorite word in the dictionary, U.S. tariffs. Well, this morning, Asian stocks are slipping as investors grapple with South Korea's deepening political crisis and await fresh stimulus from Beijing. Meanwhile, oil rose after the Syrian government collapsed. So lots going on in overnight markets. Let's bring in Ben Powell, Chief Middle East and the APAC investment strategist at BlackRock Investment Institute. There's a sort of a music backdrop to our conversation here, so let's sort of lean into that. Yes. There's been a bit of a party going on since the U.S. election. Stock market's going from strength to strength.
Yes.
Do you see that continuing into next year?
Yeah, festival atmosphere here in Abu Dhabi, and a lot of people enjoying themselves at this amazing event. And you're right, markets continue to power on. To your question, yes, we at BlackRock, we are still pretty optimistic. We are overweight US equities, continue to be so. We're very conscious that valuations are not obviously cheap. I think that's true and important. But for now, the combination of the deregulatory excitement, which is real, at least the excitement is real. We'll have to see how the policies play out. But the deregulatory excitement combined with the artificial intelligence megaforce, as we call it, is continuing to drive US equities, and it feels like that momentum is going to continue for some time to come.
Yeah, I mean, we say that, but then equally, we're speaking from Abu Dhabi. This region over the weekend, massive political developments. I mean, not that Bashar al-Assad has any influence on global markets, but still, it's just another case in point of all of these tectonic shifts that are taking place at the same time. Do you worry about perhaps there being geopolitical headwinds to market direction in 2025?
As a global citizen, I worry. As an asset manager, we just have to move to acceptance and deal with the world as it is. So I think this kind of, as you put it so well, Joanna, tectonic shifts that we're seeing all over the world is just a fact now. So I think what's critical, and when we think about our 2025 outlook, we're talking about transformation. There's so much more going on than this, just the kind of normal cyclical frame of, are the Fed going to do this or that? That's still very important. But we're having these seismic shifts in the economy with artificial intelligence, with the energy transition. And I think, yes, geopolitically and politically, and that's going to continue. So I think, as I say, as citizens of the world, there's lots to be worried about. But as investors, we just need to accept that's how it is and try and navigate accordingly.
Yeah, let me just ask you a question about geographies as well. I feel as though people are turning so negative on the outlook for European equities, state of the European economy, the politics also there holding back key nations. Are you also of the view that U.S. outperformance is just going to continue, or because valuations are so cheap in European equities, are you seeing this as a potential entry point?
So we are still overweight the US and we are still underweight Europe. So I guess, therefore, we think that the divergence can continue. Europe, I should say, has got some great companies, individual companies with global exposures, which in a way just kind of happen to be listed in Europe. So we need to be a little bit nuanced about distinguishing between Europe and European equities. They're not exactly the same thing, but it does feel like the mood music in Europe is going to continue to be a bit tricky, given French and likely German political how can we say, complexity over the next month or two. So some great companies, but in aggregate, still a bit tricky in Europe.
Yeah. So going back to the U.S. economy, let's just talk about the state of the U.S. economy per se. We've talked about markets. We had the NFP number come through on Friday, suggesting the labor market still seems to be holding off. The average of job gains over the last couple of months is still north of 150,000. Unemployment rate still close to 4%. Should the Fed be cutting in this environment?
It seems like they want to. So again, we shouldn't deal in what should, we deal in what is, and we think they are minded to cut. So we think they're going to cut a couple more times, probably to about 4%, which is our assessment of neutral. But what's quite interesting, I think, Joanna, is since they started cutting, since they started hiking, 2 years ago, we really didn't see any slowdown in the economy, not really, and we actually saw a loosening of financial market conditions. So again, it seems like it's a very different macroeconomic environment where the normal cyclical lens is not enough to explain what's going on. When we think about the strength of the US economy, it is things like the AI revolution, which is driving it. So for us, again, for BlackRock, really focusing on the bigger structural changes we think is critical, even at a tactical asset price performance level.
What does that do to the USD? Is this US exceptionism going to translate to a stronger greenback in coming years as well?
It has so far, and we think that is likely to continue. So in a world that is fragmenting, you're going to see fragmented monetary policy. And by the way, that's quite normal. If you go back over the last several hundred years, it wasn't always the case that every central bank was doing the same thing on the same day. So we should see some of that in the next several quarters. I would think, for example, the ECB probably have more room to cut. Growth dynamics there look a little bit slower, frankly. So we can probably see a divergence between the Fed. I don't want to say hawkish. They're definitely not hawkish. They're cutting, but perhaps not so much. ECB and others probably have more room for cutting. That leads to divergence, which as investors we should be mindful of, including for the currency.
Are you doing much in China?
We are, yeah. So we are still overweight China equities. It is the world's second largest economy, a huge market, of course. So we, as the world's largest asset manager by far, of course, have some thoughts around it. For China, we all, as investors, I guess, were excited after the big Politburo meeting back on September the 24th. And we're now in a maximally uncomfortable moment, it seems to me, Joanna, where we're all waiting for the big reveal. We have the Economic Work Conference later this week.
Yes.
Probably not yet. So we probably don't get the big fiscal reveal that we're all hoping for, in particular to drive the consumer side. I would think that's a Q1, Q2 thing. But for now, Chinese equities are just so cheap that we're ready to be a little bit overweight as we wait for that hoped for positive catalyst.
Yeah, well, certainly the inflation data this morning is sort of emphasizing the case for further policy stimulus and tariffs potentially next year. Ben, can I leave it there? Thank you so much for joining our show today. A real pleasure to speak to you. Ben Powell, Chief Middle East and APAC Investment Strategist at Chief Middle East and APAC Investment Strategist at BlackRock, I should say. Thank you. All right, coming up, a $765 million deal, reportedly the biggest ever in sports history. We'll bring you that from the U.S. and a roundup of some of today's other stories. That's next. This is Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Abu Dhabi today. And now for a look at some of the other stories we're following. It is reported that Juan Soto has signed a 15-year contract with the New York Mets worth a cool $765 million. According to ESPN, the deal for the 26-year-old superstar outfielder is the largest in professional sports history. Saudi Arabia is cutting oil prices for Asian buyers by more than expected. A price list seen by Bloomberg shows that Aramco will sell its main Arab light crude to Asia at a premium of 90 cents a barrel in January, 10 cents cheaper than expected by traders and down from a $1.70 premium this month. Oil has been under pressure with a lower risk premium and on sluggish demand. Quick look at equity futures before we head out to the break. When we come back, we're going to be talking in South Korea alongside the Middle East region. We'll be back.
Any of us in the room could have a stroke or develop MS or develop ALS, a condition that your body from working. We're all at risk of that. And neurology, I'm a neurologist. Traditionally, it's been the field in medicine where there hasn't been many treatment options. And so neurotechnology is having this moment now in medicine where it's becoming kind of the final frontier of medicine and a lot of excitement, but the challenge with cracking the skull and delivering technologies that way is that the infrastructure is not set up for scale for applications of that technology. Cardiology has shown over decades that you can now deliver millions of stents or pacemakers a year. So we're translating what's known from cardiac into neuro. And I think we're entering a period where the treatment opportunities for neuro delivered through a catheter into the brain are going to become vast.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Horizons Middle East and Africa, our top stories this morning. Syria's Bashar al-Assad flees to Russia as rebels topple his regime. Israeli ground forces reportedly crossed into Syrian territory for the first time since 1973. Ghana's opposition leader John Mahama is set to win Saturday's presidential elections, with the ruling party conceding defeat. And we're live, in case you didn't hear it, from Abu Dhabi Finance Week, which begins this morning. UBS Group CEO Sergio Armati joins me live on set. That is in about 15 minutes. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Abu Dhabi. We're here for Abu Dhabi Finance Week. And plenty of guests that we're going to be speaking to over the course of the next couple of days, and some panels that I'll be moderating too as well. So stay tuned for some of the highlights. But a quick look at markets today. Futures not doing a whole lot. We've got the S&P and the Nasdaq dipping a little bit, but another record high for the S&P on Friday. Those NFP numbers came in line, slightly stronger than expectations on headline, but unemployment rate did see an uptick. But what that means is it cements the case for many for that December rate cut. So that is the focus for the investment community going into the December Fed meeting, in addition to CPI numbers this week, which are going to give further clues as well. Brent also in focus. We continue to see some downward pressure on the energy complex ever since that OPEC Plus decision to delay putting back extra barrels to the market, and also despite the fact that, of course, we've seen a flaring up of geopolitical developments in the Middle East over the region over the weekend. So Brent hanging in at around $71, a big figure. And then gold also in focus, given the developments over the weekend. We did see a bit of money come in to the bullion. We're trading just north of $2,600. So trading in the green this morning too. As for the other highlights for markets, well, also remember that Thursday is going to be ECB day. And the markets have pulled away from their view that they're going to go for a 50 basis point cut this week, but 28 basis points is what is priced in. So a lot of pressure is building on the European economy as we head into 2025. How did the ECB react? That is a question for Thursday. All right, let's push on and also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, give us a run through of how some of these Asian markets are performing, specifically what is going on in South Korea.
Yeah, absolutely, Jumana. I mean, those events over the weekend that failed impeachment motion of the South Korean president and how he just narrowly averted being unseated. I think that's the main concern for investors, given how there's public anger. The opposition is also still seeking his impeachment. This sets the stage for a prolonged political crisis. So I thought I'd just highlight what we're seeing in South Korea stocks, because the KOSDAQ, the small cap gauge in the country, not only is at the lowest since April 2020, it's also this line in white, showing you how it has been underperforming the benchmark KOSPI of late. This chart, courtesy of MLife's Mark Canfield, tells you that this is really a rare occurrence. And it also shows you how retail investors as well, not just foreign investors, have been exiting South Korean stocks. So even though valuations are cheap, it doesn't look like they expect a turnaround anytime soon. So putting that South Korea stock market loss into perspective for you today, Jumana.
Yeah, well, 2.5% lower on the KOSPI. That tells you a lot about how investors are thinking about these markets and the risk premium there. Avril Hong, thank you so much. Now, the New York Times is reporting ground forces have overtly crossed into Syrian territory for the first time since the October War in 1973. Israeli ground forces reportedly advanced beyond the demilitarized zone to take control of the summit of Mount Hermon on the Syrian side of the border. The Israeli military says it is not interfering with internal events in Syria, but adds its forces will continue to operate as long as necessary to preserve the buffer zone and defend Israel. So stunning developments over the weekend in Syria with the end of more than 50 years of the Assad regime. And you're already seeing some of the regional countries respond, including the likes of Israel. And South Korean stocks have slumped more than 2.2% as traders brace for volatility due to the deepening political turmoil. Yonhap News reports that police may seek the emergency arrest of President Yoon if conditions are met. The president managed to avoid impeachment over the weekend by a handful of votes, but pressure on him continues to intensify. Let's speak to Bloomberg's Katya Dimitrieva. Really interesting that Yoon actually survived this impeachment vote. What is his status now? Where do things stand?
Well, Yoon is in a highly unstable position right now that just is intensifying sort of by the hour. So even though the impeachment vote failed, there's, of course, growing protests on the streets of Seoul and in other major cities. The Democratic Party, that's the main opposition, and their allies have actually promised to hold another vote to impeach on Wednesday. That's going to be a special session of Parliament. but it's kind of, the noose is tightening from kind of all around on President Yoon. So police have opened up this special investigation. It takes months or years, but just the fact that they've opened it and there's a lot on the table, they've said they could potentially ban Yoon from traveling overseas. And if the evidence stacks up, basically, that they could potentially arrest him. So a lot of uncertainty there. Meanwhile, what's really interesting is from his own party. So even though they boycotted the vote on Saturday, that's members of the PPP, the ruling party, the leader is now coming out and saying, for all intents and purposes, Yoon is not really managing the country right now. It's actually the prime minister and the party. So as you can see, there's a lot of uncertainty, and time seems, at least right now, like it's limited for President Yoon.
Yeah, Katya, what is the opposition actually looking to do after their motion to impeach failed over the weekend? What are they going to do to mobilize?
Well, they're holding another vote on Wednesday, so there will be this special emergency session of Parliament. And also, we're hearing from unions, some very big unions, some of the country's biggest, that will be looking to strike that same day. Now, they're also looking for their own incentives. They're also looking for higher wages and to address a couple other issues. But it's very clear that the Democratic Party is really trying to galvanize the support that's out on the street and from unions right now to get the ball moving. And so we could see some of that development in the next 48 hours.
Katya, thank you so much for the overview of what's going on. Bloomberg's Katya Dimitrieva, thanks. Well, coming up, UBS CEO Sergio Armati joins us to discuss how the latest developments in the Middle East will impact markets. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Abu Dhabi today for Abu Dhabi Finance Week. We are live here. It is the third edition of the event, and it is looking to explore the power of financial, human, and technological capital as a competitive propeller for economic growth. So to talk about all of these things and more is Sergio Armati, the CEO at UBS. It's good to have you here in Abu Dhabi. It's a little different from Cara de Plata. Let me just start off by asking you, what brings you to Abu Dhabi? I mean, clearly your presence in the region has picked up since the merger. Talk to us about your expansion efforts in the Middle East.
But of course, the Abu Dhabi Finance Week is a great opportunity to be here and
reconfirm our commitment to this region, which is fast growing. I think that we, with 5 trillions of assets, is growing faster than Europe. It's very fascinating to see what's going on here. So it's a great opportunity.
Yeah. In the last couple of months, I've been speaking to other bank CEOs, some of your American peers, and they've also been talking about establishing RHQs in Saudi Arabia. Are you also thinking about expanding beyond the UAE into other parts of the Middle East as well, maybe Saudi Arabia too?
Well, we are quite well positioned in the region. We have operations in Abu Dhabi, in Dubai, but also in the Kingdom of Saudi Arabia, in Qatar, and in Bahrain. So I think that for the time being, what we are focused on is integration of the Credit Suisse and UBS operations. We have reinforced our presence here. So that's the main priority, is to really connect the Middle East with the rest of the global franchise.
Yeah, talking about the integration of your businesses, next year is going to be a big one because you've got the migration, the data migration happening in Switzerland. I know you started in Hong Kong already. How worried are you about how that's all going to go in 2025?
So things are moving well after Luxembourg, Singapore, Hong Kong. Switzerland is going to be the next phase. We are migrating 110 petabytes of data, which 1 petabyte is 500 billions of A4 pages. So that's quite complex. I'm worried in a healthy way. Like one has to be worried about such a technical migration, but we are well prepared. So, and this is the last half of the second half of the migration, and then hopefully in the early part of 2026 we're going to be fully operational under one platform.
Yeah, and as far as the integration is going, just looking at everything, I mean, you're more than half of the way there on cost savings. It really does feel as though, as far as you're concerned, things are moving in line with the path that you had set out.
Yes, I think that I'm very pleased with the progress we've made, also on restructuring the balance sheet and repositioning the business. Most importantly, we did all that by staying close to clients, also delivering solid results in the last few quarters. And so we now really focus on the next phase, which is growth. After this integration, we're gonna want to grow, and we start to invest in technology and making sure that we are well prepared for the future.
Are you worried that maybe one of the byproducts of all of this data mitigation and client migration, data migration, I should say, that one of the byproducts could be you could potentially lose clients in the process?
I mean, we take all the necessary steps to make sure that this is not happening. So I'm the team is well prepared, very, very focused. So I'm not overly concerned about that matter. But there is no room for complacency in those kind of migrations.
Yeah, the Swiss government's about to publish the findings on the investigation into the takeover of Credit Suisse. Are you bracing this yourself for the results of those findings and anything that you will be anticipated to do on the back of it?
I'm looking forward to see the report. We hope the necessary transparency will be provided on the reasons why Credit Suisse went down. We do believe it's absolutely crucial to fully understand that before moving into any changes of regulations or any steps that could undermine the competitiveness of the financial sector.
Do you worry that perhaps Switzerland is moving to a place where the regulation may be over onerous versus other jurisdictions around the world?
Yes, I am. But on the other hand, I'm still hopeful that some reasoning and proportionate outcome will come out, will prevail. But I have to say, for the time being, I'm hearing less facts, more emotions driving the debate, and hopefully things are going to cool off in the next few months.
The last time you spoke to Bloomberg TV, you said that one of your major concerns in 2025 was the flaring up of geopolitical risks. And of course, we're sitting here in the Middle East. We've seen another massive weekend. Earlier, I was speaking with a guest on how Assad himself and the regime isn't going to have a direct knock-on effect on global markets. But I do wonder whether, from your perspective, you actually do think that geopolitics could be the major headwind to markets in 2025.
I'm relieved and surprised to see how all these geopolitical events haven't really trigger any more chain events and consequences, also in financial markets. So that's positive. So I think that one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges. So, but we have to watch carefully those developments and not to be complacent.
How do you see the outlook for the global economy next year? It feels as though you're going to get like pockets of growth. The U.S. perhaps one of them, Europe less so. How do you square it all together?
Well, if you look at the fact that rates may come off, inflation seems to be under control for the time being, and potential deregulation in the U.S. Fostering M&A activity, that could be beneficial for the economy and for markets. On the other end, as we mentioned, tariff may create some potential inflationary consequences. So. It's still very uncertain. I do believe that next year we're going to still continue to see a lot of volatility in financial markets, and therefore one has to be very diversified and look at opportunities to deploy cash in a diversified manner.
But what do you say the risk-taking appetite is for UBS clients right now?
Well, risk appetite is balanced. I do believe that we see for clients opportunities to redeploy cash as we expect rates to come off. But I would say that not a lot of risk appetite in this environment. Balanced and diversification is key.
You mentioned earlier perhaps the deregulation drive that's going to be spearheaded out of the U.S. with the advent of the Trump administration. What knock-on effect is it going to have on the European banking industry, on the Swiss banking industry, if you have this deregulatory or less onerous regulation coming out of the U.S.? Again, it comes back to my original question about.
Well, I think it's difficult to see. I think that it's a fact that Europe and in general, concluding Switzerland, are quite slow to react to what's going on in the U.S. I think that in such an environment, I don't really expect a lot of deregulation, but probably less regulation and more an ability to go through M&A, and that could probably change a little bit the picture, even outside the U.S.
Are you expecting deal making to pick up next year then?
I do expect some M&A to materialize. Also in Europe, we do see consolidation happening more at domestic level, but it could also be that some of this will translate into cross-border.
Yeah, well, I was going to ask you about that. In the UniCredit, obviously, have been quite active cross-border. Domestically, do you see this as a positive development for the European banking industry, that some form of consolidation has started to happen?
In general, yes, but I mean, at the end of the day, in order to really foster consolidation in Europe, you need to have a banking union. You need to have a more solid approach to consolidation. So at this stage, it's a kind of domestic consolidation, but of course, it's far from being a good model that can expand it to more realities in the banking landscape in Europe.
Yeah, and just a final question for you, since we're going to end on Europe and this consolidation push that has been happening. Many people have been talking about the Draghi competitiveness report and what Europe needs to do to sort of catch up in terms of productivity. Do you think that Europe has the right focus now to do what it takes to get the economy back to speed again?
Unfortunately, I don't think there is the right focus at this stage. It seems to me that Europe is much more preoccupied at country level to address their own political worries, and there is less focus on the European project. So yeah. I'm afraid, it looks like a very good piece of work. that has very good ideas, but it's unlikely to be implemented in the short term.
Difficult to implement as ever. Sergio, it's really great to chat to you.
Thank you.
Sergio Armati, the CEO at UBS here at Abu Dhabi Finance Week. Well, coming up, Ghana's opposition leader is bound for victory in presidential elections as voters punish the ruling party over its handling of debt and inflation. More on the results next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Abu Dhabi. Well, Ghana's opposition leader, John Mahama, is poised to win the presidential election. Voters ousting the ruling party for failing to manage a crushing debt burden and the fastest pace of inflation in more than 2 decades. The governing New Patriotic Party's candidate, Mahamudu Bawumia, has conceded defeat, citing the need to preserve peace and avoid tension. For more, Bloomberg's anchor and chief Africa correspondent Jennifer Zabazaja joins us in Johannesburg. Jen, what more do we know about what's going to happen with Ghana? And it seems as though a victory is in sight.
A victory is in sight, definitely, Jumana. And I think it's pretty surprising for many people to see that we did hear from the vice president conceding defeat and congratulating John Mahama potentially on his victory. But we should note that we're still waiting on the official results from the election commissioner. They are meant to come within the 72-hour window after the polls post on Saturday. But yes, generally it is looking like John Mahama is cruising to that victory. And really the interesting point here is we're seeing a similar story as to what we've also seen in other countries globally, really, but also across the continent. So we saw something similar in Botswana, in Senegal, and in Mauritius. And it is voters that are just dissatisfied with the ruling party, with the cost of living. And as you mentioned, we saw inflation in Ghana quicken upwards of 54%. It came back down to about 25%, but still that's quite high for a number of Ghanaians. We saw debt also skyrocket above $51 billion. And the currency, the cedi, was weakened almost 60% against the dollar. And so this has really become a detrimental place for a lot of Ghanaians. And we heard John Mahama use that really as his push and his messaging against the ruling party, saying that it would just be a continuation of what we've been seeing in the past. Clearly, voters potentially voting against a continuation and for a change.
Yeah, what do we know about the economic priorities then of John Mahama, given some of the issues that you just spelled out, including the high debt burden?
Right. It's really interesting. You know, Bloomberg actually had an interview with John Mahama not too long ago, and he talked about how he would actually want to talk to the IMF and rethink what they've decided on for their restructuring terms. He also thinks the past 8 years have not been a conducive business environment, namely for oil and gas producers. And so he wants to see more companies coming back into the country for an upstream in an upstream basis, but also in any other ways that they can, because he says that we've seen a lot of businesses flocking. There's also gold that is significant for Ghana. It's Africa's biggest gold producer. Illegal gold mining has been an issue that we've heard these candidates talk about. And cocoa is something that's very crucial to their exports. And so we've heard John talk about a few of the restructuring terms that he would talk about in order to just stabilize the debt and get the country back on stable footing. We did see bonds rising as a result of that, as markets priced in his win, but we'll wait to see what happens.
Excellent, Jen. Well, we'll circle back to you in a couple of minutes for the second hour of Horizons. Before we do that, a quick look at equity futures, and we're not doing a whole lot this morning. We are leaning towards the red, dipping somewhat after those NFP print figures came through on Friday. But coming up in our next hour, Sika Thomas from ENSA Advisory Partners and Dalia Fahmy from Long Island University. This is Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the guaranteed or even that it'll be easy, but at least there's a theory of change.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Horizons Middle East and Africa, our top stories this morning. Syria's Bashar al-Assad flees to Moscow after a stunningly fast advance by opposition groups topples his regime. The end of 50 years of the Assad family's rule leaves a power vacuum, raising concerns of more turmoil and violence. Israeli ground forces reportedly crossed into Syrian territory for the first time since the 1973 October War. Prime Minister Benjamin Netanyahu says the collapse of the Assad regime offers, quote, great opportunity. And Korean stocks on the one side as pressure intensifies on President Yoon to step down despite avoiding impeachment. Police reportedly saying he could face arrest under certain conditions. Well, good morning. It's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Abu Dhabi with all of the speakers of the Abu Dhabi Finance Week behind me today, Jennifer.
Yeah, and it looks very exciting there, like things are getting going. So looking forward to more of those conversations. I'm Jennifer Zabasacha in Johannesburg, where it has just gone at 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Well, yes, it's been quite a monumental weekend over here in the Middle East. We're keeping a close eye on the developments in Syria, the end of the Assad regime, lots of questions about what is going to be happening next. And we are going to put those questions to our guests in the next hour. But for now, markets as ever, S&P coming off a record high. NFP print was in focus on Friday. Also cements the case, some people are saying, for a December rate cut out of the Fed. About 18 basis points are priced in going into that meeting. But this morning, futures not doing a whole lot. We've got the S&P and the NASDAQ tilting towards the red, down 7-8 basis points respectively. Attention turns to CPI figures on Wednesday. I'll get to that in a moment. But also, let's just take a look at the energy complex this morning, because oil seeing a bit of support here, up 0.4%. But the theme has been one of further downward pressure, even after OPEC Plus announced that they're delaying the decision to put extra barrels back to the market by another 3 months. Gold also marginally outperforming today, up 0.1% on a safe haven status, geopolitical risks. As for the inflation picture, I think this is quite an interesting chart going into Wednesday, because it suggests that the inflation figures coming through from the U.S. have actually proven to be quite sticky over the course of the last couple of months. And if you look at these numbers, headline CPI, the 3-month annualized rate is actually above 2%. So this is slightly higher than the Fed's target. So something to bear in mind as we get those CPI figures on Wednesday. All right, let's move on and talk about how Asian markets are faring. April Hong is in our Singapore studio. April, just run us through how these markets are faring today.
Yeah, Jumana, we're watching out for those US CPI numbers. We already got some of those Chinese prices today, and that shows you that unexpected slowing in consumer inflation in the country. Clearly, weak demand that's raising the speculation or expectation that policymakers are going to start deploying fiscal firepower, especially with a key economic meeting that's set to get underway this week. We have the CSI 300, the Hang Seng. We're back from the lunch break in China. They're still sitting quite negative, but pairing some of the earlier losses. I also wanted to highlight what we're seeing in South Korea amid the failed impeachment motion. Clearly, given the public anger, I think the expectation is that this could drag on for a while longer. And the Kosdaq has been underperforming versus the benchmark in the country. And something that our stocks team has been highlighting is that we saw this similarly in 2016, 2017, when politicians were similarly seeking the impeachment of then President Park Geun-hye. The difference this time around is that South Korean retail investors might be more inclined to switch out of Korean equities and into US stocks and cryptocurrency. So that doesn't bode well for stock markets in the country. Guys.
Fascinating picture there. Avril, we'll check back in with you later. Avril Hong in Singapore for us. Now, the world is still trying to grasp this events in recent days, which led to the collapse of a ruling dynasty that controlled than half a century. Bashar al-Assad fled to Moscow after armed opposition forces entered the capital Damascus on Saturday evening, effectively ending 13 years of civil war that claimed thousands of lives. And while the implications of the regime change are still unfolding, the international community is warning of chaos and division in the region. For more, let's bring in Paul Wallace. He is Bloomberg's MENA economy and government coverage lead, and he's joining us now from Dubai. So, Paul, it's been a stunning past few 48 hours. As we mentioned there, 50 years of the Assad regime, 13 years of civil war, all came down to the past 2 weeks. How did this happen so quickly?
Hi, Jennifer. I think that's a question so many people, foreign powers, and even Syrians are still grappling with. It is quite stunning just how fast this happened. I mean, Syria has gone from nowhere in terms of being in the news to the biggest story out there in less than 2 weeks because of how rapid the fall of Assad's government was. I think in the end, it came down to the sheer weakness of the Syrian military. I mean, apart from Aleppo, which was the first town the main rebels, the HTS took in late November, there wasn't really a fight. There wasn't really a fight for the city of Hama and then Homs further south and then Damascus. The Syrian military just melted away, and I think it shows just how hollow the Syrian government state institutions had become after so many years of civil war and rule under Bashar al-Assad. The other thing was that Iran and Russia, his two main backers, simply weren't willing or weren't able to help him in the way they did earlier in the civil war, when they really turned that conflict's tide in Assad's favor. There was also the issue of Hezbollah. It's been hugely weakened by Israel in the last few months. If it was still as strong as it was at the beginning of the year, maybe it would have been able to send fighters to Syria to help prop up Assad. But all those things didn't happen, and we're left with this extremely quick toppling of Assad's government.
And quite an unknown situation, Paul, right? I mean, we're hearing from a number of leaders talking about how they're hoping the transition will be potentially smooth. But what do we know about what the next transition, what the next government could potentially look like?
There are huge question marks over this. And if you look at Western powers, if you look at the US, if you look at European powers, well, obviously they weren't friendly at all with Assad. And in normal circumstances, I think they would have been quite happy for him to have fallen. However, HTS, the group that's taken Damascus and seems to have effective power in Syria at the moment, is a group that broke away from Al-Qaeda in 2016. It claims to have moderated its stance a lot since then, and it's saying that it will run some kind of inclusive government where all ethnicities and all religions will be safe. But still, it's a group that's designated a terrorist organization by the US and others in the West. So I think there's a huge amount of wariness about what comes next. We don't even know if HTS will end up Syria, will be the main power in Syria. I mean, the country is split between a huge number of or large number of ruling groups. So I think in the next few months, it's going to be pretty messy. Probably these different groups sort of fighting physically, then fighting over trying to bolster their positions, and things. Powers are going to be watching on, just hoping that it's peaceful.
Paul Wallace, our thanks to you and the team for all of your reporting, leading our MENA economy and government coverage there. Thanks so much.
All right, joining us now at Abu Dhabi Finance Week is Saigat Thomas, geopolitical strategist and CEO at EMSA Advisory Partners. Well, it's a great day to have you on to talk about everything that's happening in the region. I think so many people were taken aback at the speed of the demise of the Assad regime, but then equally lots of questions about what happens next. And around the region as well. But what is the next step for Iran? We say that Iran is on the back foot here. I mean, could we be talking about potential regime change in Iran? Does it go that far? Or is it just a matter of Iran re-engaging with the West again and providing concessions on the nuclear front?
go so far to see regime change at this point. I think we've all heard that Iran has quietly tried to reach out to the U.S. administration, incoming U.S. administration. There are talks that are being had with them. I think on the immediate front, Iran sort of needs to look at two different issues. First, what does sanctions look like for them? How are they going to be able to increase sanctions because they're already under sanctions, but how are they going to be able to continue to have a decent enough economy to function? And more importantly, they're worried about protecting Iran. With their axis of resistance eliminated, what does that mean for them? Do they look to nuclear weapons as a possible means? Does Israel go after more possible military targets in Iran? I think those are the things that Iran is worrying about right now. I think culturally speaking, societally speaking, Iran's stronger than Syria, but certainly those are going to be things that they're going to be thinking about.
Yeah. What do you think happens once the Trump administration steps into office? It was interesting over the weekend, Trump was saying that he sort of wants to have a hands-off approach with Syria. Will he be able to have a hands-off approach with Syria given the sensitivities and that it has traditionally been a corridor from Iran to Hezbollah?
Yeah, Trump sent that message while the U.S. and Israel were launching sort of missiles into Syria against ISIS targets and potential chemical weapons. So, look, rhetoric is strong. It's obviously what he was able to sort of win the election on, was sort of staying out of wars and not getting engaged in the Middle East. But whether Trump likes it or not, the U.S. has military forces in Syria, in the region.
Yeah.
They're going to have to be protected, and it's simply too volatile of a region to leave sort of laissez-faire and let happen what happens in the Middle East. The U.S., for better or worse, is going to have a say in what happens in Syria.
Yeah, I think that's a pretty fair assessment. Saiga, thank you so much. It was really great to have you on the show today. Saiga Thomas, geopolitical strategist and CEO at ENSA Advisory Partners. Thank you. Well, coming up, pressure on the president. South Korea's Yoon Suk-yeol avoids impeachment, but calls for him to step down are still intensifying. We'll bring you the latest live from Seoul next. This is Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs. No one else. Bloomberg ETF IQ. Monday on Bloomberg.
Spend some time here on the broader presidential race.
Seeing on European politics.
Makes you wonder how politics might play out.
Welcome back to Horizons Middle East and Africa. I'm Shimana Bersachi in Abu Dhabi today. South Korean stocks have slumped as much as 2.4% as traders brace for volatility due to the deepening political turmoil. Yonhap News reports that police may seek the emergency arrest of President Yoon if conditions are met. The president managed to avoid impeachment over the weekend by a handful of votes, but pressure on him continues to intensify. Let's speak to Bloomberg's Shirian, who is in Seoul, has been on the ground. You were speaking to demonstrators over the weekend, so you've got a really good sense of public anger, I would say, Sherry. But let me just ask you what the latest is on Yoon's status, because I think many were surprised he actually survived that impeachment vote.
Yeah, I mean, it was such a close call, wasn't it? And it was such a dramatic and chaotic impeachment vote over the weekend. Right now, police are even saying that they're reviewing a potential travel ban against the president at the moment. You talked about a potential emergency arrest. Well, President Yoon has said, apologizing to the public, that he's going to take his hands off state affairs. He's already been investigated by prosecutors for treason. So there's a political vacuum right now at the top, and the ruling party PPP has stepped in, saying that the Prime Minister Han Duck-soo would be in charge of state affairs. But remember, here in South Korea, prime ministers only play a very nominal role when it comes to state affairs. He is a veteran politician. This is the second time that he's serving as Prime Minister of South Korea. He served under Roh Moo-hyun in 2007, who was also impeached and went through those proceedings. He went through the proceedings. He wasn't necessarily impeached, but basically to say that this is a common occurrence here in South Korea. We had the impeachment of Park Geun-hye back in 2016. Now, the key question is, will the opposition try to even remove Prime Minister Han Duck-soo? There's speculation that they might try to impeach him, which might be a lower bar than for the president.
Sherry, what is the opposition looking to do now? They clearly put forth this impeachment motion. They thought it was going to pass. They weren't successful. So how do they remobilize?
They needed 8 ruling lawmakers to vote with them to get that 2/3 majority of parliament to be able to impeach the president. They did not get that on Saturday. Right now, we're hearing that potentially they could try again on Saturday, but will they have the votes is a key question. And we have to keep in mind that this is a race against time for this person that you're watching right now, who's the main opposition Democratic Party leader, Lee Jae-myung. He is also been convicted by a court of election law violations. If that conviction is upheld, he's appealing that, then that would bar him from political life. I spoke to him last week, and he vowed to continue this pressure on President Yoon to have him removed. You talked about me being around with protesters. Well, yes, around the National Assembly, there were around 100,000 people, according to police estimates. We're expecting more protests tonight as well.
Yeah, well, just a fantastic set of developments in South Korea, Syria, just all around the world. It's great to have you on the ground in Seoul telling us what's going down. Bloomberg's the Asia Trade anchor, Sherry Ann, in Seoul. Now, coming up, a rapid response team has been dispatched to the DRC to help investigate the outbreak of a mysterious flu-like illness known as Disease X. We'll bring you the story next. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. The World Health Organization is investigating a mysterious flu-like illness in the Democratic Republic of the Congo. The WHO says over 400 reported cases and 31 deaths have so far been linked to the illness labeled Disease X. Let's bring in Bloomberg's Janice Q, who is our healthcare and consumer reporter, but has been following this story. So Janice, the cause of this disease is still unknown. They don't really know a lot about what's happening with it. But what do we know about what's been spreading?
So cases have been reported since late October. We're talking about 6 weeks already, which is a bit of a concern because that's a fair time lapse in terms of actually getting diagnostics done. We know that there are flu-like symptoms, so we're thinking fever, headache, runny nose, body ache, those sort of things. Most of the cases have been amongst children younger than 5 years old, and all the severe cases are people who are malnourished. This is a very remote area, and so getting the diagnostics done in a country which is already diagnostic abilities are fairly limited is tricky. It's about 48 hours from Congo, the province that this is happening in, to the capital, and so getting all sorts of other medical supplies is also very difficult. We do know that there are teams on the ground, so that is comforting.
But Janice, I mean, earlier this year we were talking about Mpox, and there was the concern about how it was spreading. How is this potentially different? Are there ways that potentially this can be contained and it's not as much of a concern? I wonder how you'd paint that picture.
So with the Mpox, it's not airborne, and this we don't know yet if it's airborne, but it might well be because of the flu-like symptoms, which suggests that. So a non-airborne disease often spreads slower, which Mpox was or is, and this might spread more easily. However, because it's such a remote area, and there aren't a lot of thoroughfares or routes going elsewhere, that does reduce risk. And the Congo is exceptionally good at dealing with infectious diseases. They've had Ebola and all sorts of other things. So that is a mitigating factor. There's also the fact that it may already be this unknown disease might actually be something that just hasn't been identified yet because of the slowness with testing. And so it could be something that's already known, like COVID-19, flu, pneumonia, even measles and malaria. Malaria is very prevalent in the area. So it could be something like that. It could also be a multiple number of diseases that are just showing in this way, because these symptoms, while severe, I mean, there've been a number of deaths, they aren't uncommon to a variety of existing illnesses.
Right, so we're still waiting to get a few of those details.
Yeah.
Appreciate your reporting there. The Bloomberg's healthcare and consumer reporter, Janice Q, joining us here in Johannesburg.
Fascinating. Certainly seems like something we need to keep an eye on, a mystery illness. Nobody needs that right now. Okay, let's check on market futures, equity futures. As we get closer and closer to the start of the European session, it's leaning with a risk-off bias. And here you can see all of the major indices are tilting towards the red. The Euro Stoxx down about 0.2%, even though once again we saw U.S. equities end the week on a high last week. Well, coming up after more than 50 years, the Assad rule in Syria has ended. We'll get more analysis on what this means for the country and the wider region.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's each week our podcast, The Deal.
I love the fact that you have, we say the cojones. I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, it never does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready. Go.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Every weekday, only on Bloomberg Television. Context changes everything.
This is Horizons Middle East and Africa. Our top stories this morning. Syria's Bashar al-Assad flees to Moscow after a stunningly fast advance by opposition groups topples his regime. The end of 50 years of the Assad family's rule leaves a power vacuum, raising concerns of more turmoil and violence. Israeli ground forces reportedly cross into Syrian territory for the first time since the 1973 October War. Prime Minister Benjamin Netanyahu says the collapse of the Assad regime offers, quote, a great opportunity. And Korean stocks and the won slide as pressure intensifies on President Yoon to step down despite avoiding impeachment. Police reportedly saying he could face arrest under certain conditions. It has just gone 7:30 a.m. here in South Africa. I'm Jennifer Zapasacha in Johannesburg.
And I'm Jumana Versace in Abu Dhabi, where it's just gone 9:30 a.m. We are here for Abu Dhabi Finance Week, and this is the second hour of Horizons Middle East and Africa.
That's right. And you've already been bringing us a number of great interviews, Jumana. We know that will continue. But let's take a quick look at where markets are positioned. At the beginning of this week, U.S. equities, starting with them, little change right now. But that is after a week where we did see both the S&P and the NASDAQ closing at fresh records, actually posting their third straight week of gains. But if you take a look at the S&P there right now, little change as it stands. We're also paying close attention to the Kospi. Avraham will talk more about that in just a bit, but clearly down significantly right now. We're paying close attention to what is happening about those developments in Korea. Gold is also in focus. It is up just almost just over 0.1% there at 2,636 an ounce. That is coming after we saw China's central bank expanding its gold reserves in November, ending a 6-month pause. And of course, close attention to what is happening geopolitically and potentially why gold is getting a bit of a boost. And we have oil as well, Brent crude edging higher, almost 0.5% up, about $71 $91.47 a barrel. And that is coming after we did see the collapse of the Syrian government over the weekend. But last week we did see Brent closing its second weekly loss. Potentially the uncertainty that we're seeing geopolitically has some more effect on what we see with crude. And it is a busy week ahead with monetary policy decisions. We do have a Chinese policy meeting. And of course, we have the US CPI print on Wednesday ahead of the Fed meeting next week. But if we take a look at what inflation has showed, this chart is illustrating short-term inflation potentially a bit stickier. It's picked up with both the 3-month and the 6-month annualized reading above 2%. Investors watching closely, though, what we see with that print on Wednesday and what then that could potentially mean for the Fed's meeting next week. Let's, though, check in on how markets in Asia are faring. There's a lot of developments happening there. Avril Hong is standing by in our Singapore studio. Avril, how's it going?
Yeah, against that backdrop of these developments happening, we're seeing South Korea and Chinese stocks. Those are the ones that are underperforming today. But I thought I'd just encapsulate or recap the data that we got out of Asia's largest economy. We got consumer inflation in China, worse than expected, an unexpected slowing. And we also saw the factory gate deflation for 26 months. So overall, it's adding to the sense that whatever has been thrown at the Chinese economy from policymakers is just not enough to revive things. Our colleagues at Bloomberg Economics have the view that that key economic conference that's set to be underway this week is a chance for policymakers to signal stimulus. That being said, that the growth target or more concrete policy plans, that's going to come at a later date. In the meantime, what we can potentially expect is a cut to the reserve requirement ratio by the end of the year, 25 basis points. That's expected by our team at Bloomberg Economics, and that's perhaps being reflected, those policy stimulus expectations being reflected in Chinese bonds that have just been surging. We see yield on the 10-year in China hitting levels we haven't seen in about 20 years. That's about 1.93 at the moment. So this is what we're seeing in Asia, specifically in China, guys.
Thanks so much, Avril Hong in Singapore for us. Now back to our top story. And after more than half a century, the Assad ruling dynasty in Syria has ended. Bashar al-Assad has been toppled in a lightning rebel advance, forcing the 59-year-old to flee Damascus and seek refuge in Moscow. Back in 2011, the so-called Arab Spring reached Syria, but Assad managed to hang on to power against a backdrop of a brutal civil war. But now the collapse of the regime has left a power vacuum with concerns about more upheaval and potentially violence. Now, to unpack all of this for us, Bloomberg's Sam Dagger is joining us now. Sam, you've been watching this very closely. We've been following your reporting. Talk to us about where you see this going from here and what you're focused on with a number of these threads that we're talking about as a result of the Assad regime being toppled.
Well, thank you for having me. I think it's very important to note that while, legitimately the world is concerned about what comes next, but I think the world also needs to keep in mind, what Syrians are going through at the moment. They've been liberated. This is what my Syrian friends are telling me. I've been speaking to them over the past 48 hours, and their feeling is they're still trying to get their bearings. They've been liberated from this family that has ruled the country for over half a century. You had the father, Hafez al-Assad. He came to power in a coup in 1970, and he managed to put in place one of the most brutal regimes in the world, underpinned by this cult of personality, repression, and zero tolerance for any dissent. And then they rose up against his son, who basically inherited power from his dad in 2011 during the Arab Spring. And the protests were peaceful, but they were met with bullets. And then it basically escalated into this huge war with outside players, and then a death toll of anywhere between 300,000 to 500,000 people, and half the country of 20 million displaced internally or in neighboring countries. And then you have 100,000 Syrians, at least, who have been forcibly displaced by the regime. I mean, literally, when the dungeons of the security services were being opened, and these large prisons where people were being held, I mean, people were coming out. Some of them had been there for 30, 40 years. I mean, they'd been imprisoned under the DAD. And some people who had thought that their loved ones had died, I mean, even the government told them that your loved one is dead, and they found out that no, they're still alive. So we have to keep this in mind, I think, as we obviously assess, what comes next.
Right. The humanitarian aspect of this is very important, and it's fascinating, some of the pictures that you're seeing actually coming out of Syria. Sam, when we think about, you mentioned neighboring countries, we've seen a number of leaders speaking and reacting to this. Last night, President Biden, as well as President-elect Trump and others reacting. Who do you think steps in to potentially help or aid in this transition? We did hear President-elect Trump saying that he doesn't want to see the U.S. involved, but who do you think then potentially helps ease the potential turmoil that we could see?
I mean, I know President-elect Trump says he doesn't want to be involved, but I mean, I hate to say it, the U.S. will have to be involved. Western countries will have to be involved, particularly France, Germany, the UK. But obviously, the lead role here is going to be for Turkey. Behind it, Russia. I mean, albeit Russia now is weakened it has a naval base, it has an air base, but its man on the ground now is in Moscow. So it's a different dynamic. So it's going to be liaising with the Turks. Then you have Israel, which is making some very bold moves now. I mean, we have these reports that it has entered into Syria, and it has also sent signals that it is worried about, these rebels whom Israeli officials describe as no friends of Israel. It is also worried that these rebels may get their hands on weapons. Also, it has signaled that it feels a lot more comfortable with a lot of these minorities in Syria, like the Druze, at the Israeli border, the Kurds in the northeast. So this is going to complicate, the situation.
Bloomberg, Sam Dagger, always great to get your reporting and your insights. Really appreciate you joining us this morning.
My pleasure.
Well, let's continue the analysis now with Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Good morning to you, Dalia. One of the things, alongside the speed of the demise of the Assad regime, was also just how relatively peaceful it was. And even when the rebels approached some of the big cities, even Damascus over the weekend, it was still relative peaceful transition of power, especially after reports emerged that Assad had actually fled the country. Do you expect this superficial peace to last?
Jemana, it's a remarkable moment in Arab Middle East history because, save probably World War II and the creation of the State of Israel in 1948, this is probably one of the most critical moments because it marks the end of the longest-standing military-based, foreign-backed, family-anchored autocratic regime. It really marks the end of an era in the Arab world. And what we saw in the past 12 days was unexpected and both expected. Because if you think about 2011 and the Arab Spring, what you saw happen in Egypt and in Tunisia and in much of North Africa and Levant was a people uprising. And save where they are today, what we saw in Syria, the response of March 2011, when a young school child, spray painted on the wall of a school in Dara in Syria, "Doctor, you are next." Doctor meaning Bashar al-Assad, because he said, "I, doctor." We expected that it was going to fall similar to the way Egypt and Tunisia did. But what we saw was a heavy-handed response that led to the death of 500,000 Syrians, the displacement of 14 million, and a civil war that erupted also critically in 2016 that really laid the groundwork for what we saw today. Because the 2016 moment of the rise of the leader of the resistance that established the 12 days was long in coming. So both surprising and unexpected.
Yeah, many people are saying, experts are saying that the fact that the Assad regime fell so quickly was also a reflection of not just the weakness of the Assad regime, but also the lack of appetite from Syria's traditional allies to help bolster him. And we talk about Iran being on the back foot politically, its proxies around the region as well having suffered blows the last few months, Russia embroiled in a war with Ukraine. If that is the case, what does that do to the broader dynamics, the geopolitical dynamics of the region? The fact that it's not just the Assad regime that is gone, but many of its supporters as well are going to be less present there.
Absolutely. So when you have a weakened Russia in the region, so the reason why this is not 2016 and the Assad regime was able to fall was because Iran and Russia are not what they used to be. With Russia in this quagmire in Ukraine and Iran increasingly weakened and not wanting to establish a deeper footprint in the region for several strategic reasons, it led to the rise of, for example, Turkey in the region, especially in this moment in Syria, but also the backing was not there for the Syrian military. And so what you saw was this critical moment a few days ago where you start to see uniforms being abandoned by the Syrian military. And so it created a kind of threshold effect where it was, wait, the backing is not coming. It is not here. This is a brave new world. It's a new day. And so the Syrian military was quickly therefore removed. But it begs the question of what's really going to happen in the region. What is the road ahead going to fall? Syria is a multi-ethnic, multi-religious, sectarian country. It's learned the lessons of the de-Baathification of Iraq, but it's also learned the lessons of Lebanon's civil war. And so when we see, for example, today that Israel has moved into Syria's buffer zone. The U.S. has announced airstrikes, and ISIL has already struck parts of Syria. Russia and Iran are weakened. We're going to see Syria be the next space for contestation over regional security, but Turkey is going to increasingly try to establish a stronger foothold.
Yeah, and let me just bring you back to something you were saying about Lebanon. Of course, there is this somewhat shaky ceasefire right now between Lebanon and Israel. How do you think the dynamics over the weekend, what's happened in Syria, could have ramifications on what happens within Lebanon, not just in the context of the ceasefire, but also in terms of state building?
You know, I'm here in Doha where the foreign ministers of Iran, Turkey, and Russia are. We're here in the same forum. And it was very interesting to see them the day before the fall of Assad and the day of the fall of Assad, because the language of the future became very, very bleak and dark, and also kind of about how this is going to reflect on places like Lebanon and the immediacy. Is there going to be a ability for places like Iran to hold on to the of stability of what's happening in Lebanon? That's increasingly not true. We saw Hezbollah, for example, take a critical step back. And so I think the ramifications of what happened in Syria yesterday are going to have a lot of reverberation for both Lebanon, Gaza, and the future of Turkey in the region, but furthermore, the kind of backtracking of Iran into a different space.
Dalia, thank you so much, and definitely looking forward to having you come on in future months to help us analyze and dissect exactly what is going to happen from here. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Thank you. Well, coming up, slightly different tact, Red Bull's team principal, Christian Horner, spoke to me about the prospect of Saudi Arabia entering the Formula One race and building a new circuit. More from my exclusive interview next. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Abu Dhabi for the Abu Dhabi Finance Week. Well, it's been a busy weekend in Abu Dhabi with the Formula One Grand Prix season closer descending on the city. Yesterday was the last race of the season. Red Bull Sergio Perez had a race to forget after he was forced to retire early from the race, with Lando Norris taking the constructor's title for McLaren. I spoke exclusively with Red Bull team principal Christian Horner, with the team and Perez will reflect on the season that's been after a tough season.
2025 promises to be a really exciting year. It's the last year of this regulations. We've seen the cars and the teams converging in performance. There's now 4 teams, in Red Bull, in McLaren, in Mercedes, and of course Ferrari, that will all be competing for wins next year. And it'll be fascinating to see how Lewis adapts to life, with arguably the most famous team in Formula One.
Let me ask you about your own lineup. You mentioned some of the issues that Sergio Perez was having. A few people are asking about what's going to happen with his contract. Can you give us visibility?
Well, it's obviously difficult to go into the details of drivers' contracts, but this year's been very tough for Sergio. Nobody more than Sergio will accept that. So for us, we'll reflect on the season after this last race. He's been an incredible member of our team for the 4 years that he's been with us so far, and 5 victories, second in last year's Drivers' World Championship, contributing to 2 Constructors' World Championship, and of course Max's first Drivers' World Championship here in Abu Dhabi. So he's a popular member of the team, he's a valued member of the team, but it's been a tough year, and we'll sit down after this race and reflect on the season there's been.
This year there have been 24 races. Do you think that's too many?
I think 24 is a lot. I mean, it's like it's a tough season for all the traveling staff. And you get to a point where, at some point you reach duration. I think 24 is right on the limit. I don't think we can go, certainly beyond that. For me, 21's a great number. I'd rather go for quality over quantity, but of course, which ones do you drop, because they're all fantastic races?
Yeah, well, that brings me to my next question. The Middle East obviously have a growing presence in Formula One. There's even talk of Saudi Arabia wanting to get involved as well. New tracks in the US. Is Europe becoming less relevant in the grand scheme of things in terms of where these races take place?
Well, I think we only have 7 or 8 races in Europe now. When you look back 15 or 20 years, Europe was the dominant factor on the calendar. So Europe has become ever smaller, but you can imagine that certain European races will come under pressure because all these different countries and regions want to have the presence of Formula One, not only the spotlight that it brings on that country for the weekend that the race is hosted there, but of course the economic benefit that it brings into town with the traveling circus that is Formula One.
Do you think it would make sense for Saudi Arabia to bring in a Formula One?
Well, Saudi Arabia obviously have their street race in Jeddah, but there's obviously talk of them building an really exciting new circuit, which could be something a bit special.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a three
as the economic picture
covering the intersections of Hollywood,
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
The Democratic Republic of Congo is facing a severe food crisis due to war, disease, and drought. The World Food Program says more than 40% of the country's 100 million people are short of food. The organization says it needs $350 million in the next 6 months to support affected communities across southern and central Africa. For more on this, let's bring in Bloomberg's Ndiro Ogang, who is joining us from Kigali. So, Ndiro, how dire is this situation? Paint the story for us.
Jen, the situation is quite dire. If you look at DRC, million people are at risk. And this is a country, over the last 3 decades, there's been infighting that has left 7 million people displaced. And the government has spent large chunks of its budget on security. And this is taking away from key sectors such as agriculture and healthcare. And it has left them susceptible and vulnerable to shocks such as drought. If you look at Zambia, they declared a national state of emergency and disaster after poor rainfall that has left 1 million people at the risk of hunger. The case is the same in Zimbabwe, where 70% of their maize production failed, and this has left about 57% of rural population at risk of hunger. The country says this is the worst drought that they've ever seen in 40 years. And just to contextualize that, WFP is that the situation goes and defies any form of human decency. We're seeing them struggling to raise money of the 480 million that they need. They've only raised about 108 million. And so this is going to relief efforts that they could offer, because there's so many global emergencies that are going on, and it's stretching aid from donors really thin.
And Ndiro, maybe in just a few seconds, talk to us about some of the intervention measures that we're seeing.
Briefly, Jen, if we look at Zimbabwe, this time around, the minister was telling Bloomberg that they decided to open their borders and allow traders to import food so that there can be access. The main point of concern is affordability is no longer an option, because we've seen maize prices escalate by up to 150%. So in places where there's no food, traders are allowed to import, but locals cannot afford it. And everybody is now forced to lean on aid organizations such as WFP.
Great reporting. Bloomberg's Ndiro Ogang in Kigali for us there with the latest in Congo. Thanks so much, Ndiro. All right, that is it for Horizons Middle East and Africa. I'm Jennifer Zabasanta in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.
Suppose I want to buy a computer, but I want to have AI in my computer. I want to be really up to date. Do you have AI in your computers yet?
No, not yet, but it's coming soon. And we think this is going to be one of the largest transformations in the PC industry in decades. What will be possible starting this summer is to run large language models in AI PCs, which means that what today all of us are doing in the cloud, where you use any of the applications that you can, you will be able to do it locally. And what this means, which is why we think this is important, is it will be much better from a cost perspective, because running models in the cloud is expensive. It will be better from a security perspective, because you will be able to use the model with your own data locally without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, still.
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. A power vacuum in Syria after rebels depose Bashar al-Assad, forcing him to flee to Russia. Israel moves troops into Syrian territory, and the US strikes dozens of ISIS targets. South Korean stocks lead declines in Asia, with President Yoon facing more calls to resign and a potential travel ban. In China, inflation eases ahead of a key economic meeting. Plus, President-elect Donald Trump says he has no plans to replace Fed Chair Jerome Powell when he takes office next month. A very good morning. Welcome to a new week. Monday, the 9th of December. It's set to be a busy week for central banks against a backdrop of political instability around the world. So let's check in on these markets. We have the S&P 500 notching a new record, the 57th record of the year on Friday, off the back of that jobs report, spurring bets for a December Fed rate cut. We've got futures currently pointing lower but pretty flat stateside, and in Europe a mixed picture but slightly lower on the Euro Stoxx 50, so a risk-off mood. But flipping the board over to the cross-asset picture, all eyes turn now to the US CPI print on Wednesday. Is this going to nail on that December Fed cut? We've got the 10-year US Treasury yield at 4.13% currently. Euro dollar a touch weaker at a 105 handle, lower 0.3%. This with the risk-off mood, given what's happening in Syria, and we'll get to that in a moment. But that's also pushing up Brent oil trading higher 0.6% at $71 a barrel, and Bitcoin just shy of that $100,000 mark that it hit last week. But we're going to get into that with the Binance CEO later in the program. But let's get now to the latest in Syria. Bashar al-Assad having landed in Moscow after Islamist-led forces led a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
Well, Bloomberg's Sam Dagger joins us now. Sam, I've been following your reporting over the weekend, and what I want to ask you is bad news for Assad necessarily good news for the people of Syria?
Well, overwhelmingly,
it's good news for them now. I mean, you have to remember that they've been suffering under this regime. I mean, this family based regime for over half a century. I mean, we have to remember that Bashar al-Assad's father, Hafez, came to power in a coup d'etat in 1970, and he built one of the most brutal regimes in the world, underpinned by repression, violence, and this cult of personality. Syrians rose up against his son, who had inherited power from his father in 2000. I mean, we have to remember, Syria is only by name a republic. I mean, on the paper, it is a republic, but it could be, for all intents and purposes, it is a monarchy. I mean, in terms of how power has been handed over to the son. And they rose up against him, and he met them with bullets. And then the popular uprising turned into war. External actors came in, a horrendous death toll, anywhere from 300,000 to 500,000. Half the population of 24 million displaced either internally or outside the country, and 100,000 at least displaced by the regime. So now that they're opening the prisons, people are wondering whether their loved ones were there in prison. So Syrians are still getting their bearings. I mean, yes, you see these scenes of celebrations in Damascus and elsewhere, and obviously millions of Syrians outside Syria who had been displaced and could not go back to their country also were celebrating. So we have to keep that in mind, that people are just coming to grips with this. Syrians.
But as they get their bearings, of course, the question now turns to what happens next. And I wonder how strong these HTS rebels are, whether they're likely to keep hold of power in Syria, or who else is waiting in the wings to challenge them.
That is an excellent question. I think we have, yes, while they were the HTS, I mean, this is the Hayat Tahrir al-Sham, led by a man known by his nom de guerre, Al-Julani, but now is using his real name, Ahmad al-Shara. He entered Damascus yesterday, but he commands about 15,000 fighters. I mean, he was previously affiliated to Al-Qaeda. I mean, and the organization, his organization was called the Nusra Front, and he personally fought in Iraq against the Americans and was captured there. I mean, he fought with Al-Qaeda. So that's what we're dealing with. But he has gone out of his way to assure Syrians and assure the world that he has changed his colors. I mean, and as kind of a proof of that, he told the prime minister who's in place now, the prime minister who had been appointed by Assad in September, to remain in place, the prime minister and the government, to run the affairs of the country until there is an orderly transition. And in the meantime, you know, the political opposition, which is all exiled, is meeting in places like Ankara, Istanbul, and primarily in Qatar, to try to figure out, you know, what they do. But you have to remember that those, you know, political opposition outside, they have no power on the ground. I mean, they have to work with these fighters. And then you have other factions, and for instance, a group in the south that actually raced to Damascus. This is a group in Dara. It even got there ahead of, the HTS commander. And then you have other factions. So, and these factions have actually fought each other in the past. And then you have, I mean, it is really complicated. You have also the Kurdish militias. Different agenda. They want autonomy for the Kurds, and they've been fighting other rebel factions that are backed by Turkey. So dizzyingly complex, but obviously a lot of countries in the region, and I would say even around the world, are taking a wait and see attitude at the moment.
Well, exactly. And Israel, of course, watching on. And indeed, its forces have overtly crossed into Syrian territory for the first time since the 1973 October War, past the demilitarized border zone. How significant is that, Sam? And what do we know?
Significant, yes. I mean, we are hearing those reports. I mean, I'm talking to people who are confirming those reports. I'm talking to people in Damascus who are saying, again, we as Bloomberg, we haven't confirmed this yet, but they are saying that there were also Israeli airstrikes against a number of facilities. There is in central Damascus called the security quarter. I mean, that's where all the headquarters of all the security services, and a lot of these buildings were up in flames last night, and people were saying it was, an Israeli strike. And also there is this research center on the outskirts of Damascus where the regime developed chemical weapons. I mean, let's remember, this regime used chemical weapons against its own people starting in 2012. And that facility was bombed. So Israel is clearly worried about weapons, coming into the hands of these rebels that it doesn't trust at the moment.
All right, Bloomberg Sam Dagger, we thank you for that excellent, crucial reporting and the context as well. Thank you so much. Now, let's turn to the political crisis in South Korea. Stocks slumping as traders brace for volatility because of that turmoil. Yonhap News has reported that police may seek the emergency arrest of President Yoon if conditions are met. And that, of course, follows this weekend's failed impeachment attempt. We can get more now with Bloomberg's Katya Dmitrieva. Katya, there's this enormous pressure on President Yoon to step down. Unions threatening to strike unless he does. Can he last? What's the latest?
Yes, that's the big question right now. And it's looking increasingly unstable, his position, just in general, amid all the uncertainty that's been happening over the last week. We're now entering the second week of this instability in South Korea. And if you listen to the main party, the PPP, that's Yoon's party, what they've said is that he's not actually the one making decisions right now, that as of Sunday, it's actually the prime minister and the party in consultation who are making decisions for the country as Yoon prepares sort of his exit to step down. Of course, the opposition party, the Democratic Party, are not happy with that. And they say it's unconstitutional. And they're looking on Wednesday to have another vote seeking impeachment of the president. Now, they're going to have to try to find some votes that they couldn't find on Saturday. So the numbers are still not looking like it might add up to an impeachment. But the next, 24, 48 hours, we could see a lot of movement because, as we've heard, the police have launched this investigation. They're seeking to potentially prevent Yoon from leaving the country, as well as all the allegations that have been made in recent days. And on top of that, you have his own party, Yoon's own party, that are saying he's not actually the one calling the shots right now, plus all the protests we've been seeing on the ground. So really incredibly getting volatile for President Yoon and looking increasingly less likely that he'll be able to hold on to his position.
All right, Bloomberg's Katya Dmitrieva, we thank you for the latest on the political situation there in Korea. Let's get to the market reaction now. We can go to Avril Hong in Singapore with a look at the Kospi, the won, and broader Asia markets. Avril.
Yeah, Lizzie, we're seeing that expectation of a prolonged, protracted political crisis in South Korea. That's really what's hitting stocks in the country today. The Kosdaq, I wanted to highlight, this is the small cap gauge, is losing by the most since August. Not only that, it's actually at the lowest level since April 2020. This is the early days of the pandemic. Why is this significant? Because this is a rare signal in terms of its underperformance versus the benchmark Kospi. This is something that we really don't see. And this tells us that even retail investors in South Korea are souring in terms of sentiment towards the nation's stocks. They perhaps don't see a quick turnaround. And this is following on from what we're already expecting from these foreign investors. The other thing to highlight when you see this underperformance, we saw this similarly in 2016, 2017, when politicians were seeking the impeachment of another president. And back then, the picture versus now is quite different because Korean investors have options. US stocks, cryptocurrencies, all in doesn't bode well for South Korean equities. The won, lowest level against the greenback in more than 2 years. Flip the board. I wanted to talk you through what we're seeing in China as well, because today we did get CPI numbers that showed you an unexpected slowing in consumer inflation in the country. So it just shows you how whatever policymakers have been throwing at the Chinese economy in terms of stimulus that just hasn't cut it, not enough to revive the economy. Stocks, they're underperforming. Where we are seeing buying is in Chinese bonds, perhaps the expectation of more easing, fresh lows on the yield on the 10-year in the country. Lizzie.
All right, Avril Hong in Singapore, we thank you. Keeping a close eye on Korea and China. But as we broaden out our thinking on global markets, let's get to the US as well, where President-elect Donald Trump says he has no plans to replace Fed Chair Jerome Powell when he returns to the White House. Trump was speaking in an interview on NBC's Meet the Press with Kristen Welker.
I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
Let's bring in Bloomberg's Valerie Teitel now. Of course, Val, we had Jay Powell saying last week he doesn't expect tensions with the incoming administration. Whether you believe that market's buying it as well.
Look, Lizzie, the Fed chair will come under a lot of heat with the new president-elect Donald Trump taking office in January. But markets were very much watching that interview, the first one since he won the election, for any new hints on tariff policy. We didn't necessarily get that. He was strong on tariffs when it came to Canada, but the lack of new news when it came to those tariff announcements from Donald Trump. We are seeing the Bloomberg Dollar Index just slightly stronger overnight. Those S&P futures are hovering near all-time highs. They hit a new record on Friday after that employment report. And the U.S. 10-year yield, we're still seeing a strong rally in treasuries. That rally on Friday is continuing. The biggest risk event this week, though, for U.S. assets is going to be Wednesday's U.S. CPI report. If we flip on, just look at how the U.S. inflation has moderated recently. We've actually seen a slight pickup in the month-on-month readings, which has led the 3-month annualized reading to now be above the 2% Fed's target. Many out there expecting that maybe a hot print on Wednesday could put that Fed cut in December in question. What else we have to watch out for this week? We have a slew of them this week, beginning with tomorrow. We hear from the RBA. We also get on Wednesday the Bank of Canada. They're expected to do a jumbo 50 basis point cut after an unexpected rise in their unemployment rate on Friday. We also hear from the Central Bank of Brazil. Then on Thursday, we get the ECB. They're releasing their macroeconomic projections alongside their rate decision. That will be a good one to watch for the market. And we also get the SNB. That's the Swiss National Bank. They're in Switzerland. They're expected to cut as well, but the market is maybe assuming that they could be on a quicker path to get towards the easing territory.
Value of those ECB forecasts with the uncertainty around the politics in France and Germany and those Trump tariffs. Valerie Teitel, we thank you for that look ahead. Coming up on the program, celebrate the fall of Bashar al-Assad. We'll look at the country's next chapter and which regional powers stand to lose out. That's coming up next. And we'll be speaking to the CEO of Binance, Richard Teng, on the recent surge in Bitcoin, as well as optimism around crypto regulation. So don't miss that later this hour. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is a historic day for the Middle East. The collapse of the Assad regime, the tyranny in Damascus, offers great opportunity, but also is fraught with significant dangers. This collapse is a direct result of forceful action against Hezbollah and Iran, Assad's main supporters. It set off a chain reaction of all those who want to free themselves from this tyranny and its oppression.
So that was Israel's Benjamin Netanyahu in a video posted on X. And I'm joined now for more on the situation in Syria by Mehmet Özel, professor at the Center for Islamic Studies and Civilization at Charles Sturt University. Professor, thank you so much for making time. First of all, how will the Assad family be remembered in Syria?
Unfortunately, they will be remembered as brutal tyrants. Bashar al-Assad and his father, Hafez al-Assad, have ruled Syria for 54 years. And in that time, they have suppressed any dissent and, diverse voices. A lot of people were arrested, tortured in prisons, and we are seeing examples of that when the prisons are released. Hafez al-Assad is known for 1982 Hama raising of the whole city with the rebels there, and at least 10,000 people, up to 40,000 estimates, have died. And former President Bashar al-Assad could have been better. He showed some promise initially, but with Arab Spring in 2011 onwards, he chose a path of hardline suppression of any dissent and opposition. And as a result, more than 600,000 people have died and millions are displaced or refugees. And they will be remembered for these major damages done to the country.
Well, in terms of those people displaced, migration, of course, at the forefront of the political debate here in Europe. I'm wondering where the refugees are likely to go, who they're likely to be, and really how many supporters Assad had.
Well, there is an expectation that the refugees that escaped the country during Assad government will return back. And we've seen that in the statement of the new leadership of Syria. They've put attracting back the refugees or their own citizens back to Syria. So we could see a reversal of refugees from Europe and Turkey back as Syria develops and stabilizes.
And I know that HTS has tried to portray itself as more moderate since it broke away from Al-Qaeda in 2016. How would you characterize the group, and what's likely to unfold in Syria now under its rule?
Well, what victors say at the moment of triumph are important. They usually brings out their true nature, and HTS have certainly said the right things. They gave the right messages. For example, they said that there will be no retribution in the country for previous regimes' mistakes and sins. That's a very important sign to bring stability, because these people could rise up and rebel again now to the new leadership. So they said the right thing. They talked about reconciliation. They mentioned being tolerant to ethnic and religious minorities in the country. You have to be like that if you're going to govern Syria. It's a very diverse country. and they're saying the right things, but we have to be cautiously optimistic, or still cautious, because HTS do come from the Al-Qaeda. They split from Al-Qaeda in 2016, which was a long time. And in a recent CNN interview, the leader, Mohammed Al-Julani, said that they're now older and wiser, and their thoughts and views on Islam have moderated. I think we haven't seen anything wrong said or done so far, but of course, we don't know what the future will entail.
Yeah, just finally, Professor, very briefly, given this took Russia, the US, Iran by surprise, are there other countries that we should be watching more carefully now?
Well, Russia and Iran are the biggest losers of this conflict. They're completely out of Syria. And new players are Turkey. The United States will be an important player. And through United States, Israel put pressure on the new Syrian leadership. And these are the main powers. And European Union and NATO will also be an important element. So they will all be on a negotiation table at the moment in order to recognize the new leadership. These will put some conditions.
All right, Mehmet Özal, Professor at the Center for Islamic. Really great to get your insights this morning. Thank you. Coming up on the program, we're going to be speaking to Richard Teng, CEO of Binance. We'll discuss Bitcoin's recent rally to $100,000 and the impact of a Trump presidency on the crypto industry. That's next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Henry Hordern only on Bloomberg. Context changes everything.
Now to some other stories making news around the world. Ukraine's president says 43,000 Ukrainian soldiers have died since Russia began its invasion in 2022. Volodymyr Zelensky posted the figure on X after Donald Trump claimed on his Truth Social platform that Ukraine had lost 400,000 soldiers. The pair met in Paris on the weekend, with Zelensky saying he stressed the need for, quote, effective peace guarantees from Kyiv's allies. President-elect Donald Trump has said on his first day in office he will pardon the rioters involved in the attack on the US Capitol on January the 6th, 2021. Trump confirmed the news in an interview with NBC's Meet the Press, his first network TV interview since his election victory. Trump's comments follow President Joe Biden's decision to offer a pardon to his son, Hunter Biden. And New York police have released new images of the suspected gunman in the killing of health insurance executive Brian Thompson, including one of him in a taxi that he used after the shooting. Investigators say the suspect hailed the cab on the Upper West Side of Manhattan soon after the attack, heading to a bus station to leave the city. And Omnicom is reportedly in advanced talks to buy Interpublic in a deal that will look at between $13 and $14 billion. Those are some of our top stories coming up on the program. We're going to be speaking to the CEO of Binance, the world's biggest cryptocurrency exchange by trading volume. We'll discuss Bitcoin's recent record rally. That's next. Stay with us. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. A power vacuum in Syria after rebels deposed Bashar al-Assad, forcing him to flee to Russia. Israel moves troops into Syrian territory, and the US strikes dozens of ISIS targets. South Korean stocks lead declines in Asia, with President Yoon facing more calls to resign and a potential travel ban. In China, inflation eases ahead of a key economic meeting. And President-elect Donald Trump says he has no plans to replace Fed Chair Jerome Powell when he takes office next month. Those are your headlines. Checking in on these markets as we kick off the week, and it's a cautious start to this new week. We had the S&P 500 notching its 57th record of the year last week, off the back of that US jobs report, spurring bets for a December Fed cut. But we've got futures in Europe pointing lower now, at least on the Euro Stoxx 50. FTSE 100 futures flat to the upside, and on Wall Street futures flat to the downside. But if we flip over to the cross-asset picture, the question now, as Valerie Teitel set out for us, is really whether that US CPI print on Wednesday will seal the deal on that Fed cut. You've got Treasury yields steady on the 10-year at 4%. 1.13%. Euro dollar at a 105 handle, under pressure slightly from the fall of the Assad regime in Syria, putting pressure there, partly a risk-off trade. That's feeding into the oil price. Brent trading at $71 a barrel, and Bitcoin just shy of $100,000. But let's get into Bitcoin now. It crossed that $100,000 mark last week for the first time on the optimism that President-elect Trump is going to support the digital asset industry. As I say, it's just shy of that now. But let's go now to Abu Dhabi, where I'm delighted to be joined by the CEO of the world's biggest cryptocurrency exchange by trading volume. That's Binance's Richard Teng. Richard, thank you so much for making time for us. We've seen Donald Trump picking pretty crypto-friendly picks in the form of his AI czar and in the form of his SEC chair. Where does that likely change in the regulatory stance in the US leave you at Binance?
Well, I do think that if you look at 2024 is a landmark year, right? So if you tell people before 2024, Bitcoin will hit 100,000, there'll be ETF being approved for Bitcoin, Ethereum, Solana, and several others. And as well as institutions, I mean, the largest asset manager in the world, BlackRock, has gone from a skeptic to believer. I think people will not believe it, but come to the end of 2024, all those have come true. We have now a very crypto-friendly president in the States and extremely smart strategy appointing an AI and crypto czar on that front, because this too represents the most innovative technology for the future, and countries will do extremely well. I mean, Abu Dhabi this week, the capital of capital, again, Abu Dhabi and UAE has been very foresightful in that front to start investing AI, blockchain, to move those very early on. So we are seeing the results of all those deployment in Abu Dhabi and UAE now. So countries will do very, very well to continue to focus on these two technology, and we will continue to focus on serving our fast expanding user base. We're close to 250 million users globally now, 70 million onboarded this year alone. So we are very excited with the journey ahead.
But of course, Binance is under monitorship by the US DOJ and the US Treasury's Financial Crimes Enforcement Network. Would you be looking to press the Trump administration to shorten or terminate the monitorships, given the president-elect's kind of preference, as we say, for looser crypto regulation?
Well, I mean, any of those discussion, I think, is new. I believe that compliance is the way to go, right? So Binance has always been a user-first organization. But going forward, given that regulations is going to be much clearer throughout the world, we have the ability to invest very heavily in compliance space. I want to make compliance a competitive advantage for ourselves. Right? So last year alone, we invested $230 million US just on our compliance program, which is a more than 30% increase compared to the year before. And this year, it go up even more. We are the most licensed and regulated exchange globally now, in more than 20 different jurisdictions that license and regulate us. More recently, in places, exciting places like India and Argentina. So we are working with global policymakers, lawmakers, to really support the crypto journey, to support the crypto deployment. And we continue to work very closely with US monitors on that front to continue to see whether there are areas that we can enhance the program further. I think it's a good competitive advantage. We are able to invest in places that our competitors are not being able to invest in.
Well, yeah, are you looking to re-enter that US market then more forcefully? And if they introduce a stablecoin framework, would you be reviving Binance USD, BUSD, or would you be launching a similar token perhaps?
Well, globally, we are supporting crypto adoption. So on different fronts, right? So stable coins, other innovation in this space, cross-border payment, etc., etc. Whether we re-enter the US market, I think that's a premature discussion. Now we are focusing on our global deployment. We are growing very, very quickly, and very, very happy with the progress of what we are seeing. I think this year alone, if you look at the net inflows into finance, it crosses more than 20 inflows versus the 10 largest exchange, the next 10 largest exchange put together. We are 40% much more than the 10 largest exchange put together. So you can see the phenomenal growth. We have seen a lot of new institutions being onboarded. Coin strategic reserve and Brazil considering it. I do believe that many other countries around the world will start to deploy the countries, is the sovereign wealth funds, institutions, foundations, endowments, high net worth individual. So they're going to start allocating this space. So the future is extremely bright.
Well, so you've been in post for just over a year now, Richard. I wonder what you would say are the biggest changes you've implemented in that time. And as you look ahead, are you planning to add more independent advisors to your board, for example?
Well, we have a strong board of directors today. We have a board of directors of 7, 3 independent directors with an independent chairman. So we are in a very good place in terms of corporate structure. I think we have really moved from a founder, CEO-led company to a board-led company. So the senior management of the company work very closely with the board of directors to chart the strategy and the deployment of the company going forward, right? And we are continuing to move from strength to strength. We have not only focused on our investors, our users, we invest a lot into security, and I mentioned compliance, and all those are key areas. I mean, this year alone, you see plenty of exchanges being hacked around the world, right? So Japan, Forex in India, Indodex in Indonesia, BTC Turk, and the list goes on. So this is an area that we focus a lot of attention to. I mean, we are the exchange that set aside more than 1 billion just to compensate users just in the event of untoward event of a security hack, right, on that front in the form of SAFU fund. So we go beyond what many regulators prescribe in terms of user protection and helping our users detect the fraud and scams on that front, helping them avoid 2.4 billion in terms of potential losses just for the first half of this year. So these are areas that we paid a lot of attention to, and we're very proud of all those things that we've done.
Just finally, Richard, as you mentioned, you're there at Abu Dhabi Finance Week. I wonder what opportunities you see specifically in the Middle East region.
Well, it's huge. So just in UAE alone, crypto adoption is close to 40%. I think the same theme is repeated throughout the Middle East, right? So Abu Dhabi was, when I was CEO at Abu Dhabi Global Market, we were one of the first in the world to introduce a crypto regulatory framework to govern this sector in 2018, right? So we are quite ahead of the game there. And you can see Abu Dhabi continue to grow by leaps and bounds on the blockchain, crypto, as well as the AI space, right? So I think that same theme is repeated throughout the Middle East, in Bahrain, Dubai, and the rest of Middle East, you know, very young demographics, tech savvy, people understand crypto. So, and there are many parts of Middle East, South Africa region where financial inclusion is low, which makes where crypto becomes the only means that people can make payments, can get access to the bank sort of payment system. They can have a store of wealth in the form of stable coins or crypto, and they're much better off. I traveled the region quite extensively, and people come up to thank me in the last few years going through hyperinflationary situation where their domestic fiat currency depreciated sharply. Their family by holding on to crypto and stable coins. So I have many of these stories repeated throughout the Middle East and throughout the world when I visit many of these countries.
Okay, thank you so much. Richard Tang, CEO of Binance. Lovely to have you with us on the programme from Abu Dhabi Finance Week. Now, getting back to South Korea, where, of course, we have seen that political turmoil. The latest breaking news is that the President, Yoon, has been banned from leaving the nation. This is according to Yonhap. He is under investigation by the South Korean police over his brief declaration of martial law. You saw the Kospi closing down 2.8%. And this is putting pressure as well now on the won, weaker 0.9% against the dollar. We can also go back to the story of Syria. Of course, over the weekend, we saw Bashar al-Assad fleeing to Moscow after rebels advanced into Damascus and toppled his regime. Israel has moved troops into Syrian territory now, while US airstrikes have hit ISIS targets, reflecting concerns about more upheaval in the Middle East amid that power vacuum. We have world leaders grappling with the fall of the dynasty after, of course, more than 50 years in power. And Europe is likely to be affected. We can join Oliver Crook now in Brussels because, Ollie, of course, it was the Syrian conflict that led to the rise of Germany's AfD party. So with the demise of Assad, the question of where the refugees go back on the table, I wonder what's been the European reaction?
Yeah, Lizzie. So listen, it's a very sort of interesting and complex situation that is being observed very closely by a lot of the leaders here and the foreign ministers across Europe. And I think that overall, the reaction has been one that is fairly ubiquitous. We heard from Kaja Kallas, the High Representative for Foreign Affairs here at the European Commission, who will hold that title for the next 5 years, saying that the end of Assad's dictatorship is a positive and long-awaited development. It also shows the weakness of Assad's backers, Russia and Iran, which is a sentiment that Joe Biden also made over the weekend, saying that basically this is in part due to how weak Russia and Iran are. But this is very much a very cautious optimism here in Europe. There's very much wait and see mode. A lot of this will come down to how Abu Mohammed al-Jolani decides to sort of proceed through things. He gave a very interesting interview to CNN actually just a couple of days before they managed to topple the Assad regime, where he was talking about basically what Syria needs is institutional governance. He says there needs to be a legal framework in place to deal with minority groups in order to treat them fairly, to make sure that they're protected. These are a lot of the right things to say as far as Western leaders are concerned. The question is, will he be able to, is that his intention, first of all? And second of all, does he have enough consolidated power in order to implement that in what is going to be a very fractured and very sort of complicated situation? And why the sort of Europeans are so concerned with it is when you look at Germany, for example, as you were alluding to, Lizzie, you look at the different sort of immigrant groups within Germany. Number one of that list is Turkey. Number two is now Ukraine. Number three is Syria. There are more than 1 million people that came from Syria and descended from those families that moved into Germany. And when you look at the timeline, the Syrian civil war began in 2011. The AfD was founded in 2013. Merkel let more than 1 million refugees in at 2015. And today, heading into the election 2024, the AfD is polling at about 20%. So for the leaders here and for Europeans, they will be looking at this very, very closely. Potentially more stability in Syria could mean that refugees could go back ultimately. But again, there is so much unknown. We're here to speak to finance ministers here. We're also going to ask them whether or not they're going to have to take into consideration the possible costs of more refugees coming into Europe. That'll be part of the conversation today with the finance ministers who are assembled here in Brussels.
All right, Bloomberg's Oliver Crook on the ground for us ahead of that ECOFIN meeting. We thank you for your reporting. But coming up on the programme, bond traders are hoping for a calm end to the year, but a surprise jump in US inflation could prove another bump in the road. We'll discuss that next. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity. It's not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Good morning. This is Bloomberg Surveillance. Welcome back to...
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg report under surveillance with crucial data and expert analysis at terminal speed. Nobody like Bloomberg.
I can't guarantee anything. I can't guarantee tomorrow, but I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China, we took in hundreds of billions of dollars and we had no inflation.
So it's President-elect Donald Trump there speaking about US tariffs on NBC's Meet the Press with Kristen Walker. And to discuss the impact of Trump's tariffs on Europe's economy, I'm joined now by Hetal Mehta, Head of Economic Research at St. James's Place. Good to have you with me, Hetal. Good morning. I wonder whether you think the disinflationary impact of cheap Chinese goods being diverted to Europe is going to outweigh the inflationary impact of lower taxes, slower Fed cuts, and then that currency impact to Europe? Or do you think about it completely differently in a different framework to that?
No, I think it's a kind of fair framework to think about things. The form of retaliation that Europe takes if tariffs are levied on Europe, will really matter to the economic outcomes. So we've already seen to some extent that the currencies adjust to reflect the possibility of tariffs. The weaker euro is actually going to increase inflation for Europe in the short term. That's possible. So I think it's very, very difficult to know, depending on how big the tariffs are levied, where they land, and exactly what the retaliation looks like. We know from the first term that there was some kind of tit-for-tat tariffs, but I don't know whether that's something Europe would necessarily want to engage in. But again, it does depend on how broad-based the tariffs are, whether it's on specific goods or more of a kind of a blanket. I'm also quite worried about the starting point of the European economy at this point. The ECB can try and cut rates and keep the euro weak anyway, but it's got the domestic economy is actually quite weak as well right now.
Yeah, I mean, indeed. But if you were on the Governing Council this week in Frankfurt, I wonder whether you'd be more worried about the political turmoil in France and Germany or the spectre of Trump tariffs.
It's not an easy position to be in at the moment, is it? I think in the near term, we don't know how the politics will resolve. We've seen political instability in Europe kind of flare up and fade. I think for the ECB, the task right now really has to be on the weaker growth. It does also have some reasons not to be very aggressive in cutting interest rates. And I think, like most policymakers, we also heard this from Jay Powell, until we know what the tariff situation actually looks like, it's very difficult to kind of react to preemptively.
If we can think about the Bank of England as well, we get the UK growth numbers on Friday. I was speaking to Swati Dingber, the archdove of the committee. Just take a listen to a snip of what she said.
We have a very restrictive stance at the moment. That's weighing on living standards. That's weighing on even supply capacity and investments. And that's why we need to sort of start to take that away to some degree so that we start to get normalization back into the economy.
I mean, do you agree with her? Is the UK at risk of a policy error if the Bank of England cuts too gradually?
I think for me, the key concern at the moment is just still how sticky services inflation has been. I agree with the idea of removing some restrictiveness gradually. That part I agree with. And for us, we've been saying for a long time, it's about policy normalization, getting rates to somewhere close to neutral. And I know Swati Dhingra has actually been more open about where she thinks the neutral rate is. But does the UK economy need monetary stimulus at this stage when we've also got this near-term fiscal boost that is coming through in terms of public spending? I think is a question mark. So maybe that removal of removal of restrictive rates can happen, but I think there are probably too many corners to look around before we can say that that's appropriate. Maybe second half of next year we'll have a bit more clarity on that. But for the time being, I think gradual normalization is the part that I agree with.
Of course, the question of the extent to which those tax rises on employers are passed on to consumers. Hetal Mehta, Head of Economic Research at St James's Place. Lovely tree, may I say. Thank you for joining us this morning. Now, to another top interview. UBS CEO Sergio Ermotti has said that rising tariffs and global conflicts could increase risk in financial markets next year. He was speaking to Bloomberg at the Abu Dhabi Finance Week, where he weighed in on the European banking system.
It seems to me that Europe is much more preoccupied at country level to address their own political worries, and there is less focus on the European project. So I'm afraid, it looks like a very good piece of work that has very good ideas, but it's unlikely to be implemented in the short term.
The UBS CEO Sergio Ermotti there speaking to Bloomberg's Jumana Basecci. We've got plenty more coming up, so stay with us. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on G, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me stations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Bloomberg. Break Europe. Let's set you up for the week with a couple of charts from the terminal. We, of course, have the ECOFIN meeting coming up in Brussels. Oliver Crook's on the ground for us. And a big topic on the docket will be Ukraine. What's next and what does it mean for defence companies? You can see here that EU defence companies are up nearly 60% in 2024. This ECOFIN meeting, by the way, is the first time a UK Chancellor has attended it since Brexit. And a big question for the UK is when is it going to announce that deadline to spend 2.5% of GDP on defence? I spoke to the UK Defence Secretary about it. He said spring, but that is not the sort of certainty that these companies want or that Donald Trump wants either. That's the geopolitics. Let's also turn to the economics, the central banking picture. It's a busy week. The ECB decision, of course, in Frankfurt on Thursday. And you can see that markets have reduced the outlook of a half-point cut, not just at the upcoming meeting, but at the one after it as well. Speaking to ECB officials, they say that a jumbo cut would reek of panic. But just take a look at the weakness in our next chart in Germany. We had those industrial production numbers missing all estimates on Friday. It was the weakest since COVID 2020. How much are Trump tariffs going to weigh on that growth picture even more? A big question ahead of that meeting. But right here on Bloomberg TV, do stick with us because at 9:30 a.m. UK time, we're going to bring you an exclusive interview with the CEO of Audemars Piguet on the outlook for the luxury watch market. And tomorrow, Bloomberg Television is going to bring you live coverage of our inaugural Women, Money and Power event, convening the most influential female voices in finance from around the world to discuss the consequential themes facing the future of business. The opening trade's coming up next. We've got Anna, Critty and Guy taking you through the market open. So stay with us. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world, in architecture or with something else?
Well, I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I would say no. I would never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning from London. I'm Anna Edwards alongside Guy Johnson and Chrissy Gupta. We're an hour away from the opening trade. Here's what you need to know. Bashar al-Assad flees Syria to Moscow, ending his family's 50-year grip on the country as rebel forces take control of key cities. Meanwhile, Israel moves troops into Syrian territory and the US strikes dozens of ISIS targets. South Korean stocks sell off as pressure mounts on President Yoon to resign. European futures edge lower amid the global geopolitical turmoil. And President-elect Donald Trump plans to replace Fed Chair Jerome Powell when he takes office next month.
In the meantime, a quick check on these markets. Risk assets kind of pointing to the downside. We look at your stock 50 futures down by 0.2%. The FTSE 100 outperforming, but it is flat. To me, I thought was interesting is the China store. We are seeing weakness in the Chinese yuan. Inflation data than expected, 728 on that currency pair. And of course, one eye on the Middle East, just shy of the 72 handle when it comes to Brent crude. The countdown to the opening trade starts right now.
Monday the 9th, good morning. Sergio Amotti, UBS Sergio Amotti, telling Bloomberg this morning that tariffs and geopolitics can rattle markets in 2025. Forget 2025, let's talk about 2024. Last week, it was all about France. Last week was all about South Korea. We can now add Syria to the list of surprising and shocking geopolitical events. The question is, are these events going to upend markets? Syria is a really interesting one because it spreads out very quickly into the rest of the Middle East and potentially could impact Europe as well.
Yeah, we're already seeing that to some degree, Guy. And vacuum seems to be the word that stands out pretty loudly when you're reading a lot of the coverage this morning. A power vacuum. Where does this go? How violent is the process of getting to any political process in Syria? From the HTS, the SDF, the SNA, we've got acronyms aplenty, rebel groups aplenty, united up to this point by their dislike for Bashar al-Assad. What unites them, if anything, now as they try to craft a future for the Syrian people? We've seen Israeli forces crossing into Syria. We've seen the US hitting more than 70 ISIS targets. They are worried that ISIS might try to take advantage of the power vacuum in the mix. And meanwhile, President-elect Trump says this is not our fight.
It's a really interesting bifurcation between what Trump is doing and what the Biden take actually is. And you mentioned those strikes. But to me, the fact that this is really a function of Iran fighting really two fronts and several others in other parts of the Middle East, Russia trying to deal with their resources going to the war in Ukraine, and that really coming to a head in Syria when it came time to rely on those allies. Bashar al-Assad couldn't.
Turkey coming out of this potentially very strong. That's interesting in terms of the way that the region is going to shake out as well, and what authority power Erdogan has on the back of this. I think it'll be really interesting to watch. I think we also need to remember from a European point of view, Syria was really at the genesis of the migration crisis that Europe had to deal with a few years back. And you do wonder whether or not there is a repeat potential here or a reversal potential here, or how this is going to shape European politics as well, because Syria in so many ways has been pivotal to that over the last few years.
I mean, there are Syrian refugees in Turkey. Because a lot of European money went to Turkey to make that happen, to get them to stay there instead of coming to Europe. And that was more than a decade ago now. Yeah. If this went well in Syria, could we see those people being able to go back? But of course, it's much too early to make that kind of call.
Let's talk about what else we're watching as well. South Korea, absolutely fascinating. So President Yoon escaping impeachment over the weekend. What happens next? How do his allies maybe generate some sort of exit for him that is relatively peaceful? Obviously, we're still watching the fallout from his declaration of martial law. You're starting to see that really rippling into South Korean assets. You've got the won down pretty sharply. You've got the Kospi down pretty sharply. You've got the smaller mid-cap index down pretty sharply. That's what we're watching very carefully in terms of the read across into markets. Romania, also fascinating. People had already started voting in the second round of the Romanian presidential election. And then the Constitutional Court cancels the first round. So we're now looking potentially at the rerun in January. The Romanians don't know whether they're coming or going at this point, and markets are kind of very cautious on that. And you can see that being reflected in the Romanian leu, which has bounced quite strongly. Does that reverse? We don't know yet.
And the concerns, of course, coming as a function of what kind of Russian intervention there may be in that voting system as well. At the same time, Anna, that it comes up as issues in Moldova, issues in Georgia as well in terms of EU ascension. And this is really where I think the Trump administration makes a lot of sense here when it comes to what the ripple effects are, not just for Romania, but for other maybe countries around the world.
Yeah, absolutely. And on that Romanian story, I mean, so fascinating. This is the first time that a Western court has intervened to overturn the result of an election because of fear of meddling from Russia. And this, as you say, this is important because of what it means for the Russia relationship, important for these big tech names as well, from TikTok to Meta. You know, there's going to be increased scrutiny as a result of this.
Who's the president of the United States?
Well, it is President Biden at the moment, but you know, in 6 weeks. Well, I think it's crucial though in terms of who can actually strike right now. Who is representing the United States in terms of strikes in Syria, in terms of the political negotiations with, say, South Korea, Romania, and whatever. It is still President Biden. I think that's very clear, in that even though Donald Trump, the president-elect, tweeted or Trump socialed or whatever the term is posted. Thank you for educating me on social media of all people, but posted about not getting involved. The United States is getting involved right now in terms of those strikes that you pointed out.
Yeah, absolutely. So there is that activity taking place. But to your point, Guy, a lot of the headlines coming out of Paris over the weekend were about President Trump being there with world leaders to celebrate the reopening of Notre Dame. Yeah, and he had a meeting with President Macron.
Yeah, like it felt like a state visit, which is the weird thing. And it does seem as if he is setting the agenda when it comes to what's happening in markets right now. Look at what is happening with crypto. Look at what is happening with the story around equity markets more broadly. It feels like he's setting the agenda in terms of what's happening on so many areas right now. So I of course, President Biden is still president. But as somebody, I was reading a journal piece earlier talking about this is the lamest of lame duck presidencies that you've seen in quite some time.
It's a fair one. And to Anna's point in Paris, the fact that I think he made a statement, which I thought was or a comment saying that the world is a crazy place right now. We're going to try to find our way around it, or something along those lines. I thought that was quite interesting coming from him, standing right next to, by the way, Vladimir Zelensky when he said it.
Let's talk about what we've got coming up in the rest of the show. We've got this all covered for you. Paul Donovan, UBS Global Wealth Management Chief Economist, is going to be joining us. We've, of course, got US CPI this week, which is something to watch, plus as well. Forex, I guess, LSE Professor of International Relations is going to be joining us to talk about the collapse of the Assad regime and what that means for Europe and for the world. Ria Weidmana, State Street Global Markets Head of Equity Research, joining us. Traditionally, she has been long cash and long US tech. Does that trade still work? And Eduardo Lecubari, JP Morgan Global Head of Small and Mid-Cap Equity Strategy, is going to be joining us later. Take a look at the gap between the performance of US small caps and European small caps. It is epic right now. We'll talk about that a little bit later, Chrissy.
Well, throughout the rest of the week, plenty to watch as well. We're, of course, going to be monitoring the geopolitics, what happens out of Syria, of course. We're also on watch, by the way, for who Emmanuel Macron names as his new prime minister and what the new steps are there, not to mention things going on in other parts of Europe, including the Eurogroup finance ministers. They are meeting today. I believe Rachel Reeves is due to attend as well. That'll happening today. Tomorrow, though, a Bloomberg event that we want to flag to our audience, Women, Money, and Power. We, of course, will be broadcasting live from the event as well. In the lead up to it, we've got an all-star lineup. That's something that we'll, of course, talk about later in the show, but it's a show you do not want to miss. On Wednesday and Thursday, I think that's really where the markets start to kick in, perhaps a little bit more. China's policy meeting, plus that U.S. inflation data. Do we care about the jobs number from Friday? That, of course, blowout number, but does it make up for the month before? Maybe none of it matters in the face of the U.S. data. And then, of course, the ECB rate decision coming in on Thursday. We've got plenty of market moves, but I feel like kind of skewed to the back half.
Yeah, we've got something in every geography, haven't we? We've got US CPI, we've got an ECB rate decision, and we've got the Chinese Work Council meetings taking place. So, you know, every geography covered in terms of things that could move markets. Maybe none of them will. Maybe all of them will. We'll have to wait and see.
Payrolls didn't deliver very much at the back end of last week. Basically just confirmed a 25 bit cut coming from the Fed. But what happens next, I think, is going to be really interesting. Does the CPI change that narrative in any shape or form? Is a pause now front and center for the beginning of next year? The ECB, like 50's off the table, it seems, which in some ways is a surprise to us, given the data that we're seeing right now, which just gets worse and worse and worse. So it's going to be fascinating. The Works Council thing, I live in expectation.
Yes, we seem to always be living in expectation of something that's going to deliver enough fiscal stimulus to get Chinese consumers spending. We had that CPI print out just overnight, didn't we? Out of China, it came in, it slowed once again, came in below estimate. PPI was, 26 months and counting that we have dropped in PPI, deflation in PPI coming out of Chinese factories.
And that's showing up in the weakness of the Chinese yuan this morning. If you look at the biggest currency moves, whereas I feel like you're seeing the dollar, the euro, the pound, a little bit kind of shrugging their shoulders, whatever the currency equivalent of that, fairly flat. It's the Chinese yuan where you are seeing most of that volatility. So still very sensitive to that.
What has been done thus far has not delivered.
Yeah.
So what it implies is that if you want to get these numbers moving, you're going to have to do a lot more heavy lifting. That would certainly seem to be one read of this data. It kind of just begins to capture some of the period in which we've started to see talk of stimulus coming in.
Yeah. Okay, let's return to our top story this morning. Syrian President Bashar al-Assad's government has fallen after a stunning territorial advance by opposition groups over the past few days. Joining us now, Bloomberg's Sam Daggett, who is in the region for us. Sam, very good to have you with us. From the region, tell us a little bit more about the power vacuum that has been created and people's expectations as to what happens next.
Absolutely. I mean, good to be with you. I'm going to start basically to what's happening on the ground. I mean, it was really incredible. I mean, just to see Syrians celebrating both inside Syria. Yes, there were scenes of chaos, some looting. But in general, I mean, Syrians have been rejoicing. I mean, we have to remember, I know the outside world is now focused on, what comes next, but we have to remember people are still, I mean, Syrians are still, getting their bearings. This is a family that's ruled over half a century. I mean, the dad took over in a military coup in 1970. He built one of the most brutal dictatorships in the world, underpinned by this cult of personality, repression, and sort of unspeakable violence. And then, I mean, on paper, Syria is a republic, but for all intents and purposes, it is a monarchy. I mean, he handed over power to his son in the year 2000. Then a decade later, people rose up, demanding freedom, rights, end of corruption. He met them with bullets, and then it spiraled into this multi-layered conflict with external players, with jihadists like Islamic State rising up, and capturing, large chunks of territory, and then the whole conflict kind of like going into a whole different direction. With Iran heavily involved on his side and Russia involved on his side. So I think people are still inside Syria coming to grips. And let's remember also the huge, humanitarian toll of all of this. I mean, at least anywhere from 300,000 to 500,000 people killed. Half the population, I mean, the population of Syria is 24 million. Half of that is either internally or externally displaced. And you're talking about at least 100,000 people who have been forcibly disappeared by the regime. And people don't know if their loved ones dead or alive as the prisons open up. I mean, they're trying to find, whether their loved ones are still alive. So I think we need to keep that in mind. But obviously, yes, focus on what comes next.
Sam, I hear what you're saying about the violence, and it has been grotesque. But is the Middle East more stable with Assad or without Assad?
Well, that's an excellent question. I mean, up until this point, or I would even go even further back. I mean, from the moment like his dad took over, and the last war between Israel and Syria, 1973. I mean, remember that war. And then Kissinger flew over, at the time, the Secretary of State at the time under the Nixon administration, and he spent months negotiating with the father, Hafez. And you have this, pretty much agreement in place that we will leave you alone to run Syria however you see it fit, as long as you do not attack Israel again, and as long as you make sure, extremists or Islamists don't come to power the same way they took over power in Iran. So that was kind of the arrangement. And even when the son took over, I mean, Tony Blair was at the time, the former UK Prime Minister was among the first leaders to fly to Damascus to meet with Assad and his British-born wife, Asma al-Assad, and everybody was hoping that he would be the so-called reformer. So let's remember that.
in terms of your thoughts on how this evolves from here. Bloomberg Sam Dagger joining us on what is happening in and around Syria. What else do you need to know this Monday morning? The advertising giant Omnicom is reporting in advanced talks to buy its US rival Interpublic in a deal that could catapult the entity to the top spot globally. The Wall Street Journal says the all-stock transaction would value Interpublic at between $13 and $14 billion. Watch European rivals WPP and Publicis at the open. The World Health Organization is investigating a mysterious illness in the Democratic Republic of Congo. The WHO says over 400 reported cases and 31 deaths have so far been linked to the illness labeled Disease X. The flu-like illness is affecting mostly children under 5, with all the severe cases involving individuals with severe malnutrition. And the New York police have released images of the suspected gunman who killed health insurance executive Brian Thompson. One of the images shows the masked man in a taxi after the shooting. Investigators say the suspect hailed a cab on the Upper West Side of Manhattan soon after the attack, heading to a bus station to leave the city.
Coming up on the programme, we will head to Abu Dhabi. Finance Week is taking place there for a conversation with BNY's chairman of International. Plus, CVC is reportedly in talks to buy the German firm CompuGroup. We'll check on that story as it develops at the open. Up next, we will check on how markets are gearing up for the week ahead, with the ECB decision being overshadowed perhaps by geopolitical turmoil. We'll get a focus on markets once again. If you have any questions, if you want to get involved in any of our guest conversations, be they geopolitical or markets in nature or both, IB plus BBTV Go. That is the function to use this Monday morning on your Bloomberg terminal. This is Bloomberg.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We're basically deep in the European earnings season.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take 2 numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's focus in on European politics.
Makes you wonder how politics might play out. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets stick? How do you worry about the things that are outside your control? How does the current fighting stop? I'm Francine Lacroix, and this is The Pulse, every weekday.
19 minutes past the hour. The US President-elect Donald Trump says he has no plans to replace Fed Chair Jerome Powell when he returns to the White House. Trump spoke in an interview on NBC's Meet the Press yesterday.
I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
We'll talk about that a little more in a moment. Busy week coming up. CPI data obviously on deck, and also the ECB. Let's pull it all together with what we can anticipate with Bloomberg's Valerie Teitzel.
Guy, that was Trump's first TV interview since he won the election. No new wild cards there. Yes, he was tough on the border. Yes, he was tough on tariffs, but he didn't necessarily throw us any new wild cards, and we're treading water when it comes to U.S. assets. We have those S&P futures hovering near all-time highs. The Bloomberg Dollar Index slightly stronger on the day, but the big risk event for U.S. assets comes on Wednesday with the U.S. CPI report. We're expected to see a 0.3 month-on-month tick up in both the headline CPI and the core CPI. Those are going to take us a bit farther away from the Fed's 2% target. But many out there think that it was Friday's payroll report that mostly cemented that cut from the Fed next week. Any hot CPI print maybe will change the narrative for the Fed moving into 2025. We do have many central banks on deck this week, starting with Tuesday with the RBA expected to stay on hold. But then on Wednesday, we get the Bank of Canada. They're expected to go for their second jumbo 50 basis point cut in a row after an unexpected rise in their unemployment rate on Friday. On Thursday, we have the European Central Bank's meeting. We have the ECB and the Swiss National Bank. Both the risks there are a bigger cut than what's priced in. The SNB is expected to cut 25 basis points, but it was only a month ago that we heard from them that negative rates are in their toolbox. And then the ECB on Thursday also releasing their macroeconomic projections alongside their rate decision. The risk there is that they intend to make a big statement with both.
Valerie, thank you very much indeed. Let's get more on what we could see moving markets this week. Paul Donovan, Chief Economist, UBS Global Wealth Management, joining us around the table. Morning, Paul.
Good morning.
How hot would CPI have to be this week for the Fed not to cut by 25 basis points?
I think it's difficult to say because it depends on the composition. So much of CPI today is just this fantasy price, the non-existent price of owner's equivalent rent. That's what's really been propping things up. If you look at the underlying levels, if you look at market determined prices, if you look at HICP, the measuring it the same way that Europe does, you end up with a number on inflation which is below 2% and actually quite comfortably below 2%. So we don't really have the underlying inflation pressures. So I think if you get something which is just a weirdness in the owner's equivalent rent calculation, the Fed should just say, well, you know what, that's just a nonsense number. It's not changing people's living standards, and focus in on the numbers that actually matter.
So 25 bips is baked in for December. The market then seems to be seeing a pause coming at the beginning of the next year, and a pause that could last for quite some time. Is that the end of the cycle? And if that is the end of the cutting cycle, should I start thinking about hikes, and when should I start thinking about them?
I think it's far too soon to be thinking about hikes under a sort of a fairly benign tariff scenario from the incoming administration. Essentially, what the Fed has been doing so far is following inflation down. So we've had inflation fall, give or take 1 percentage point this year. The Fed's only cut 75 basis points. That's why we need the December cut. They're basically catching up. They were late to start. They messed up in the September, but they're catching up now. So we've got that. As we go through next year, I think inflation probably still does come down further. And that's because the owner's equivalent rent nonsense will start to come back to a more realistic level. We will start then to see the Fed tracking that lower. The question then is, how much damage to inflation does the tax on consumers via tariffs do?
Okay. Paul, I interrupt this broadcast to bring you news from China. We've had headlines coming through from the Politburo. So the running before the Central Work Council meeting in the middle of the week. And we've got a couple of red headlines coming through from it saying that China's fiscal policy will be more proactive next year. Also saying that shifts in monetary policy stance for the first time since 2011. I'm not looking for detail on that. Stepping up their extraordinary counter-cyclical adjustment maybe is what they are referring to there. But on the fiscal side, things seem a little clearer. So they're saying they're going to be more proactive next year. This ahead of a Trump administration where one assumes they're under a lot of pressure from multiple places to do more to stimulate domestic demand.
Yes, and I think that the Trump administration provides a convenient excuse. Because, of course, what we've got as a problem in China is that domestic demand isn't particularly weak because of the cost of credit or anything like that. It's weak because people are nervous about the future. There is insecurity. You've got quite high youth unemployment. That means anyone who's got, a son or a daughter who's just graduated from college is going to be very aware of the problems of finding work. It adds nervousness. So you need proper fiscal stimulus, which we have not had yet. Now, what I think the Trump administration does is, with tariffs, provide a convenient scapegoat. It's not our policies that are wrong. It's the attack of the Americans that we need to respond to. So it's a very convenient way of framing a fiscal policy stimulus.
Okay, that's the fiscal side. On the monetary side, they're saying China monetary policy to be moderately loose. How does that fit with your expectations? I mean, we've been expecting more triple R cuts. Is that it, or something more?
So the problem here is I don't think this does very much. Because, again, people aren't sitting at home thinking, oh, well, the cost of credit's too high, we better not go out and spend money. People are sitting at home thinking, I may not have a job next month. And that's a very, very different set of circumstances. So, yes, by reducing interest rates, you do give indebted people back a bit more cash flow. That's helpful. But it's not the conviction that you're going to get on the fiscal policy side. So I think this is fairly marginal on the monetary policy side. It's a quick fix. It's a signal of an intention to do more in the future. But actually, it's the fiscal policy that we need to see.
Very quickly, Paul, let's continue our tour of the world and talk about Europe for a moment. You talked about using Trump as kind of this almost license to ease. You're seeing France as well. This is something that came up multiple times in the vote of no confidence, Michel Barnier. If we have an expectation of a new budget that could increase inflation, the cost of living for a lot of French citizens, how does the ECB address that?
Well, it's only one province of the great concerned with that. You've got general disinflation pressures. And anyway, I think we've got to remember we're not talking necessarily about fiscal stimulus coming through from France. It's a failure to address the fiscal problem. So it is an absence of tightening rather than an easing that we're looking at as far as France is concerned.
What's that bar, though? What is that bar where the ECB does need to get concerned?
With France as a single area, I think that bar is very high indeed. The ECB exists to look at inflation in Europe as a whole. You've got disinflation pressures established, even in economies that are performing quite strongly, like Spain. The inflation picture is very benign. So I don't think you're necessarily going to see the ECB a peculiarity in one region of the greater euro area.
We'll certainly hear later this week. Paul Donovan, Chief Economist at UBS Global Wealth Management, joining us this morning around. We thank you so much. Coming up on the program, we go back to our top story. Syrians celebrating the fall of Bashar al-Assad. We look at the country's next chapter and which regional powers stand to lose. Next, this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States. Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
So I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Minutes from the start of the opening trade. When you look at the futures picture, you did see it just a little bit mixed. 30 minutes ago, we did see some underperformance in the Euro Stoxx 50 futures relative to the FTSE 100. You are seeing the same dynamic here as well. Futures at the moment kind of flat, pairing some of those losses. Maybe not a ton of movement. We'll see if that changes going into the opening trade. The bond market might be slightly more interesting. Maybe waiting Germany, France, and Italy, Anna.
Yes, and interesting that we have seen, it doesn't look like much movement on stocks, does it? But from slightly negative, we are now a bit more mixed. And maybe that is to do with some of the headlines we've had out of China. So we'll focus in on those for a moment. China's fiscal policy to be more proactive next year. This according to the Politburo, which has been meeting ahead of the Work Council that takes place Wednesday this week. They're also talking about China's monetary policy to be moderately loose. So we'll see how that fits with people's expectations. They're talking about lifting investment returns and expanding domestic demand. They're also giving us a whole host of details as to how they're going to go about this, but to be talking about expanding domestic demand, in all aspects. As I say, we are seeing a little bit of a turnaround in sentiment in Europe heading into the first trading day of the week as a result of this, but not a huge amount. We maybe have a sense of having been here before. We're waiting for more detail. Let's move on. Abu Dhabi Finance Week is kicking off today. Bloomberg's Jumana Basecha joins us live from the event. Jumana.
Hi, ladies. Yeah, good to see you. Well, it's been quite busy at Abu Dhabi Finance Week, speaking to loads of industry professionals on the sidelines. I'm very happy to say that one joins me right now. Hani Kaplawi, the chairman of International for BNY. Good to have you here.
Thank you very much. Great to be back in Abu Dhabi in weather like this, having just arrived here from London.
I'm sure, yes. Weather is certainly a plus over here. But look, let's talk about markets. It feels as though things have really been in a state of euphoria. Stock markets up, tracking more than 30% this year, even more so another boom after the U.S. elections. What is your outlook going into 2025 on some of the market optimism that there is right now?
Yeah, look, Jumana, our analysts are calling roughly 5% up in the S&P 500 and roughly 5% up in 10-year bond yields next year. On balance, that probably favors investing in bonds, save for the risk of stagflation. So the one item that we do look at is in developed economies that are heavily debt burdened and dealing with a fiscal issue there. We do look at their ability to continue to service their debts over time, especially with a probably stickier, higher interest rate environment.
Yeah, it's funny because the debt backdrop is something that we flag from time to time. It's not a new phenomenon, and yet the overall levels of debt in the global economy keep rising. Countries are accumulating debt is faster than the pace at which they're growing. And do you think this is going to actually pose a serious problem in the next few years, or is it just something we're going to have to keep on the back burner?
Well, I think it's a factor of a number of things in the short term: interest rates and interest rate levels, and the ability of countries to continue to service that debt. And in the long term, what goes up must come down, and it comes down either by more fiscal responsibility, or you can grow your way out of a debt issue. But for growth, you need productivity gains. And the graphics in many countries, you probably have a backdrop that is not very conducive to long-term getting yourself out of a debt burden like that.
Yeah.
Maybe save for the U.S. The U.S. is looking okay from a productivity perspective. They still have the debt burden, but they are looking to invest in improving productivity. They have a demographic surplus, say, versus other countries. And so those are the factors that we look at.
So many people I've spoken to actually since the U.S. elections have been really excited about the prospect of more deal making and unlocking of activity in the U.S. next year. Wearing your current hat, which is chairman of the international business, do you think there's going to be knock-on effects to the rest of the world as deal making picks up in the U.S.?
Yeah, it's interesting actually. Since the 2022 refocus of investors on the U.S., including U.S. investors actually bringing in their investments back to the U.S., we do actually expect continued U.S. exceptionalism from an investment perspective into the Trump administration-led environment in the U.S. And we're seeing that play out in places like Europe, where the euro is down. Investment in Europe is following productivity and a deficit in industrial strategy. The markets that look interesting for us and where I think there is an opportunity for growth markets, developing markets to bring capital back home. The markets that look good to us actually are the Middle East, Malaysia, Indonesia, India. We do like what we see in other places as well. Japan is looking to take savings and mobilize them back into investments, and then places like Brazil and Mexico.
Yeah, it's really interesting that you say that because there certainly appears to be a shift in sovereign wealth funds out here in terms of just being capital providers. They're also wanting to incentivize asset managers to invest locally. How does that affect what you do in the region?
Yeah, look, it's first of all, the backdrop that you described, Jumana, is a good backdrop. Frankly, the environment, and it's been a long-term environment that we've lived in, where U.S. consumers create deficits in the U.S. that get financed and funded by sovereign wealth funds in oil-producing and in manufacturing countries. That model might, over the next few years and decades, give way to an environment where local investment by growth markets produces more local, reduces the dependence or the codependence of sovereign funds and the U.S. market effectively as a consumer of last resort and as an investment destination of last resort. So I think this whole it's not bipolarity, but it's multipolarity of the world, right, is a very good thing. Now, in terms of your question on impacts on business model, our business model is a global business model. A lot of our growth actually comes from enabling global investors access global markets. It's part of that is accessing U.S. markets and U.S. investors accessing global markets, but much of it is actually around enabling Middle Eastern investors get into China. We are the provider of services here in Abu Dhabi to some of the leading asset managers and wealth funds in investing in global markets, not just in the U.S. So we see trends like that as being conducive and positive to our business model.
And certainly in the region, I mean, Abu Dhabi, the theme of Abu Dhabi Finance Week is it's the capital of capital. But I'm not sure how Riyadh feels about that. And I just wonder whether there is enough space in this part of the world for all of these financial centers to thrive. You talk about Dubai, you talk about Abu Dhabi, you talk about Riyadh.
Yeah, it's a really good question, actually. So I would say my understanding is that Abu Dhabi is establishing itself as more of a buy-side hub. You have a sell-side hub down the road in Dubai, and I think Dubai has done a very good job that way. I think Abu Dhabi has the wherewithal, the intent, the capital, the money, the investment spend, the ability to bring global talent into Abu Dhabi in order to invest regionally and domestically. And we're certainly excited by excited our presence here to a branch, hiring talent here locally, bringing talent from New York, London, and Europe and elsewhere, and participating in that growth.
Well, that's a good place to leave it, especially given we are at Abu Dhabi Finance Week.
Yep.
Thank you so much for joining us.
Thank
That was
you.
Hani Kablani, the chairman of International from BNY. Ladies.
Bloomberg's Jumana Persechi joining us from Abu Dhabi Finance Week. We thank you so much for bringing us that interview. Let's go back to our top story out of the Middle East. Bashar al-Assad has landed in Moscow after Islamist-led forces led a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
President Joe Biden there, of course, speaking on the situation. Let's get more by Fawaz Gerges, international relations professor at the London School of Economics and author of What Really Went Wrong, the West and the Failure of Democracy in the Middle East. Fawaz, a pleasure to have you on the program. Thank you so much for where perhaps Biden has been speaking, and that, of course, is what the U.S. response might be to the developments we're seeing in Syria. President Biden already authorizing strikes in Syria, as my co-anchor Anna had mentioned. On the other hand, you're seeing Donald Trump, the president-elect of the United States, posting about not getting involved. Fawaz, walk us through the impact of what the United States does next in response to this toppling of Assad's regime.
The United States is conflicted on what's happening in Syria. On the one hand, they're happy that Assad is out for good. They're happy that what happened in Syria represents a major setback for Iran and for Russia, America's major rivals in the international system. On the other hand, they are anxious about the future, in particular since Hayat Tahrir al-Sham and Abu Muhammad al-Gulani, the leader of Hayat Tahrir al-Sham, it's a Salafi Sunni movement, are the most powerful faction within the opposition. And when President Biden talks about risks and uncertainties, he is basically concerned about Hayat Tahrir al-Sham establishing an Islamic Emirat in Syria, because Hayat Tahrir al-Sham is designated as a terrorist organization by the United States.
Yep.
And just in the past 24 hours, the United States carried out 75 attacks against ISIS cells inside Syria. The Americans are anxious about basically the resurgence of ISIS. President Trump doesn't care. President Trump actually wanted to pull out American forces from Syria. You have about 1,000 American troops in Syria. So with Trump, we might in fact see a change, radical change. He might order pulling out the remaining American soldiers in Syria and risks basically the well-being and the autonomy of the Kurdish forces who have been fighting with the United States for the past, since 2011 against ISIS or the Islamic State or Daesh.
Professor, good morning. It's Guy. Does Syria as an entity survive? And if it does survive, is Syria more unstable post-Assad than it was pre-Assad, during Assad?
I think I have no clear-cut answer to you. Syria could go two ways. On the one way, Syria could really descend into all-out social, political, ethnic, and religious upheaval, similar to what has happened in Libya, in Yemen, and in other war-torn countries. On the other hand, Syria could really begin the process of social healing. It could begin the process of state building, nation building. If the rough coalition of opposition, which is led by Hayat Tahrir al-Sham, could really establish a transitional government, a diverse government, an inclusive government, a rational government, I think Syria could be on its way to begin to really overcome the huge challenges, broken economy, deep scars, ethnic, religious, and tribal tensions, geopolitical meddling in its own affairs, major challenges. I mean, I think we are blinded by the dust it's too early to tell. We have to wait and see what the opposition, what the rebels do, how they establish a coalition government. And the worst case scenario for me is that if the rebels start fighting with each other about power and ambition, then the situation could really easily deteriorate into all-out social, political, and ethnic upheaval.
So we're blinded by the dust, Fawaz. In terms of the very immediate risks, we're seeing headlines on the Bloomberg terminal suggesting that Israel has struck at Syria's chemical weapons as what it calls a preventative measure. The fact that Syria has chemical weapons, these we know have been famously used against Syrian people under the previous regime. This just one of the aspects of the very short-term danger, I suppose, that this instability must prompt in terms of the thinking from the international community.
It is a major challenge for the Syrian people. And in fact, I was really impressed that the opposition has made it very clear they will cooperate and coordinate with the international community regarding chemical weapons and other factories, arms factories inside Syria. They're fully aware of that. But with all due humility, this is the least of Syria's problems. Syria's problems, I mean, remember, it has had 5 decades of brutal rule by the Assad family, 24 years of Bashar al-Assad brutal autocratic rule, 13 years of civil war, 300,000 people have been killed, 500,000 people have been injured, 6 million refugees, the biggest refugee crisis in the world, millions displaced people. The country, 80% of the Syrian people require humanitarian aid, according to the United Nations. The country is fragmented among the various communities. So I hope that the rebels, the opposition, the coalition, the rough coalition of the rebels realize, appreciate the enormity, the gravity of the challenges facing the opposition and begin the process of setting up a rational, inclusive, and diverse government to deal with the challenges facing Syria and the Syrian people.
Professor of this regime change and this kind of toppling of Assad's regime is a direct of Iran and Russia fighting two separate wars. How much of that has led to this moment?
On it, to give you an example, to really, put my finger on the pulse of your question. Survived without Russia's military intervention in Syria in 2000. So Russia's military intervention in 2015 was in the war. It turned the tide of the war against the rebels. Bashar al-Assad could not have survived without Hezbollah and Iran military intervention inside Syria. And the reality is the Syrian army has been gutted in the past few years as a result of American sanctions, as a result of Russia and Iran and Hezbollah being preoccupied somewhere else. The Syrian army did not really have the will and the means to stand up and defend the Assad regime any longer. So yeah, you're absolutely correct. The fact that Russia and Iran and Hezbollah were out, in fact, it exposed the weakness, the fragility, the vulnerabilities of the Assad regime. The emperor was naked. Bashar al-Assad shown to be naked, and that's why he packed and left to exiles in Russia in the past 24 hours.
Professor, thank you very much indeed. Forex Gigas, International Relations Professor at the London School of Economics and author of What Really Went Wrong, the West and the Failure of Democracy in the Middle East. We'll continue to monitor what is happening in Syria. We need to, of course, keep you updated with what else is going on. China firmly in focus this morning. News coming out of this Politburo meeting talking about stabilizing property and stock markets, talking about an ease in the monetary policy stance, vowing more fiscal spending. A little vague, though. We weren't really looking for details here, but a little vague maybe on exactly what that all means. Markets have been responding. As you can see, we've got a lift in the Hang Seng this morning, responding to these details. We'll see how Europe opens on the back of that as well. All of that is coming up. 11 minutes to go to the start of European trading. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back. This is the opening trade. Let's get into a conversation in 3 minutes about these markets. We're joined by Bloomberg's executive editor for Asia markets, Paul Dobson. And Paul, nice to have you with us because we've heard these headlines this morning from China. European futures popping higher, in particular in France, as a result of this. A commitment to further fiscal stimulus in all areas. How much of a game changer is this or not, Paul?
Yeah, good morning, Anna. It's certainly what the market had been hoping for and waiting for in terms of some signs of real policy deliverance here from the Chinese authorities. We remember we had that big run-up a month, 6 weeks ago, and then we started to lose a little bit of steam in China's markets because people were asking, well, is there going to be follow-through? Are we really going to see signs of stimulus? Now what we're hearing, a commitment to a looser monetary policy, fiscal support, efforts to prop up both the stock market and the housing market. That's what the market has been waiting for. All those boxes checked more or less, and then this sets the tone for the Central Economic Work Conference discussions, which will start pretty much straight afterwards, as we understand it. So the market wanting to see more follow-through, more delivery, more details, but at the moment, we've got gains in the equities market, and particularly corporate bonds have been getting ready for this. We've seen some parts of that market yields falling for 20 days in a row. People liking it on the rate side, people liking it on the fiscal side as well. So double whammy there.
Paul, how skeptical are investors, though? We've got the talk. Do we have the walk?
I think that the market will certainly want to believe it and price in the good news. Certainly, there's been a great deal of reticence, but it's gotten to the point where it feels like, something really had to be delivered. We've had quite a lot of incremental measures along the ways, and now more of a package is what the market hoping for. It's hard, right? It's hard to know with certainty whether we will get that delivery and whether it will be enough. There's been a lot of disappointment. There's been a lot of false starts already in the market and a lot of investor disinterest as well. So not the entire market engaged. But if it does really catch wind, then it could start to gain a lot more traction and momentum because valuations are so low across the market.
Paul, we had a different Paul on the show earlier talking to us about the fact that this kind of idea of a Trump administration could give China license to ease further. Do you agree with that?
Trump administration could do all sorts of things. Who would want to be a forecaster in financial markets for next year? Critty. It's going to be very difficult. I think what's really interesting is you're seeing more and more strategists putting out the curveballs. What could we get wrong? What could be the surprises next year? So everything's kind of out there. More rate cuts certainly possible, but on the other hand, people are even talking about the US might need to tighten again in the second half of the year, depending on the inflation outlook. So it's very uncertain at the moment in terms of where we're going to get, where we're going to see, how it's going to, kind of rebound across the rest of the markets as well. So people happy to stick with their game plan for now, but there's going to be lots of uncertainty and wobbles along the way.
All right, Bloomberg Executive Editor for Asia Markets, Paul Dobson, joining. Thank you so much. In the meantime, we are minutes away from the opening trade across Europe. A real sentiment change on the screen when you look at the futures picture. Stick with us. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories. Unmatched expert in television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading. The close, weekdays on Bloomberg. Context changes everything.
Monday morning, good morning. Lots to talk about as we enter this new week. We're watching, obviously, geopolitics casting a long shadow over pretty much everything right now. We've also got CPI this week. You've got an ECB meeting this week. So how are we starting? This is the legacy out of Friday. Friday session, gap lower, followed by a rally, finishing fairly sort of neutral at the end of the day as we priced in payrolls as well. France was the standout story on Friday. French equities flying as shorts were taken off as the market recalibrated. US markets in the afternoon session dipping a little bit, maybe providing actually not that much guidance, I don't think, first thing this morning. China may be a better story. Is the CAC move this morning, Cruddy, do you think a continuation of Friday, or do you think it's given fresh impetus by this China story reading through into luxury?
Well, so interesting, because going into this morning, you did see the narrative simply be that there would be a pullback in that France equity rally, and yet we're seeing it again, but for a different reason. Guy, you mentioned it's that China story that's really showing up, but the ripple effect is showing up in the Eurostock 50 futures, now outperforming, Anna, the FTSE 100, which is a dynamic we did not see just 30 minutes ago.
Yeah, absolutely. So we'll keep an eye on how that China story permeates into the European session. And as you point out, Guy, the French story might or might not be to do with that, might also be to do with domestic dynamics. But we'll keep an eye on luxury stocks, whether they're in Paris or Milan or elsewhere. Advertisers could be in focus. We've seen interesting reporting coming through from the Wall Street Journal that Omnicom and Interpublic over in the United States could merge. What does that mean for European advertisers? We'll watch Publicis, we'll watch WPP as a result of that talk, at least, of consolidation within the sector. Also, watch out for Banco BPM. Crédit Agricole is asking to increase its stake in Crédit Agricole, and in the meantime, it's increased it through derivatives. So we'll watch how that one trades, given UniCredit's intentions towards BPM, Guy.
Let's talk about the open this morning. How China influenced is it going to be? Here we go. Time for the opening trade. Let's show you some numbers and get an idea of what is going on here. Remember, Friday, CAC outperforms significantly. We start to see maybe a little bit more of a discerning market looking at individual names. This morning, we're out of the gates. We're up by 0.2% on the FTSE 100. Is there a China trade there into the mining stocks? Is this going to be an investment-led story? Is it going to be pulling in extra resources? That could be a boost for the FTSE 100, which now starts to maybe outperform the stock 600. We're up by 0.4% on the FTSE 100, but the CAC blasts through. We're up by 0.8% on that market as well. It outperforms the IBEX. Remember, some of the peripheral markets have done better recently. Start to see the CAC coming back. The FTSE 100's been a bit of an underperformer as well. You could argue it is up by 0.4%. So we are seeing some gains here. How do we kind of discern what is China related, what is momentum out of last week related is going to be, I think, interesting this morning. There are some single stocks that are going to be watching as well. Critic.
Is indeed leading, Guy, and that to me does feel like a China story, because remember, from the political front, we are still waiting for Michel Barnier's replacement basically to be named, or maybe him himself if he does remember that caretaker. That's not necessarily a reason to buy French equities. The China story, absolutely maybe. So you are seeing your biggest index contributor to the upside being LVMH here, actually driving the entire stock 600 higher. Kering is up there as well. I'm seeing L'Oreal as one of the big upside movers as well. But Anna, to the downside, it kind of feels like Germany is underperforming a little bit of that tech theme was going to drive the rally, not so much this morning.
Yeah, and if you're looking for evidence of China's influence, then maybe we see it in the best performing sector, which is basic resources. Iron ore up by 1.4%, and that has picked up after we got those headlines coming through from China. So we see Anglo American up by more than 2.4%. Or a whole host of mining businesses doing pretty well, and often that can be, of course, a China-related theme. But it is consumer products and services, as you say, Chrissy, the luxury space that's also leading us a little higher. Richemont up by 3.4% now. Kering, Burberry, Moncler. It does raise this interesting question, though, as to whether, is this just cyclical in China, waiting for this fiscal stimulus to come through? Is that enough? Is that going to be enough to set the ground, set the foundations for another pickup in luxury spending, which benefits French businesses, or not? Has something structurally changed?
Well, this is what we were discussing a little bit earlier on the show. The old playbook is China stimulates, consumer gets a better feeling, goes out, goes shopping, buys French luxury, buys European luxury. Is that still the correct playbook? It's interesting. We were talking about this earlier on offline. Has the Chinese desire to buy European luxury changed as a result of the political dynamic in China? And are we dealing with the old playbook when we see a reaction like this?
Perhaps. Hasn't shown up in the numbers yet, in the bottom lines of the LVMH, et cetera, where they're perhaps shifting, in theory, away from China and maybe more towards America, if we're looking at that kind of mass consumption story as well, but potentially to their detriment. That's not a transition that happens very easily. So I could argue the opposite, in that maybe because that market share hasn't changed yet, therefore the playbook remains the same. It's a fair one, though.
I understand the American reaction. I can understand that ultimately the US consumer is potentially the stronger one right now. Maybe expectations around the luxury names are so low in China that maybe any kind of a stimulus should deliver some sort of upside narrative.
And just mentioning, because we had this in the show a little earlier on, media stocks also in focus, guys. So WPP up by 3.5%, Publicis up by 2.6%. All of this on the back of that talk over the weekend about further M&A activity, consolidation within advertisers in the United States.
WPP is on this kind of slow transition. It's trying to kind of change a lot of things at the same time, but it's taking a bit of time to get that done. Does this basically drive a need to maybe move faster on that process? But it's interesting. Does this reignite consolidation within the space? Are Publicis and WPP consolidators or consolidatees? I'm not sure that's a word, but I think I just made it up.
Yeah,
we'll wait and see. But yeah, it's interesting to see that this is being taken positive for an all-stock deal in the States. It's quite interesting to see such a big reaction.
We kept waiting, I think, for the majority of this year for that capital markets activity to warm up, and it's finally showing up in a pretty big way. Let's bring in a little bit more expert analysis here around the opening trade. Maria Weitman joins us this morning, head of equity research over at State Street Global Markets. Maria, a pleasure to have you on the program as always. We've got a lot to go through with you, but let's go with maybe our top line this morning, which is that China read-through. You just heard our debate around the table talking about whether playing China via French luxury is the way to play China. What do you think?
Yeah, good morning. To be honest, I'm a little bit skeptical on China. I think we need to see really big structural reform, and what we've been seeing so far is a kind of drip feed of kind of moves in the right direction, but probably like little steps as opposed to kind of big structural reform. So what we know the problem in China is obviously we have a huge property problem. We had huge lack of consumer confidence. So I mean, giving a little bit of money to Chinese consumer, would they go out and spend if their consumer confidence is really on the floor, given the kind of political situation is kind of anti-ostentatious spending? I'm quite skeptical. I think that's probably a move to fade.
Well, I'm so glad you said move to fade, because my next question to you was going to be, is this something you just trade for kind of the short-term volatility, basically catch the spikes, and then ultimately, is that the vehicle you use then to trade this kind of stuff?
Yeah, no, potentially, because I mean, what we've been saying is that every time there is like some policy announcement, investors get excited. We see inflows into Chinese market. I mean, European luxury is a good play on it, and then there is very little follow through, and we still see like latest data in China. They're still, I mean, at best stabilizing. I mean, if you're very generous. So yeah, no, I think it's short-term move. You play, and then there is very little follow through.
Okay, Maria, we hear that loud and clear. We've also heard loud and clear in the past from you your views on US tech, and you've liked US tech for a very long time. You've seen no alternative perhaps to the US and to some of those very profitable businesses that might benefit from tax cuts coming down the line. Is that still the view? Is there anything on the horizon that you can see that will shake your view on that?
Yeah, I think I'm very firmly into Team America. I mean, there are structural things, like we know that like margins and profitability in US are a lot higher than in Europe, in Asia. So those things are not going away, and I think it's to do with like how deep capital markets are and what are labor regulations and taxation policies and things like that. So that's there, and then we have a cyclical element, and we know. I mean, I don't need to tell you about US exceptionalism, so that is still there, and other countries really struggling. I mean, it's going from like economic stagnation to political uncertainties and things like that. So it's difficult to see why would investors move money out of US into other regions. Yes, valuation is expensive. Yes, positioning is crowded. But what is super interesting to me when I look at State Street custodial database, investors increased holdings in US this year. So despite all these concerns about kind of overextended position, people still putting money there. So that to me is kind of validation of this idea that there is kind of no really good alternatives.
Yeah, I mean, Maria, are you concerned at all that there might be complacency around a second Trump presidency? Yes, there's the positives for corporates around tax cuts and some of the other policies that could be positive for US business. But on the negative side, some people are concerned about what this means on immigration. That's played a big role in that US exceptional growth story, and indeed inflation. And even President-elect Trump over the weekend not ruling out that this might push up prices for Americans.
Yeah, no, I mean, I hear a lot like those concerns, of course, but I mean, relatively speaking, it's still US-centric policy. So if you are making kind of relative portfolio recommendations, so buying US stocks over rest of the world still makes sense. In terms of kind of absolute preference, I mean, we know that Donald Trump judges his presidency by the strength of stock market. So I suspect there is some bias kind of going down that way. We know Fed is very concerned about trying to get ahead of business cycle and try to avoid recession and kind of focusing on like dual mandate and achieving soft landing. That's very different dynamic from what we see in other central banks, which are kind of maybe more reactive central banks. So again, I mean, I see quite a lot of reasons to prefer US to other markets.
Maria, good morning, it's Guy. Are you still holding lots of cash? What would persuade you to deploy that cash? And is that cash a downside protection risk for your US equity holdings?
Yeah, absolutely. I mean, I've been jokingly suggested that the best trade would be U.S. tech and cash. So that perhaps is still the trade, is that you have like a lot of upside on U.S. tech, as it's like the fastest growing, the large cap quality seems that we are like playing. But I'm quite concerned about kind of the rest of the market, because profitability is really not there. All of the kind of earnings, I think, globally or US is still very much coming from tech sector. So other parts of the market are not performing as much as we would like to. So having that kind of cash buffer or like short duration or like the way you kind of express that kind of makes sense to me.
Maria, what would it take to get US equity markets lower? What would it take to get the S&P lower right now? Is a full-blown recession required? Fed rate hikes potentially required? I'm just trying to think of, those are two unrelated items, but what would it take to get US equities to go lower at this point on a significant and maybe sustained basis?
Yeah, no, that's a really good question. I think, I mean, there's a lot of strengths of U.S. market come from tech sector, and that's been really the kind of the engine of U.S. stock market. So I think if you can imagine a scenario where tech sector really goes down consistently, I don't know, I mean, very strict set of regulations and kind of breaking kind of those quasi-monopolies, that potentially would be something that really kind of sustainable underperformance.
But you don't see that happening in terms of.
I don't see that happening in the short, medium terms. No.
Okay, so therefore, 2025 is another good year. 2025 is another year when equity markets in the United States continue to rally.
Yeah, no, that would be kind of our central view, that there are good reasons for U.S. market to continue going up. Yeah.
So the market just this exceptionalism, this gap with the rest of the world grows wider next year. How far can it stretch?
I mean, it's an interesting question, because we had about 15 years of this gap between U.S. outperforming the rest of the market. I think 2022 was a short blip and it didn't happen. So, yeah, no, and I think that there are good fundamental reasons, right? So earnings in U.S. have been stronger than the rest of the market for 15 years. So it makes sense that U.S. stocks outperform the rest of the market. So it's not like completely irrational idea that U.S. stocks do better because they grow faster. So that makes sense to me.
Maria, when you talk about the growth factor, Guy and I talk a lot about simply this idea of whether the stock market can actually come down and it kind of feels like we're talking about these recessionary risks as well. But even in the worst times, don't capital flows just support the U.S. equity market in all states?
I mean, you have this kind of dollar smile idea, right? So dollar goes up in bad times. There's a similar idea about U.S. market as well. So if there are like big risk concerns, and at least on relative basis, U.S. stock market should be supported as investors pull capital back. The other really interesting observation I recently had is if you look at MSCI growth style and MSCI quality, 7 out of top 10 stocks overlap. So in a way, it's a quality market. So I don't know, you can construct an argument are actually quality stocks and safe stocks, and that's where you should seek solace if you kind of about drawdown and slowdowns.
Maria, can I ask you about M&A as a time to get this M&A cycle kicking off again? Investment bankers talk tentatively about seeing early signs of that, and maybe even more so in the last few months. And again, some people saying under a president, a second Trump term, we might see more M&A. Is that something you're going to be playing?
I think. I mean, it's again. I mean, no doubt the investment bankers talk about M&A. That's their business, of course. I mean, to us, it's really about interest rates. Should interest rates come down substantially, that usually sparks big M&A waves. So it's less about regulation. It's more about capital and cost of capital. So those things need to happen. I mean, right now, market is not pricing market is pricing normalizing policy. Market is not really pricing like very loose policy, which usually spark big M&A activity. So I'm somewhat skeptical.
Great to catch up. Always appreciate it. Thank you very much indeed for joining us throughout this year. We look forward to seeing you next year. Maria Weidmana, Head of Equity Research, State Street Global Markets. Core 6 looks like this, dominated, you could argue, by what is happening with the luxury space. Look at LVMH up really quite nicely this morning on the back of the news we're getting out of China. Is that the right way to play this narrative? I think that's going to be a discussion that maybe runs a little bit as we watch what the news flow looks like around China and the deliverables. But interesting that Ferrari reasonably stable this morning. ASML ticking a little bit lower. Nestle saying unchanged, which also makes me a little bit skeptical as to what is going on. But the story, it certainly seems, is LVMH.
And sticking with that, of course, I want to get more on luxury theme as well, because you mentioned LVMH, but looking at the CAC and run, you're seeing others as well. You're seeing Kering, you're seeing Hermes, you're seeing L'Oreal, and all get a little bit of a boost from this China story.
Yeah, absolutely. So we're seeing it play out in the luxury space in France and beyond. We're also seeing it play out in basic resources. So the best performing sector this morning is the basic resources sector, and we see that iron ore prices are now up by 1.8%. So no surprise there that adds up to some better performance from the likes of Glencore, Antofagasta, Anglo American, Rio Tinto, all higher, and the whole sector up by just shy of 2%.
Omnicom Interpublic get together potentially. The Journal's got that story. It's an all-stock deal. It's having a ripple effect on our side of the Atlantic as well. The two big names out of our part of the world, wire and plastic products, WPP as it's probably better known, tracking higher this morning. Publicis out of France, it's now a big arrival. Both stocks rising on the back of this. Does this spur maybe extra activity to turn these businesses around, particularly WPP, and push it along a little bit faster? The market certainly seems to like the narrative around this story this morning and is lifting these European stocks on the back of that all-stock deal in the United States.
So a deal in the United States, potentially a deal here as well in the private equity space that's caught my eye this morning. CVC set to be in talks with German software firm CompuGroup to potentially take it private. This is a company, a German software company that's been under some pressure for quite some time. And that takeover bid, or at least the talk of it, seems to be moving those shares. CompuGroup was halted for volatility earlier. It looks like it's now higher by about 31%. And CVC is seeming to rise as well. It usually doesn't happen in a takeover. Morning higher by about 0.8%, a starting potential offers price of 22 euros a share.
So back to the BPM story. Credit Agricole listing at stake. Got a fight on our hands.
Yes.
It's going to be really interesting to see what happens around this one. So does Agricole want to hang on to it? Does it see it as being its future to maybe control this business going forward?
Yeah,
what does that mean for UniCredit?
And it seems to be taking a line out of the UniCredit playbook in terms of how it gets hold of these assets, because it's going after it with derivatives in the short term. So with derivatives, it's taken its stake up to 15%. It's actually seeking to take its stake proper, if you like, over 10%. So it's seeking permission to do that. But in the interim, it's done it with derivatives, and it's going to ask to be able to go up to 19.99%. And of course, we know that UniCredit wants this asset too.
In some ways, you could argue this is a way of driving an even better deal. So do you just roll over straight away and go?
Because you're an existing shareholder.
You're an existing shareholder. Do you want to buy my shareholding at this price? Really, the answer is no. I don't want to buy it at that price. Cool. I'm going to take an even bigger stake, and I'm going to make it even more difficult for you to take this business over, and therefore you are going to have to maybe come harder.
Yeah.
With a better deal for me if you are UniCredit? Or is it, you know what, actually we think this is a good business going forward and actually we'd like to stay involved?
Well, you know what I thought was interesting was that Reuters reporting that Italy has actually approved this. They've approved this Credit Agricole stake when they haven't approved the UniCredit. And I think that's such a turnaround from that kind of domestic domestication, isolation kind of story that we were talking about with commerce.
Governments don't like to be surprised, seems to be the story at the moment. If you come at us with a surprise, then our initial reaction is, whoa, back off a little bit. If you come at us with a deal that's kind of that is incremental and we understand, then maybe you get a better reaction. You could argue maybe Agricol's in that position. We've already got a stake. We'd like to maybe increase that stake.
Yeah.
You know us. We already understand this relationship. I suspect they know UniCredit as well. But that maybe is what seems to be coming out both in Germany and Italy.
Maybe there is something in the art of some of these deals. Coming up on the programme then, we'll turn our attention back to China. We've had a lot of news flow out of China this morning. China vowing more support. Luxury stocks and the Hang Seng cheer. Basic resource stocks cheering. We'll cross to Beijing to get the latest. Just how significant is this news that we've had out of the Politburo ahead of the Work Council meeting? This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Those shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onik, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute financial whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back to the opening trade. We are 22 minutes into what is turning out to be a very eventful session here for European stocks. We're up across the board. Stock 600 up by 0.3%. And it seems that basic resources and luxury stocks are getting a boost from some of the news flow we've seen coming through from China. China's top leaders are planning to loosen monetary policy and increase fiscal spending in 2025 to prepare for a potential second trade war with the United States. Joining us now for more is Bloomberg Senior Executive Editor China region, John Liu. John, very nice to have you with us. Last week, I was asking myself, if I were involved in Chinese policy making, would I be doing this fiscal stimulus now before I see what President-elect Trump has in mind, or would I be waiting to see the details of his plan? Well, it seems that China wants to do this now. How significant is this announcement today, John?
I think it's quite significant. I think this is the clearest signal yet that the leadership is given here in China that they're ready and willing to do more to support this economy. The language that they use to describe monetary policy, saying that it would be moderately loose going into 2025, first change we've had in about 14 years. And so the last time that it was described, monetary policy was described as moderately loose, was right in the aftermath of the financial crisis in 2008. What the leadership sees before.
John, is this more talk or is this walk? Is this just kind of, we're going to do this and ultimately investors can be disappointed? Or should I take this as a certainty that this is going to be delivered upon?
I think we should take this as the opening of the gates to more stimulus. That once the Politburo has said this, the Politburo is made up of the 24 most powerful politicians in China. So this is the political leadership saying to the central bank, to the finance ministry, you should now go out and do more. We should expect more.
But John, can you explain just to your point, this has been several iterations of that fiscal support. Why is this time different? What are they doing that's different that may stick?
So we've seen lots of things done sort of in a gradual way, nothing over the top, nothing, as people were saying, the markets wanted to see a big bazooka moment. That this seems to show that the leadership has really had a mindset change. That has happened because the data that we've seen since the stimulus that was at the end of September going into October, that has not had the outstanding pronounced effect that I think the leadership was hoping for. I think that's why we are getting more now.
John, and the way that this plays out in Europe, I mean, for many years, good news out of China has meant you buy basic resources and you buy luxury goods manufacturers in Europe because you predict better things for the housing market and the Chinese consumer will go out and buy more European luxury products. On the latter of those, is that still the case? We were having a conversation about whether the image of European luxury in China has changed because of geopolitical tensions. Would we expect this to be the same this time around?
I would expect that if Chinese consumers get more money to spend, they will go out and buy LVMH. They will go out and buy Gucci. They will go out and buy those products. They still hold a lot of cachet. Those companies are still spending a significant amount in terms of marketing. What has happened in terms of slowing growth in terms of luxury spending here in China is the property bust, the stock market being in the doldrums, people feeling poor, they're holding back on their spending. If what the government is doing now or a signal it's going to do, if that can resolve that situation, I would expect a return in spending.
We're going to leave it there. So you're going to continue to outperform in 2025. JP Morgan strategists think so. We say small caps, European small caps or US small caps? Because European small caps, much less so.
He's got a global view in his notes, but obviously it seems like there are different regional stories there, Critty.
Yeah, how much of it is a political trade? How much of it is a momentum trade or even an interest rate story from the ECB?
Well, it's just an economy trade, isn't it? The US economy has greater momentum. Small caps tend to do better when an economy is doing better. European economy not doing very well, therefore small caps underperforming. Is it as simple as that? And does that continue to put money into the United States? Anyway, we're going to find out next. Lovely sunrise this morning. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something. There's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young Black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Press markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. High-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade around 30 minutes into today's session. Seeing green on the screen across the European stock market. Perhaps paring back some of the gains we saw earlier. Remember, we did get those China headlines. It boosted a lot of the stocks. We're seeing a lot of it driven by France and the French luxury story as well, not to mention basic resources in the UK. Now maybe simmering down just a little bit, Anna.
Yeah, let's talk about the difference between small and larger businesses, shall we? JP Morgan strategists say that small and mid-cap stocks have the potential to deliver double-digit gains next year under a best-case scenario, although, quote, a lot can go wrong. Joining us now is their global head of small and mid-cap strategy, Eduardo Lecabari, obviously hoping that things don't go wrong. Eduardo, thank you very much for joining us. So your expectations then for small and mid-caps, you say that they will go on to outperform next year. Is this a Trump trade or does this predate the Trump trade?
So I think, Anna, Trump definitely is a catalyst for small mid-caps to continue to outperform. It's important to notice that it's already kind of happened in the last 12 months. So small mid-caps underperformed large in 22, in 23. But then November of 23 to here, they've stopped underperforming. And I think Trump can definitely mean a continued of strength, because what Trump does is basically he has ignited a preference for domestic versus international exposure, and small mid-caps are more domestic.
Okay, so sticking with the US, this is interesting because a lot of the conversations we have about US stocks has been around the big tech names, of course, the likes of NVIDIA and all of the other large Magnificent Seven, and a lot of the broadening out conversation then takes you to this small and mid-cap trade. So this has a lot further to run then. Under Trump, we see a lot more broadening out of US trade, you think?
I think so. So it's interesting because the last 3 years, I think the best way to describe it is what has happened is a temporary underperformance of small mid caps for reasons that are temporary, but that the investment community has chosen to read as a new reality, right? And so what you're looking at here is investors having put a lot of hopes on large caps becoming this better asset class in a way where now 150 of the S&P 500 companies are trading on a PE above 35 times. You have things like Walmart on a trailing PE of 44 times, right? And I think one has to question that. So from here on, I think what you're going to see is that the reasons that small mid caps have been penalized, i.e. in the last 2 years, they had weaker earnings growth. Those reasons that were completely temporary, it was, interest rates going higher in companies that have more floating debt and wage inflation being high in companies that are more labor intensive. All of that is behind us. And from here on, you're going to see the rewards of what you've always seen in the small mid caps, which is better growth, more thinly covered, M&A, everything else.
In the US, this kind of makes sense. The economy is doing great. So therefore, small caps, mid caps, maybe have a catch up. Here in Europe, the economy doesn't feel so great. So why should European small and mid caps catch up?
Well, you have to look at the nature of a SMID versus large. And there are a lot of reasons why historically they've done better than large cap in terms of returns. And those reasons are still true today. So these are smaller businesses earlier on in their stage of development, and therefore they produce higher growth, regardless of what the overall economy is doing. That was the case historically, it is the case today. These are businesses that sometimes get taken out. In Europe, 5% of all the small mid caps get taken out in M&A deals every year. The average premium is 30%. If you do the math, that's 1.5% of alpha versus large just from M&A, right? And then you have IPOs, like 99% of all IPOs, which is new businesses, new industry. So all those drivers of growth are still there.
But we haven't seen much M&A and we haven't seen many IPOs.
Well, that's an interesting concept because that is definitely a consensus view. But when you look at the numbers, it's not really true. Yes, IPO year was 2021, right? And if you look at M&A since 2010, it's been exactly the same year after year. It's been around 100 small mid caps in Europe taken out every year for about a decade.
Okay.
So this perception that IPOs are not happening is perception. And this perception that M&A is not happening is perception. In fact, this year, number of M&A deals are up versus last year. I think there's a very good chance to think that 2025 is going to see M&A, number of deals in M&A just shoot up for all kinds of reasons.
Isn't 2021's outperformance on that front just a function of capital markets being very, very closed in 2020? So it just kind of led to this excess of 2021? Isn't that kind of the reason for their outperformance? What was it?
So IPOs tend to go with the market, right? Yeah. So they peak when the market peaks and they come down after that and so on. 2021 was a peak of the market and it was a peak of IPOs, but not in any way that was different from what we saw, for example, in 2000. It's just that when you put it all in a long chart, you realize that globally, number of IPOs, small mid caps, they were bigger in 21 than in 2007 and in 2000. So and troughs along with the equity market, but they haven't gotten smaller, they've gotten bigger. So IPOs are happening.
Well, let's come back to where we started the conversation, which was on the fundamental caps. You mentioned that there might be a Trump trade about there as well, but don't small caps trade very closely to your biggest cap? Brings me to, is the small cap trade ultimately just a momentum trade as opposed to one is maybe driven by Fed cuts, Trump policy, et cetera?
So historically, you're right, Criti, SMID is a bit of a beta, right? So if the market goes up, they go up more. If the market comes down, they tend to come down a little bit more. What's interesting in terms of what we're living at this juncture is there has been 2 times when that hasn't happened, right? When large caps outperform on the way up. That was the tech bubble and the situation we're living in today. And in the tech bubble, when that bubble burst and the stock market came down, it wasn't small mid caps that underperformed. It was large caps that came down more. Yeah. What went up came down. And there is a very good chance that you see that here. So now small mid caps is not just a beta play, but you're sitting here in a situation that is completely abnormal, where it's a SMID caps that didn't benefit on the way up, and where the valuations, the fundamentals, the sentiment around it is all pointing to, I think, what is a 3-year story of outperformance from here on.
Eduardo, are there other geographies that we should be talking about when it comes to the small and mid cap story? I'm thinking we had a lot of news out of China this morning about stimulus in the Chinese economy. We've had a lot of news over the past week from South Korea and colleagues writing about how the Kosdaq is underperforming the Kospi, and that is perhaps a sign that people's expectations for the economy domestically are really weak. Are there other geographies that stand out to you as worth mentioning?
So, Anna, I think when you think about geographies in the world, and in line a bit with what Criti was saying, you have a situation today that is different in developed markets and emerging, right? In developed markets, you've seen SMID underperforming large over the last 3 years by an order of magnitude more than ever. So there is that kind of valuation story. And in emerging markets, that simply hasn't happened. And so there is, in one end, the underperformance and the value, and on the other end, what Criti was saying, this is a beta play to the economy. Where is the economy growing? Well, you have more than 2% real GDP growth in the US, and you have 0.8% in Europe, to give you an example, right? So the best case is where you find that underperformance and you find that economic growth, you have to look at the US, you have to look at Japan, and you have to be short Asia, and you have to be short Europe, I'm afraid.
Do you have to be short Europe even in the face of interest rate cuts that might accelerate out of the ECB?
It's a good point. You have to short Europe on a relative to basis. It is true that in Europe is going to benefit, or you should be benefiting from a real interest rate that has gone from 4 to 3.25, and let's see where it ends. But at the same time, the real economic, real GDP growth last year was 0.8, and our economics team expectations for this year is 0.8. So the growth isn't here yet. But Europe is a big part of the world, and there is Europe, and then there is Europe. So, for example, within Europe, there is the Nordics. And in the Nordics, your average small mid cap after 2 years of underperformance is offering a 7% average free cash flow yield, which looks quite interesting. So I think there is definitely opportunities. Also think about this, 40% of small mid caps across Europe, in the UK and in the continent, 40% are down more than 40% from the highs of 2022. There is tremendous opportunity at the stock level, right?
I'll leave it there. Really interesting. Eduardo, thank you very much indeed. Eduardo Lecobari, Global Head of Small and Mid-Cap Equity Strategy, joining us from JP Morgan. So Volkswagen and its labor unions are entering the fourth round of talks, basically to try and source out exactly what's going to happen next with the footprint that VW has, particularly in Germany. We've got lines coming out of Wolfsburg now from the workers talking about the fact that they are ready for more warning strikes. They're warning about more warning strikes, effectively, as we come towards this latest round of talks. How this ultimately gets resolved, are we going to move from warning strikes to more significant walkouts? We will wait and watch. But this discussion continues, and it's a struggle to get to some sort of solution at the moment. As I say, the fourth round of talks now between management and the union. We'll turn back to geopolitics next. Syria celebrating the fall of Bashar al-Assad. We're going to look at what the country's next chapter looks like, which regional powers stand to lose out as well. We're watching what is happening with Russia and Iran. Does Turkey come out as the winner in all of this? We'll discuss that next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big. 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes, I don't know why, but for some reason I love thinking about black swans, and at the office everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Welcome back to the opening trade. We're about 44 minutes, if you will, into today's session. Seeing green on the screen, perhaps not with as much force as we opened these markets, but you are certainly seeing a boost. A lot of this coming from the headlines out of China, this idea of stimulus perhaps boosting French assets at a time when we're still waiting for that political overhang, a little bit more clarity on who Emmanuel Macron is going to be choosing as his new prime minister, caretaker prime minister, if you will, certainly. But for now, green on the screen. Let's go back to our top story, though, and that, of course, coming out of the Middle East. Bashar al-Assad has landed in Moscow after Islamist-led forces led a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II. We're joined now by Bloomberg's Patrick Seitz, joining us this morning from Istanbul. Patrick, from your vantage point, walk us through how this is being interpreted in Turkey and in some of the kind of bordering states. How bad is this for the people of Syria?
I think many Syrians will be celebrating, obviously, the events over the weekend. Whether or not that means they can return to their homes and at what point they can do that, I think remains to be seen. That will depend on things like whether HTS, this main leading rebel group, lives up to the kind of message of tolerance that it's been preaching on the way to Damascus. There's also, individual security incidents like last night we saw in Damascus, explosions late overnight, showing that, while the takeover of power has happened in the heart of the state, that doesn't necessarily mean that clashes are over. So I think anxious optimism among Syrians, good news, but not the end of the story by any means.
Patrick, can I ask you about the rebels and the various factions within that? I mean, HTS gets a lot of the headlines. There's plenty of coverage of others, SDF, SNA, a host of other rebel groups. HTS likely to be in a position of power in Syria? There are others waiting in the wings, no doubt, to challenge them. I understand they've been united up to this point by their dislike of former President Assad, but now he's gone.
Yeah, that's right. I mean, I think the way in which they've come to power so quickly and the sort of military, diplomatic to an extent, prowess that they've shown on the way is definitely going to give them an upper hand in the sort of talks that go towards forming a new government in Syria. But you're very right, they're not the only ones on the scene. I think the other areas to watch will be the north of the country, because, HTS has taken over Damascus, but Assad, from whom they've taken over, wasn't in control of the whole country anyway. So in the north, you've got other Turkish-backed factions. You've got the US-backed Kurds as well. I think that those are going to be the other key groups. Both backed by in the region, and it's not clear how they're going to get on, cooperate with, or clash with even HTS from Damascus.
The Israelis have moved in to parts of Syria. We haven't seen this since the 70s, 73. What's the objective here? How worried will the Israelis be about new groups will mean and whether or not they take a more bellicose attitude towards Israel? Is that the fear here? And is that what maybe the Israelis are trying to preempt?
Yeah, I think it shows that they're obviously worried about a security threat from HTS. It's worth remembering, of course, in Al-Qaeda. I don't think there was a particular to Israel at this point, so I have to assume it's a sort of a precautionary measure, and it basically extends the presence that was already there from the 60s, when they occupied and annexed the Golan Heights. So I think it shows them extending that security buffer, and as we've seen elsewhere in the region, in Lebanon, for example. They're trying to build an environment at home where their own citizens feel safe, just as they've done in northern Israel, going into Lebanon to do that for their Israeli citizens in the north. I think they're doing the same here in the Golan.
Yeah, they're describing it as a limited and temporary step. Patrick, thank you very much indeed. Bloomberg's Patrick out of Istanbul. Let's talk about what this all means for Europe. Bloomberg's Ollie Crook joins us now from Brussels ahead of a meeting with EU finance ministers. Talk to me about the reaction thus far out of Europe when it comes to the fall of the Assad regime and what this ultimately means for Europe. The Syrian story has had a meaningful impact in Europe over the last few years as a result of migrant flows.
Absolutely, guys. So I think it's going to be sort of fundamental from that migration perspective. In terms of the sort of initial reaction from the leaders here across Europe, I think it has been more or less ubiquitous. It is fairly optimistic with an even larger dose of concern and also caution. We heard from Kaja Kallas, the sort of EU foreign envoy who just took over the job, will be there for about 5 years, saying that the end of Assad's dictatorship is a positive and long-awaited development. It also shows the weakness of Assad's backers, Russia and Iran. This is similar rhetoric to what we heard from Biden over the weekend. A lot of the sort of Western countries wanting to take some credit in some way for undermining basically Russia and Iran's position in their ability to support the Assad regime. But that sort of caution comes in the form that though this has been a relatively sort of tidy shift of power, a lot of this will come down to Abu Mohammed al-Jolani, the leader of HTS, who obviously is a former sort of al-Qaeda, but who gave a very interesting interview to CNN a couple of days before basically marching into Damascus, saying that what he wants to do is bring sort of institutional rule back to Syria, away from individual leaders. He talked about protecting minority groups and talked about a legal framework to preserve that. These are the sorts of things that many Western leaders will be very happy to hear, whether or not it is true and to what degree he is capable of doing this, given all the fractured cells, as you have just been discussing. The focus for the Europeans will certainly be migration. I mean, you don't have to look any further than Germany. The Syrian civil war started in 2011. AfD, Alternative for Deutschland, the far-right anti-immigration party, was founded in 2013. And then 2015, Merkel let in more than 1 million refugees. And now, fast forward 2024, 2025, AfD holds about a fifth of the vote, 20% of the vote. And the Syrian population is still the number 3 population of all of these sort of groups within Germany. So really still a protagonist. The other side of that coin, however, is if you do get stability ultimately back in Syria, could some people go back there? These are all the things that are in play and will be in front of ministers who will be sort of affecting or appraising the effect of what's going to happen over the next few months.
Ollie, there's conflicting views coming out of the United States. Joe Biden authorizing launch strikes within Syria. Donald Trump posting about the fact that the United States shouldn't be involved. What is the European take there? Is there a European take there that aligns with one or the other?
Yeah, I think the Europeans are very reticent to have any sort of active military role in many of the sort of conflicts in the Middle East. But as you say, Joe Biden, having the strikes of dozens of different Islamic State sort of groups within Syria. Obviously, Donald Trump giving a fairly contrasting view, saying that the United States should have nothing to do with it. This is not our fight, he says. Let it play out. Do not get involved on Truth Social. But of course, there are other dimensions and other sort of players here. The Israelis who have now, have sent troops in for the very first time, admittedly, fairly sort of limitedly. Turkey is on the border. And there's, of course, the question in the form of Iran and Russia. And here the Europeans really do have a stake in them not exerting their influence. So I think that for right now, they're just going to probably follow the United States. The question is, what is the United States position going to be? It seems like it's going to shift fairly quickly in the next 5 or 6 weeks.
All right. Thank you very much. Bloomberg's Oliver Crook, thanks for the update there. Let us focus in on what is ahead this week then. A quick look at the plan from here. We have plenty of events to focus on a Eurogroup finance ministers meeting, including Rachel Reeves. Ollie will be around to tell us more about that. Tuesday, we'll linger on this for a moment in just a second. Women, Money and Power, that's an inaugural event coming to you from Bloomberg, and we will be there live. On Wednesday, we'll have a host of data. We'll have US inflation data. The Chinese policy meeting takes place. And on Thursday, an ECB rate decision. Let us circle back to that Bloomberg Women, Money and Power event that takes place tomorrow here in London. And let's bring into the conversation Adeline Diab, Director of Research and Chief ESG Strategist at Bloomberg Intelligence, who has just released the BI, Women Capital Report, so Bloomberg Intelligence Women Capital Report ahead of the event. Adeline, very nice to have you with us as we look ahead to our coverage tomorrow. So importantly, in your research, what's the big picture story around diversity and employing more women in your workforce? Does that diversity pay off?
So yes, the good news is that it does pay off. So companies with a greater number of women on their board have delivered 2 to 5% higher annual return in developed markets in 2018, and 2 to 6% lower volatility in emerging markets, in markets that are by nature more volatile, so helping weather those. So this suggests that, diversity as a quality signal that can help reinforce investment decisions, but also board conversations.
Walk us through what that means or what that looks like regionally. Are you seeing a divergence between, say, the States and Europe?
So yes, the States have led the charge initially, but the EU has been more at the forefront for the past decade. In some countries, we see numbers exceeding 40%. And actually, we could see even parity in Europe by 2030. But the stark difference remain more in emerging markets, but also in some G7 countries such as Japan. But regulations and shareholder activism should drive progress. So for example, in Japan, there is a new target calling for 30% of executive female ratio by 2030. This suggests over 1,000 women director appointment opportunities over the coming 5 years. So this could be a game changer.
Do you think the Trump administration reverses some of the progress that's been made?
So there are risks there, obviously, and we have seen some companies start to retreat from their D&I programs, but many remains committed. And I would say, basically, whether you believe that diversity is a moral imperative or not, at the end of the day, the higher performance linked to higher diversity shows that it has a financial and business case. So this should bolster D&I programs.
All right. Adeline Diab, Director of Research and Chief ESG Strategist over at Bloomberg Intelligence, joining us around the table to walk us through, of course, this very crucial issue and the divergences, the progress that's being made, of course, what 2025 and beyond looks like. Tomorrow, of course, the opening trade will be live from Bloomberg's inaugural Women, Money, and Power event. We'll be speaking to Danielle Poli of Oaktree, Ann Walsh of Guggenheim, Joan Solitar of Blackstone, Ida Liu of Citi. And that's just a taste of the all-star guests that we have, and then, of course, the panelists at the event as well.
There's some fantastic panelists. We're just the starter.
Yeah, we're the opening act.
We're the opening act of this event, and then gets going throughout the rest of the day with some fantastic panels. So it's going to be really interesting to see exactly what their world looks like in a more Trump-driven environment. Mm-hmm. I suspect they're going to be talking more about their kind of the investment story and what they see in front of them. But at the fringes, does that change? Does the performance metric, therefore, you could argue, if the data are correct, change if we see Trump pushing back against this? Yeah, perhaps. And certainly that'll get some airtime, but a lot of it will be dedicated to just hearing what these experts in their field think about global credit markets, about private equity, around wealth management. So there'll be plenty of those conversations, not least in our program tomorrow. So we'll be joined by a host of, as you've been through, Kriti, a host of fantastic names, and highlighting some of the research that Bloomberg Intelligence has been doing on this front as well. And that, of course, is something we're going to be keeping an eye on for tomorrow. But then we've got the rest of the week to think about as well. We've got plenty of data around the world. Yeah. China. Is China less interesting midweek? Now, we've had all of this news already from China, or is there still more to come after Wednesday, Thursday? It feels like this is something to come later. It doesn't. This feels like a 25 story rather than a 24 story. These are our intentions. We'll see what exactly is delivered upon at the beginning of next year. But CPI is coming up out of the United States. That's going to be fascinating. How dovish does Lagarde sound? I think is going to be fascinating as well. What data are we going to get from the ECB? There's lots coming up this week, but it does still feel like a geopolitical narrative at the moment. Yeah, we're still on France watch. We're still going to see what Emmanuel Macron may or may not announce. On Friday, he promised that he would announce a caretaker prime minister next coming days. Of course, the fallout in the Middle East as well. In the meantime, markets in the green. We'll see if that sticks. That does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings.
Yeah, take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Content everything.
I'm here on the broader presidential race.
Let's be in politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings an important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside? And fighting completely stop. I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All for clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
The world on watch for more upheaval in the Middle East as the fall of Syria's Bashar al-Assad creates a power vacuum. Israel moves troops into Syrian territory while U.S. airstrikes hit ISIS targets. A boost for Chinese stocks as Beijing makes its first major shift in monetary stance in 14 years, also vowing more fiscal support. And South Korea's president is banned from overseas travel as a series of probes emerge against the embattled leader over his brief declaration of martial arts. Now, a little bit later in the show, also our exclusive conversation with Otomar's PBA Chief Executive, Ilaria Rest. I'm looking forward to that conversation, her first one on TV since she took charge. But there's a lot going on in the market, so let's take a look at the European markets map. I think there is a bit of a boost overall thanks to the China stimulus. A shift in China's monetary stance provided this welcome boost for the markets. Happy Monday morning. We've been waiting for a bit of encouraging news for a while. Again, it comes on a very big political week. Not only are we looking at France, South Korea, Syria, the Middle East, but we also have quite a lot of interest rate decision from major central banks around the world, including the ECB. You can see the CAC 40 actually leading the gains about 0.6% higher. I think luxury stocks on the back of that China news are getting a little bit of a lift. Now, this is the wider picture for some of the cross assets that we're looking at. US 10-year yield 4.1625, euro dollar 105.69, and then the big one that we're watching is, of course, any kind of implication of what China has done on the markets. So for the moment, we're seeing it across the board, but the China 8 shares gaining some 3.1%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, Bashar al-Assad has landed in Moscow after Islamist-led forces led to a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Now, Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
In a moment, we'll get market reaction from Sherry Paul, private wealth advisor at Morgan Stanley Private Wealth Management. But first, let's get more from Bloomberg's Sam Dagger and Ross Matheson, our EMEA news director. So thank you both for joining us. Sam, talk us through exactly what we've seen on the television sets over the last 72 hours. Who is now in charge of Syria?
Absolutely great to be with you. I mean, it's been really dramatic, absolutely dramatic for Syrians and non-Syrians who've been watching this. I mean, as you said on Saturday night, it seems like that's when Bashar al-Assad pretty much lost all hope that his overtures were going to go anywhere, because we reported, we had a Bloomberg exclusive that he had made these overtures to both the Biden administration and even President-elect Trump. But none of that went anywhere, so he is now in Moscow. And then shortly after, the rebels, led mainly by, as you said, the Islamist rebels, led by HTS, which used to be affiliated with Al-Qaeda, but has come out and said that it no longer has any links to Al-Qaeda and has gone out of its way to assure Syrians, but everybody's taking a wait-and-see attitude. So we had these incredible scenes of celebrations in Damascus. I spent 2 years in Damascus between 2012 and 14. I know this area. This is Umayyad Square right there. It's the main square. The state TV is right there. They took over the state TV building and announced the fall of Assad. Yes, we did see some chaos. We did see some looting. People entered the Assad family home. This was really incredible. This is the home where, the family has lived for half a century, where, Hafiz, Bashar's father, who, let's remember, took power in a coup in 1970 and built one of the most brutal regimes in the world, underpinned by this cult of personality and violence and repression. And so Syrians were coming to grips with that. But obviously a lot of questions, but at the same time, a lot of smart Syrians who are abroad people. We're talking about the opposition, because as you noted in the introduction. Yes, go ahead.
Yeah, no, look, you're an expert on this. You also wrote this very important book saying, Assad or we burn the country, one family's lust for power. So you understand, of course, in minutia, what Syria has been going through. The turning point here is also that Russia could not really get involved. So what does this mean for Russia and Iran losing power in the region?
Excellent. You could say Iran is for now completely out. Russia has been weakened, but it still maintains its air base in Latakia, which is on the west coast. It has this naval base in Tartus. Russia has had this base for decades. But I would say that Moscow now is going to work with Turkey. Turkey is the main player now on the ground, at least on the rebel side, right? So you're going to see the Russians and the Turks working a lot more closely. And now, obviously, Israel is now that Iran is out, Israel is asserting itself, in a big way, because it does have major concerns. It has concerns about who these people are. As you said, there's a vacuum about what's going to happen to a lot of the heavy weaponry and also chemical weapons, potentially. We don't know if there are any chemical weapons left, but this is a concern.
Sam, thank you so much for, of course, all of your insights. We'll continue keeping a very close eye on the story and go back to Sam Dagger for expert analysis. Now, let's also bring in Bloomberg's Ross Matheson, and then we'll talk markets with Sherry Paul. Ross, first, when you look at the wider implications, what does this mean for the Middle East, but also China? It feels like the world is being redrawn almost on a monthly basis.
Well, right, as Sam was just saying, you've got the chessboard in the region. You've got a lot of questions now about the role of Turkey, of Iran, of Russia, of others. Also the US, of course, with a change of administration coming there. I mean, Donald Trump was very interesting. He was out commenting on Syria well before the White House was, and he was making it very clear he didn't think it's something for the US to get involved in. In fact, he also wants Vladimir Putin focused more on Ukraine and getting towards a ceasefire and talks on Ukraine. So very much a clear message from Donald Trump yesterday. But you've also got China in all of this, because Xi Jinping, they've had a close relationship for some years. Assad's visited China, exports the most to Syria of anybody. They're a key partner for them economically. I mean, Syria doesn't export anything to China, but China has operations there in the oil sector as well. They want to be preserving their business interests there, their economic interests there. You can see from the Chinese today commentary very much this is a matter again for the Syrian people, hoping for a peaceful transfer of power, but very much they want to be securing their business interests at the same time.
Roz, we know that President Xi and President-elect Donald Trump have spoken on the phone. I mean, how's China getting prepared for tariffs? We saw this massive stimulus today. Will that be enough to counter it?
It was very interesting to see this announcement today. I mean, it partly reflects their concern about their own economy. They need to juice their own economy, and you've seen some steps in the housing sector and so on. It's not really driving demand, and what they're signaling with this language, changing language, for more than a decade, very much on the loosening side, also signaling very more proactive steps. And what that does, it cracks open the door perhaps for the NPC, the big meeting early next year, for them to bust the deficit rules. I mean, they're basically saying, paving the way to be able to blow through their own deficit rules. That gives them space to spend more. And that's about their own economy, but it's also about shielding the economy in the event of further tariffs from the US.
Rose, thank you so much. Let's also bring in Sherry Paul, a private wealth advisor at Morgan Stanley Private Wealth Management. Sherry, so good to speak to you. I'm not going to lie, the concern is that there's so much geopolitics that's not really filtering through the markets. I mean, how many changing world if it's not impacting asset classes?
Yeah, thank you. Well, look, the geopolitical environment sets the tone for the conditions in which we're investing. As a senior portfolio manager, my responsibility is to find the corridor of opportunity in all market conditions. And in this case, I'm really encouraging clients to have the awareness of the geopolitical situation, but the thematics that are enduring, that underpin growth and earnings is what will drive this market higher, which is why we're remaining very U.S.-centric in our investing right now. But that's the most important thing.
How much do you watch China? Again, today we had, the start of monetary stimulus, which actually the Chinese policymakers probably didn't want.
Well, look, it's hard to kind of have your cake and eat it too in China, in terms of if you want to have transparent and liquid markets, along with stimulus with a slowing economy. The bigger issue, I think, is whether or not there's a role for China right now in portfolios. And if anything, I think that that's more of a signal that the thematic that investors need to embrace is the reimagining of global world order and its impact on supply chains, and what that means in terms of who the winners and losers will be in terms of balance sheets that can support that reimagination, because it's expensive and that would weigh on earnings, which is also why we continue to favor the big cap space, because they've got the balance sheets to reimagine that.
I mean, Roz, over the weekend, it was pretty incredible looking at, the Notre Dame pictures with all the heads of state, Donald Trump showing up with Elon Musk. I mean, is he actually starting to talk policy on tariffs?
Well, Elon Musk or Donald Trump or both, possibly, on tariffs. It was interesting. Donald Trump has again last week raised the questions around tariffs on Canada and Mexico. The question is, what is he using that as a tactic for? Is it a tactic to get agreement? He's used migration and drugs on the one hand. He's saying you countries need to tackle these things or I'll put tariffs on you. So he's using it as a political tool, not, as a purely economic tool. Is he doing it now before he gets in office so that these countries will come and say, okay, we hear you, we'll do this on drugs or migration, and then Donald Trump can claim the win? But it does seem that he's very much attuned to the idea of just using tariffs at a moment's notice too, by the way. I mean, he could just wake up one morning and decide, today I feel like putting X tariffs on French brandy again or something, or steel in Europe. And that's the uncertainty that he keeps people going on, but very much using this as a political tool. He's shown that before he gets in office. The question is, does he actually enact it once he's in?
Yeah, and that's a $1 million question for the markets, Sherry. Are we going to get a lot of volatility when it comes to some of the emerging markets, or are we going to see big countries like China trying to preempt by making sure that their economy is more solid?
I think the answer is both, which is why we should all expect increased volatility going forward over the next year. I think as a solution set for slowing economies around the world, as this productivity enhancing cost reducing technology, it has an equal opportunity installation if business models are willing to take it on. It also deals with the politics of human labor around the globe. And so I think that we see this geopolitical conflict be the accelerant for the adoption of more AI-centric manufacturing, much like we saw, I think, the pandemic push people into what I was calling the remote of everything at that time. And I think that will allow the markets to continue to sort of defy what so many people rightfully would understand as a really difficult investing environment. The thematics are just too strong.
All right. So thank you both for joining us. Sherry Paul from Morgan Wealth Management stays with us. And thank you, as ever, to Ross Matheson. Now, a couple of other stories we're keeping an eye on. Omnicom reportedly in advanced talks to buy Interpublic in a deal that would create the world's largest advertising firm. Now, the Wall Street Journal says the all-stock transaction would value Interpublic at between $13 to $14 billion. Now, coming up, we'll have plenty more, of course, on the U.S. We'll also talk banks. UBS Chief Executive Sergio Armani says rising tariffs and global conflicts could increase risk in financial markets next year. We'll drill down to see exactly where risk could be. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
These geopolitical events haven't really triggered any more chain events and consequences also in financial markets. So that's positive. So I think that one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges.
Well, that was UBS Chief Executive Sergio Armani speaking to Bloomberg at the Abu Dhabi Finance Week. Now, still with us, Sherry Paul, Private Wealth Advisor at Morgan Stanley Private Wealth Management. Sherry, I have 1,000,001 questions, not only about U.S. I mean, this is clearly where the smart money is moving to, but valuations are probably stretched. Are they priced to perfection?
Well, not necessarily, because really, if you kind of break apart, the trick right now is to break apart the S&P 500, because if you take out the top 10 companies, the PE ratio of the market itself is around 19 times earnings. And frankly, if we're looking at price to earnings ratio, I'm really encouraging investors to add an additional letter, which is the I for innovation, which is the premium that investors should be willing to pay in this sort of not to this industrial revolution, which is why we're seeing tech outperforming communication services and other beneficiaries of the installation of AI.
But Sherry, does it have to be U.S. also because of Trump policies, meaning that there's going to be a lot more reshoring, or can you find opportunities elsewhere in the same industries?
Yeah, no, great question. Well, I think that right now the innovation drivers that are producing earnings continue to sit within the United States. And so so while, for example, here in Europe, I've always been an investor in our client portfolios to some degree in Europe, but my biggest concern, and I think all of our concern for geopolitical stability should be whether or not Europe actually goes into a recession, while the United States has soft landed and stays out of a recession. And if you couple that with a slowing China, then you have 2 out of 3 biggest contributors to global GDP going into recession. That could press things. But one point about that, though, is that just because we get into geopolitical conflict or slowing economies, money doesn't just disappear off the planet. It finds a new home. And so active rebalancing, both at the geography level, the market cap level, and then crucially at the sector level, will be the key to performance, particularly in the U.S. markets, because we've had winners and losers not all performing in an equal basis over the last few years in the bull market that we've been in.
But how much of that money is going to private markets? I mean, we've seen, if you look at the charts, it's actually incredible over the last 5 years.
Yeah, it is. Well, yeah, and I mean, I think that makes a lot of sense if you can access the private markets. But look at how much return we've been able to produce in the public markets with these incredible companies that are leading the way to a new way that a new industrial revolution in terms of how we will operate and how businesses are going to manufacture. It's huge.
Some of the things I know you're also watching for is policy swings, including deregulation, taxes. Again, deregulation, is there too much, I guess, of a Trump trade on the positive side that actually if you deregulate or even if you put tariffs, it comes back to bite you in terms of inflation back home?
Yeah. Thank you for asking that, because I really like to separate the two. So there's policy volatility and then there's earnings driven volatility, very different. So yes, we should see a premium in the market for policy driven, because the trade, it's a trade. Deregulation, are we going to, or are we not, versus earnings momentum in a company that's actually growing shareholder value. But obviously deregulation would benefit, small and mid caps and big caps in certain sectors in the US. But the tariffs, kind of like, are the backdrop of that, which would be fundamentally inflationary at a time when Americans in particular voted around their perception of inflation in the United States. So I think that would be very tricky.
Sure. You also like healthcare.
Yes. Yeah.
In the U.S. or globally?
Well, in the U.S. and right now it's actually one of the worst performing sectors year to date. I think it's up 9 to 10% against some of the other sectors. But I just remind investors too that in January of this year, financials, which I was overweighting at the time too in our portfolios, was also a worst performer until it had an accelerant. I think that will be the same in healthcare. Plus, you get a good dividend. It's a nice PE setup, and it's a good rotation out of tech to bring lower volatility and greater stability to client portfolios, is particularly for people who are looking for income and just don't have the stomach to tolerate the swings that we're having to endure to get to those returns in this market.
So interesting. Sherry, thank you so much for joining us today. Sherry Paul there, Morgan Stanley Private Wealth Management. She's also here for our Woman Money and Power Conference, which we'll tell you more about that shortly. Coming up, South Korea's president has been banned from traveling overseas, while multiple probes are underway into his declaration of martial law. We discuss that next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Just coming out right now.
We have
He is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, South Korea's Justice Ministry has banned President Yoon Suk-yeol from traveling overseas due to ongoing investigations into his brief declaration of martial law. Let's bring Bloomberg's Katya Dmitrieva for more. Katya, what does this signal about what may be to come?
Well, there's a lot happening behind the scenes right now, and this is probably one of the clearest signals, that the pressure is really growing on President Yoon and on his party to do something. And that something, according to protesters and according to the main opposition party, is to leave office. Right now, it's looking incredibly unstable, both the political situation, but also Yoon's own position in government. Currently, they're having discussions, and then behind the scenes, as I said earlier, there's a lot happening in terms of what the opposition party is planning and what Yoon's own party is planning. So Yoon's party yesterday said that for all intents and purposes right now, the president is not actually making decisions. It's the prime minister as well as the PPP, that's the ruling party, Yoon's party, is currently making decisions. But that's not really been enough so far for the Democratic opposition. They're looking to impeach Yoon, and they'll be holding a vote on that on Wednesday. But certainly things are rapidly developing up until, the next 48 hours and that crucial vote.
Katya, thank you. Katya Dmitrieva there on South Korea. Coming up, our exclusive conversation with the Audemars Piguet chief executive, Hilaria Resta, on the demand for Swiss luxury watches and her first year in the job. That's next, and this is Bloomberg.
case you missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix in London, and these are your top stories. The world is on watch for more upheaval in the Middle East as the fall of Syria's Bashar al-Assad creates a power vacuum. Now, Israel moves troops into Syrian territory while U.S. airstrikes hit ISIS targets. A boost for Chinese stocks as Beijing makes its first major shift in monetary stance in 14 years, also vowing more fiscal support. And South Korea's president is banned from overseas travel as a series of probes emerge against the embattled leader over his brief declaration of martial law. Now to a little bit of and Swiss watch exports are on track to post an overall decline this year for the first time since the pandemic disrupted sales in 2020. Now, the industry has boomed in between, but is now feeling the pressure of higher rates, probably a strong franc, and wars in Europe and the Middle East. Now, my next guest is the highest ranked woman in Swiss watches, I would say watches in general. Hilaria Resta became the new chief executive of Audemars Piguet earlier this year, following 2 decades of consumer goods giant Procter & Gamble. Now, analysts say her mission is to stabilize the brand and capitalize on its transformation from a watchmaker to a luxury house. Well, I'm delighted that Hilaria Resta joins me now. Thank you so much. Welcome to Bloomberg and welcome to London, Hilaria Resta. When you look at some of the challenges ahead, how's it going? You've been in charge for a year. There's things that you wanted to do. Are they at speed?
Yes, they are at speed. Of course, as soon as I joined, the market reality hit, which is in a way a blessing in disguise because it gave me the chance honestly to focus on the strategies and rethink about the growth opportunities moving forward and stabilize this business before continuing the growth.
Hilaria, when you look at your main market, one with a lot of question marks today, we have stimulus, the U.S., the biggest, of course, market for watches. How are those going?
We are very well balanced in terms of presence by market. We are not affected by the downward trend in China. We're actually well spread by country, by region. So we continue solid growth. We're very happy about what we put in place for the future. So far, we are not affected by the macroeconomic instability.
I mean, the waiting list, of course, for a watch is huge. Does it mean that as a customer now, I have a shorter list to get the watch I want?
We continue having high demand and we continue luckily